Good morning, Baltic Honeybadger. Is anyone in the room this morning? Yeah! Amazing. We have slightly below 100 people here in the room, and we have a couple of hundred watching us online. Did anyone have a problem with the cab this morning, by the way? No, just me. Okay. Because we had a lot of events happening yesterday night in Riga, here in Latvia, and this morning it was completely impossible to get a cab. Anyhow, here we are. I hope everyone enjoyed yesterday, the first day. Today is the second and final day of Baltic Honeybadger this year. I hope everyone had good chats, met some new faces, some old faces, went for some drinks, or just enjoyed a lovely sunset walk. Without further ado, I would like to welcome to the stage someone we already saw yesterday, Efrat Fenigson. She is one of the top voices in tech in Israel, and she's also leading her own podcast. Exactly. Let's welcome her to the stage. She will be talking about, it's an interesting topic. There is a game, musical chairs. Does anyone know this game, musical chairs? Probably one person. So it takes two. So it's me and you. So musical chairs of monetary order. Let's welcome Efrat with a round of applause.
Woohoo! Thank you. Thank you. Okay. Good morning. The musical chairs of the monetary order. Let's take a look at what they are doing. When it comes to changing a monetary order, things may look very civil on the outside. But don't be misled, behind the scenes, it looks more like this game of musical chairs. A bit more chaotic. Today we'll dive into the evolving global financial landscape, looking at how global agendas, nation-states, and financial institutions are piecing together a new monetary system under the banner of innovation, security, and climate action. The puzzle pieces are digital currencies, stable coins, CBDCs, and even Bitcoin, as well as carbon markets and digital ID. I'll attempt to map out the fast-changing chessboard and connect the dots between financial trends, political agendas, and the fight for economic freedom. A bit of background. 81 years ago, Bretton Woods agreements made the United States the world empire and the US dollar the world's reserve currency. It architected a blueprint for how the world would operate money for the next decades. Historically, every 80 to 110 years, we see a change in world empires. At the end of every cycle, we experience crises, emergencies, pandemics, and wars. It's the fourth turning. Will the US and the US dollar maintain their position in the next cycle? I do believe that's the intention as the world enters the truly digital age of money.
We have a breaking down of the monetary order. We are going to change the monetary order because we cannot spend the amounts of money, so we have that problem. We are having a profound change in our domestic order, how ruling is existing, and we're having profound changes in the world order. Such times are very much like the 1930s. I've studied history, and this repeats over and over again. So if you take tariffs, if you take debt, if you take the rising power challenging existing power, if you take those factors and look at the factors, those changes in the orders, the system, are very, very disruptive.
Ray Dalio. Dr. Pippa Malmgren tells us exactly what the plan is. This is from 2022. Whether implemented through CBDCs, stablecoins, etc., countries are racing to implement their digital financial systems.
What underpins a world order is always the financial system. My father was an advisor to Nixon when they came off the gold standard in 1971, and so I was brought up with a kind of inside view of how very important financial structure is to absolutely everything else. about to, and I'll say this boldly, we're about to abandon the traditional system of money and accounting and introduce a new one. And the new one, the new accounting, is what we call blockchain. It means digital. It means having an almost perfect record of every single transaction that happens in the economy, which will give us far greater clarity over what's going on. It also raises huge dangers in terms of the balance of powers between states and citizens. In my opinion, we're going to need a digital constitution of human rights if we're going to have digital money. But also, this new money will be sovereign in nature. Most people think of digital money as crypto and private. But what I see are superpowers introducing digital currency. The Chinese first. The U.S. is on the brink. I think moving in the same direction. Europeans have committed to that as well.
So the United Nations Agenda 2030, signed by 193 countries, lays out a global framework of 17 sustainable development goals. But beneath its soft language lies a collectivist architecture that centralizes power while reducing individual rights. The World Economic Forum envisions your digital ID in the center of your life, essential to accessing modern financial systems and tightly interwoven into today's monetary trends. If the state knows who you are and what you do with your money or with your finances, it allows you to function. The digital ID is a key pillar in Agenda 2030.
The UN estimates that 10 of the 17 sustainable development goals cannot connect without first closing the identity gap.
Regulators and financial institutions favor certain instruments over others these days, from tokenized assets and deposits to stablecoins, CBDCs, KYC Bitcoin, ETFs, strategic Bitcoin reserves. All are at play in various stages. Cash, non-KYC Bitcoin, that's less appealing to the state at this stage. So as long as you're identified and the relevant institution grants you permission, you're good to go. Essentially, we're at the buffet stage, the buffet of monetary instruments. Think of chefs as nation states and central banks, and they're experimenting with various dishes till they find the chef's favorite. Here are a few global trends that are accelerating this new monetary order. BRICS strengthening and de-dollarization, banks closures and debanking, rising debt and deficits, decline of cash and privacy, Bitcoin as a growing threat to state money, and of course, damn wars. CBDCs reflect the overtone window of financial control, with retail CBDC on the extreme dystopian end of this spectrum. They're favored by authoritarian regimes like Iraq, Nigeria, and Pakistan, who are banning Bitcoin while pushing for total cash elimination. But the West loves them too. So globally, over 130 countries, representing 98% of world's GDP, are now exploring CBDCs, and central banks are more eager than ever to roll them out, as this graph clearly shows. The good news is that we the people, pushback on retail CBDCs seems to be working in some countries, while wholesale CBDC is on the rise, with about 44 such pilots at play. Check out the Thailand Central Bank governor.
The hype was focused on the retail CBDC space. And a lot of that hype has not played out, because despite all the pilots, and we did them too, we were quite active in the CBD space for quite a while, and we did retail pilots. We have very good retail payments infrastructure already. So the additional benefit of having retail CBDC is not entirely clear. So I think that combination of not having a very clear use case, plus the concerns that people have, like on the privacy and whatnot, have caused a healthy skepticism about when we're likely if we're likely to see stuff happen in terms of a full production rollout of retail CBDC. Okay. That is different from wholesale CBDC. We at the Bank of Thailand, probably other central banks, think the same way, that the use case are much clearer, and also that the downsides and the risks of wholesale BDC are so much lower.
So, the central banker from Singapore will tell you how hard it is to reinvent the wheel and create the foundation of the new monetary system.
Very quickly, we came to the conclusion that it needed a horizontal foundational digital infrastructure to enable that interoperability across networks, across assets, and across currencies, because this represents, the most significant opportunity to reap the full benefits of asset tokenization. So on the one hand, there's the public blockchain, right? It has a global network, right, which is there.
Bitcoin.
But for accountability reasons, right, and governance reasons, you can't reasonably expect, regulated FIs to put high-value transactions through on a daily basis, right? Then on the other hand, FIs themselves come up with their private permissioned networks, but on a FI-specific basis, can't scale. So then we landed in between, which is what we call the public permissioned network, which is public blockchain equivalent infrastructure serving the regulated wholesale financial market space.
So, when central bankers reached that critical CBDC design phase, they realized they need a unified ledger and a settlement infrastructure, something Bitcoin has offered since day one. So 24 institutions launched a project called GL1, Global Layer 1, a long-term project to set standards for digital assets. Reinventing the wheel is hard and stupid, and Bitcoin has the front-runner advantage. The EU plans to launch the digital euro, the CBDC, starting October 2025, a 2-year step which costs 430 million euros, positioning it as a strategic defense against crypto and US stablecoins, which we'll get to soon. But it goes further. Under Rearm Europe, 800 billion euros will fund military expansion, and a new savings and investment union could redirect up to 10 trillion euros in private savings to strategic projects. Meanwhile, the ECB, the European Central Bank, is working on a distributed ledger connecting 48 central banks, so far not very successfully. And taxpayers' money is invested into more propaganda campaigns to keep people's trust in the ECB.
Do you want to know more about the digital euro? Let's find out more. Evelyn, in 20 seconds, can you answer our questions? Why do we need a digital euro?
Well, our currency needs to keep up with how we want to pay. So currently, more than half of the people prefer to pay digitally, and there is not one single European way to do so. The digital euro would fill that gap.
There is no way to do it. Right. China and the EU are strengthening financial ties, especially amid trade friction with the US. And China reports over 800 million CBDC wallets and 10 trillion yuan in transactions, thanks to a deep integration with popular consumer apps. As Klaus Schwab says, China is the blueprint. Hong Kong, South Korea, Israel, and India are following the EU's footsteps and are all working on their CBDCs. And among multiple countries, this is Latvia, by the way, I put some information to just show you that even in Latvia, they're working on their digital euros. Yeah, thanks, go up, thanks. And they're following the ECB plans for digital euro as well, but only 26% of citizens actually said that they intend to use it. Meanwhile, it's licensing crypto firms under MiCA and considering a strategic Bitcoin reserve, though at the moment it's not yet a law, it's just a declaration. Moving on to stablecoins. Thank you. Stablecoins are designed to hold a stable value pegged one-to-one to a reserve asset such as the US dollar. They're expanding fast as a bridge between crypto and traditional finance, with about 200 projects and $265 billion in market cap. Their use now exceeds $100 billion in daily volume. JP Morgan coin alone moves $2 billion daily. The momentum is clear. Major banks, payment platforms, and even retailers are exploring issuance. Their market is projected to reach $2 trillion by 2028. Trump's administration understands that stablecoins can be a key to unlock the next level of the game, the digitalization of the monetary system. The recently approved US Genius Act reclassifies stablecoins as a Treasury-regulated asset class. They must be backed one-to-one with liquid assets, audited monthly, and comply with strict AML/CFT rules. No interest is allowed, and only approved issuers can participate. These aren't securities or commodities. They're national financial infrastructure under the Bank Secrecy Act. When big tech or payment giants issue or integrate stablecoins at scale, KYC and reporting will be scaled as well.
Today marks a seminal moment for digital assets and global dollar dominance, with President Trump signing the Genius Act into law.
It's delayed, sorry.
This bill provides the fast-growing stablecoin market with the regulatory clarity it needs to grow into a trillion-dollar industry. Stablecoins represent a revolution in digital finance. The dollar now has an internet-native payment rail that is fast, frictionless, and free of middlemen. This groundbreaking technology will buttress the dollar's status as a global reserve currency, expand access to the dollar economy for billions across the globe, and lead to a surge in demand for US treasuries, which back stablecoins.
Sorry about the lagging, but stablecoins offer financial stability in struggling economies while extending US influence by bypassing local governments. They expand the dollar's reach, which is what Besant was saying here, but also state-level surveillance. For Bitcoin adoption, they build rails, and Bitcoin doesn't really care. But on privacy, they're fiat in digital form. Bitcoin remains the only alternative. Thailand, Cambodia, Hong Kong, to name a few, are all experimenting with stablecoins. So are the UAE, Australia, and even the EU. All right, moving on to Bitcoin, where the game theory is starting to play out. Trump's executive order from January bans CBDCs while greenlighting stablecoins and becoming crypto-friendly. And the latest digital asset reports sets a clear policy shift. Bitcoin is named separately from crypto. The white paper is referenced, and Satoshi is mentioned directly. Bitcoin is now framed as the foundational layer of the digital asset ecosystem.
From this day on, America will follow the rule that every Bitcoin knows very well: never sell your Bitcoin.
Never sell your Bitcoin. On top of that, SEC Chair Paul Atkins says he's in favor of self-custody. New Hampshire, Texas, and Arizona have already passed laws to create strategic Bitcoin reserves. Another 13 states have introduced similar bills. Senator Cynthia Lummis has proposed acquiring 1 million Bitcoin over 5 years. It hasn't been approved yet. Also, Missouri is progressing to abolish capital gains tax. A new wave of institutional buying creates 99 public entities holding Bitcoin treasury. This is in the US only. Globally, it's about 290 worldwide, and this number changes every day, grows every day. And more Americans now hold Bitcoin than gold. This is definitely a trend. Some good politicians, yes, there is such a thing, are trying to push through Bitcoin in other countries, and it's not that easy. Russia is in the Bitcoin race too, mining, regulating, trying to control as much as possible the thing that is very hard to control. El Salvador, under IMF pressure rolled back Bitcoin's legal tender status in January 2025. Now it's optional, but obviously El Salvador is in the game. It's joined by Pakistan, Thailand, Taiwan, all starting to introduce Bitcoin. Also, South Korea and Bhutan now accepts tourist payments in Bitcoin, as well as mining and operating a strategic reserve. Lastly, let's look at another piece of the puzzle, carbon markets, driven by climate agenda. They could be an important piece in the new monetary order. Remember Agenda 2030 and its goals? Climate plays a big role in this agenda. It affects all other sustainable development goals, including the new monetary order. It has become a justification to shape economic behavior, from restricting emissions to influencing monetary decisions. It now anchors major financial policy shifts.
Climate change is still on top of the global agenda. From decarbonizing to nature-based solutions, from building a circular economy to developing nature credits, the Paris Agreement continues to be the best hope for all humanity.
Best hope. Ursula thinks Paris agreements are critical. Trump seems to think otherwise, pulling the US out of the Paris agreements. French President Macron recently called for a public financial shock to fight global warming, revealing how environmental goals are being used to justify a global financial reset. How can climate be used to gain greater control and produce more fiat? Here's a product that luckily was taken off the market about 4 years ago.
Launching Do Black, the world's first credit card with a carbon limit. Simply put, it's the first credit card ever to stop you from overspending. Not based on your available funds, but rather on the levels of CO2 emissions caused by your consumption. Do Black helps you track your climate impact and ensures that you reduce it by 50% in line with the UN 2030 recommendation.
They're just here to help you. You can't do this yourself, so measuring personal carbon footprint can also be a way to control and monetize.
Where are they traveling? How are they traveling? What are they eating? What are they consuming on the planet?
Carbon markets are booming as states monetize nature, creating new revenue streams under the guise of sustainability. But in reality, fiat incentives often empower bureaucrats to profit from resource control, not protect it.
Today, carbon pricing, ETSs, carbon taxes already cover about 25% of global emissions, right? We should actually look at scaling this, right, to cover all 100% of carbon emissions. And beyond carbon, let's think about other aspects of nature that are easier to quantify. We probably will not be able to quantify everything on day one, but what about water?
Water?
Right, that's also quite possible for us to start integrating systematically into current trading carbon pricing mechanisms.
Right, water. Psychotic. I don't think the climate agenda will prevail. It's unsustainable and goes against life itself. But dismantling it will take time. Okay, I hope this gives you a glimpse into the puzzle. Every country will navigate its own path through this transition, and the road will be very bumpy. But Bitcoin, resilient, decentralized, and censorship-resistant, offers the most mature technology and best store of value asset, followed by its medium of exchange capabilities, creating the clearest path for self-sovereignty and financial freedom in this emerging monetary order. We have a few more years of this ahead of us till things settle down, and hopefully we'll see Bitcoin emerge as the new reserve asset in the new monetary order of the 21st century. While they play musical chairs, you get on the ark. Thank you.
Wow, thank you so much. This was a very thorough kind of overview historically, what has happened and where we are. And gosh, that made me really thoughtful, this carbon card. I'm appreciating the life which I'm able to live at the moment without such limits. But I guess that's why we're here, to get a bit thoughtful and inspired. So let's continue with the next panel. It's called VCs. Short, brief, and concise. So with this, I will welcome a couple of gentlemen to the panel. Firstly, Adam Gebner. He's associate at a company called EgoDeath. Later on, I would love to ask you, how did you come up with this name of the company? Furthermore, Alex Mann, partner at Time Chain and Concentric VC. Then Oleg Mikhalsky, partner at Fulgur Venture. I'm just going to name all of you guys. Mike Jarmuz, investor co-founder at Lightning Ventures. Then Alan Farington, writer and investor in Bitcoin ecosystem, how he calls himself at the X. And Jack Lee, founding partner at HCM Capital. I'm not sure who's leading the panel, just come and take over. And please, let's give a round of applause for 6 gentlemen on the stage. Woo!
All right, let's have some fun. It's early, and we're talking about venture capital. I think they're just leaving Basement Bar right now. But this is the part of the agenda, the Token VC panel, where we have an opportunity to discuss investing in the futures of Bitcoin and the founders, the builders. And it's a very important aspect of Bitcoin's future, is the venture capital landscape and getting funded. And man, there's a lot of money on this stage right now. I can feel it. I mean, up here, it's really, they'll definitely take some more money from you. And maybe they'll give you some money, too, if you're building and all that good stuff. And we're going to have some fun. So there's quite a few people on this stage. We're not going to eat up too much time with chit-chat, but let's go ahead and do some quick intros. So my name is Mike Jarmuz. My company is Lightning Ventures, and we are the world's largest Bitcoin-focused angel investing network, wow, where you can get started investing in Bitcoin startups for low minimums, like $1,000. You can get started with angel investing and funding these companies. This is not donations. These are real investing. That's primarily what I'm focused on. We have a very small fund, not like these big champions up here. So we do deploy out of that as well. And I recently launched Thunder Funder, which is a regulated equity crowdfunding portal that allows almost anyone to invest in Bitcoin and open source companies. So moving right along, Adam, the new man on the block at EgoDeath, go ahead and give us an intro.
Hey everybody, good morning. Really happy to be here. My name's Adam Gebner. Thanks, man. New associate at EgoDeath Capital. You probably recognize Preston from yesterday, Lynn Alden, Jeff Booth, Andy Pitt, Nico Lechuga. Excellent team. We just closed or finished raising $100 million in our second fund, focused Bitcoin only, builders only, very high signal. So that's a quick introduction.
Is this on? Yeah. Alan Farington, co-founder, general partner at Axiom. I'll maybe just leave it at that because we're all going to say the same things about what we do.
Yeah, I'm Oleg. I'm with Fulgur Ventures. We actually work with other VCs to support founders from early stage to growth stages.
Alex from Time Chain, Bitcoin venture fund based out of New York.
Jack Lee, founding managing partner of HCM Capital. We've been continue to explore in this Bitcoin space for early stage investment and also other new way of participation.
All right, so first off, let's take the temperature of the Bitcoin VC landscape and where it is right now. We all have portfolio companies in common that we've all invested in, sometimes together in the same round. So we all have something in common in that. And we've deployed during really hot markets when valuations are high, interest rates were near zero, and everything was very hot. And then through this really dry period that we had with all the crypto blow-ups and actually the worst IPO market that we've had on record. But just a quick little take on where we're at now as far as raising funds, raising from LPs, and the general state of the market, open to anyone. Where are we at? The price is all-time highs. Everything is exciting. You would think it would be the same with venture capital. What do you think?
I can start with just a high-level comment around general venture capital first, and then these guys can take Bitcoin venture. So I think general venture capital is in quite a bit of trouble because there's kind of a lack of ideas, really. If you think about venture capitalists investing in platforms, a lot of the low-hanging fruit associated with those platforms has kind of been exhausted. So mobile, cloud, a lot of the applications that, for your phone or infrastructure for cloud computing has kind of been exhausted, which is why venture funds are investing in the 8th iteration of payroll software in Poland or something, So there's kind of like a deficit of ideas in general venture capital. The new platforms that hold some promise, one would be, maybe defense, but venture capital has a bit of an aversion to hardware, so that's a bit of a problem. There's crypto. That's, the hundreds of billions have been deployed in crypto over the last few years, and they don't really have much to show for it. And so stablecoins is one sort of productive avenue of venture capital investment. And then, as you mentioned, venture capitalists have been investing in a zero interest rate environment, so they've paid over the odds for a lot of this technology, which has basically gone nowhere. So general venture capital has a lot of problems. Bitcoin venture capital, though, I think there's loads of green shoots, and I'll let these guys sort of talk about that.
Okay, let me comment from a different aspect. For the modern day venture capital, I think started about, the modern those players about almost 25, 30 years ago. That was at the age of internet. Beginning. So we've been through internet and mobile internet, and recently AI. Those are very, very, very hot area to put money in. However, I think the Bitcoin venture capital, something different is that because instead of internet, mobile internet, or AI, Bitcoin is the money. It's the money. So it's a little bit different way to deal with in the VC way. So. And also because of money, because that will involve with a lot of regulation and compliance issue. So that's why we see, I think the Bitcoin venture capital area is a little bit, we have to use a very different way to look at this whole business. However, because this recent 2 years, especially this year under Trump administration, it's all the tailwind coming. So I think more and more, I think the venture capital can get more and more funding, and also under this kind of regulation clarity environment, I believe the coming few years will be very booming in the Bitcoin ecosystem related VC and investment environment. So I'm very bullish on this.
Anyone else? So let's go 1 to 10. Alan, where's the Bitcoin VC landscape in terms of 10 being bullish, YOLO, shut up and take all my money, and 0 being where my exits, brah?
Okay, that's a good scale. Yeah, it's definitely not 10. It's higher though, I guess, than it's the highest it's been since my involvement in the space. A quick caveat on why, though. I think this is important to understand that the vast, I don't mean to speak for others here, but I suspect that this is a pretty typical experience, that our ultimate clients as venture capitalists are occasionally you get a kind of a high net worth Bitcoiner here and there, but for the most part, they're institutions. And as we all scale up, they'll have to get more and more institutional. And you just have to keep in mind that these people are, or maybe not the individuals, more the institutions themselves have very, very little time to think about Bitcoin. So they're not going to be here, right? They're not going to be like watching panels on Lightning and Arc and whatever. They will have a kind of a snapshot view that is formed by things that in the politest possible way I don't really care about. I highly doubt people on the stage care about. And so yes, the mood is good. I'll give like a 6 or a 7, let's say, on your 10-point scale. But in my experience from the past, say, year or so, that's primarily driven by ETFs, strategic reserves, and probably now Genius Act as well, which is, I don't really care about any of these things, but it's a tricky balance because I'll take it, right? If it means that they're more interested in the proposition than before, if it means they're actually going to come to the table and have a real conversation about Bitcoin and not just dismiss it all as nonsense, that's good. But you got to be a little skeptical as to why.
So, Ego Death just closed. The press release was out, a $100 million fund. $100 million, that's a lot of cake. You know what I'm saying? And just like Bitcoin has grown up, Bitcoin venture capital is also growing up. I think you have probably half of the Bitcoin-focused venture capitalists right here in this room with you. But, the thing to remember is pretty much raising money sucks. Nobody likes to do it. Maybe Svetsky. But no, the people up here, when you think of a venture capitalist, you think of somebody who always is deploying, right, and writing the checks. But just like the founders and builders out there that are raising, we too have to raise. So there's a barometer of how loose the market is and how willing LPs are to come in. So, when you think about Oleg has been investing the longest since probably 2018 or 2019 as far as a Bitcoin focus goes. The exits, right? Because you go back, we all deployed some of our fund ones around 2021, 22 and beyond. That was a bit of a tough time. And now it comes for fund 2. And we got to go back to those LPs and raise a little bit more. And when you haven't had a lot of exits, right, when you haven't had an opportunity to distribute capital back to your investors, it creates a bit of a cycle. And we haven't seen too many exits yet in the Bitcoin world. So I wanted to touch on exits, if anyone's had them in their portfolios, if any are on the horizon, if there's any whispers of M&A activity or creative sort of transactions, maybe to go public in certain ways. What's going on in the exit land? Bro, dude, where's my exits? Oleg, you've been investing the longest. Have there been many exits, or are you hopeful that they are on the horizon?
I mean, we've been always investing with like a long time preference. But what you're saying and what Jack actually said makes me think that there is sort of like a gap. There's in traditional venture capital, there is a gap of ideas and capital misallocations. And there is also like sort of gap of like liquidity maybe in the Bitcoin space, because there is no recycling of capital, because neither venture capitalists themselves nor the founders are focused on liquidity. They're just like focused on building for the long term. Preston Pish said a couple of days ago on another occasion, quoting Jeff Bezos, that margin is opportunity. So I guess like the gap is our opportunity, but I'm mindful about how we can actually scale, because like you're seeing like the same 10 people in every panel. Like, didn't you get bored of like hearing from us? There's no more people coming in, and since there are like no exits, there is no also recycling of founders. So still kind of like everybody is like doing the same job, but with ETFs and with Bitcoin treasury companies, there's like a huge inflow of capital, institutional capital, into the Bitcoin space. So for this capital not to get stuck in the treasury companies and just like sit passively in ETF like paper Bitcoin vehicles, it needs to use Bitcoin technology to actually turn this like incoming Bitcoin and fiat into more Bitcoin and more productive use of Bitcoin. But how we can do this if we only have like a few founders and a few venture capitalists, and it's all kind of like relationship business. So I think it's just gonna be hard to scale for us. But yeah, we'll see. I think scaling venture capital in the Bitcoin space is probably going to be a problem because it's relationship based. It's complex topic. You have to navigate geopolitics, regulations. Yeah, I don't know. Just made me think.
I can comment a little bit on this. I think luckily because I found this HCM capital is actually over 10 years. So our first fund investment indeed is a single LP backed by a big technology company. So luckily in 2016 to 20 before COVID, at that time indeed there's not many Bitcoin company. I think it's very few. Even let's say Coinbase of course a 100 billion company now. It beginning with exchange, Bitcoin, but then adding Ethereum and crypto, So, that indeed, I mean, if you talk about exit for now, there's no pure Bitcoin in long enough history. Yeah, even for example, we also invest in on-chain capital in late 2020, 2021. Then the company started just born in 2018 or 19. So, so what I'm commenting is that why there's no really already successful exit for a pure Bitcoin company. However, the second point I want to mention is that from my experience, very luckily, our fund didn't invest early day. We didn't invest in those ICO, those shitty coin. Luckily, we invest in some financial service company for doing crypto. So for example, I mean, this year, just about 3 months ago, one of our major portfolio company called Galaxy Digital, based in New York, listed in Nasdaq. So we still holding the, I think, quite significant share of that company. So indeed, we can sell the share every day now. But of course, we see the tailwind here. I mean, instead of dumping the share for good profit, however, we keep holding it because we know the tailwind is still coming. So anyway, and also several other portfolio company also we invest in 2017, 2019, also this kind of similar. They involved with some crypto, but of course the Bitcoin as well. For example, Galaxy is a top 10 Bitcoin holder in the world now, more than almost 12,000, something like that. So what I'm trying to say is that from experience, we got to hold long enough, and also when regulation clarity coming, then I think this good investment, I mean investing in a good founder can make money. But maybe not in the next few years, but maybe in the 6 to 10 years or even longer. That's what I'm saying. Yeah.
Can I give an unhelpfully ideological answer? Just
unhealthy.
Stir the pot a little bit. Exit is a very fiat concept. It ties actually
liquidity event.
Yeah. And I mean, obviously, I get there's mechanical constraints on funds have limited lives and LPs have certain expectations around how they're going to recycle the capital and so on. So it's not to say that, there shouldn't ever be an exit and everyone should remain illiquid forever. But as a meme, it's very much tied to what Alex mentioned a few minutes ago in terms of mainstream venture capital like Silicon Valley, if you want to use that as a metonym, kind of running out of ideas in that it comes from an era of basically progressively lowering interest rates and pumping out new money such that there will always be another buyer, and people didn't really need to think that hard about what they were actually investing in because they knew they could always dump it. And it should be pretty obvious. I mean, Oleg touched on this too, that with a more Bitcoin-centric mindset, you probably wouldn't be thinking that way anyway, kind of regardless of the context of VC. But then also back to Alex's point that era is now over anyway, right? It's in a Bitcoin agnostic context, just in wider VC and wider financial markets, you can't push the interest rates any lower than zero and things are getting tight again. So again, it's not to say, maybe I'll roll it back a little bit, that exits as a fact aren't fiat, but the meme of that approach to investing very much is.
Yeah, just I think that's right. There's this idea that Silicon Valley venture funds have pushed, which is that you have to quickly mark up your books every 12 to 18 months, and dump the stock on someone else at some sort of outrageous multiple. And that's not really the game that we play in Bitcoin Venture. We're trying to build sustainable Bitcoin businesses that grow and are profitable in Bitcoin terms. And a lot of the companies in the portfolio already are, which is, I come from a generalist venture background, and we have 19 companies in time chain. I think 5 or 6 are profitable, and we've been investing from pre-seed and seed mostly. That is unheard of in venture capital generally. So we do try to build businesses in a slightly different way from typical venture capital. That said, to answer your question directly, I think you can expect, hopefully, a spate of exits over the next 6 to 12 months, and that will come from a few different sources. One will be the Bitcoin treasury companies, potentially, because you have these Bitcoin treasury companies all over the world. In the US, I don't know how many you have now, but 6 or 7, where the business model is just, offer different types of Bitcoin security to put Bitcoin on your balance sheet. They're going to have to differentiate somehow, and they might look to acquire the tech stacks of some of the companies that we've been funding over the last, 5 to 6 years. So I think that might be a source of liquidity or exits for the Bitcoin venture funds on stage, and that'll be quite useful, I think, for the space in general.
We went 19 minutes before somebody said treasury. I think that's a record for this conference.
So for the record, there's been one pure play Bitcoin IPO. I think their lockup's up soon. That was Fold. And just in our portfolio, we just had our first Lightning Ventures exit. Yay! So I have to take the other side on this because liquidity is important. And if you invested in something in 2020, you might want to ring the register. And it's important to get back a multiple. And what we normally talk about up here, which we're not talking about today, is why would you invest in a Bitcoin privately a company versus buying Bitcoin itself, right? Because the returns are outsized. Okay, so we're not going to talk about that, but I heard somebody say Bitcoin treasuries. I haven't heard anyone talk about Bitcoin treasuries lately. But so do you think that the Bitcoin treasury land are you guys investing in that through your funds? And do your LPs, have they expressed any interest in that? Do they want exposure to that? Do they not? And I'll start with Plan B, Oleg. How are they participating, or do they have the willingness from the Tether side of things to invest in some of these pipes and private deals and Bitcoin treasury plays?
Bitcoin treasury play appears to be a very interesting way of marketing Bitcoin and explaining the properties of Bitcoin to institutional capital and to large capital allocators. Michael Saylor was and is an absolute genius of kind of creating this. There are two camps. Some people hate Saylor, and some people think that he's doing really interesting things. But in fact, what he's doing is he's promoting Bitcoin adoption in a much bigger size of market, which is capital markets. And the property that he's selling is like there is a lot of allocators to debt. And most of the debt is actually very bad because it's poor yield and a very poor collateral. So the allocators that have to allocate to debt, they actually suffer because they have very bad products. And he came up with a very good product. And that good product also results in massive accumulation of Bitcoin. But this Bitcoin is sitting passively. So what is the next step that he is actually not doing, but what Alex think maybe says that there should be the next step, that Bitcoin technology companies would actually enable productive use of this Bitcoin that is being allocated to by large capital allocators. And we're talking about like dozens of trillions of dollars. So I think that's, I guess, like, correct me if I'm wrong, that's the size of the debt markets. And they just don't have other ways to allocate to Bitcoin than through this kind of convertible instruments and public equity. But in the end, it will create the pool demand for technology that enables utility of Bitcoin, and which is all the startups that and companies that we are building. So I guess that's the good side of the Bitcoin treasury companies. The bad side is, like, there are also apparently some speculators who are just gonna flip and play on volatility, and that also happens, but that's not what we're focused on.
So you've not participated in these private pipes and things on behalf of, you're not investing in those. You're investing heavily in startups, in the builders, but these sort of pre-IPO treasury things that we're seeing right now, just you're not investing in those right now.
We do follow them closely, and we have like a few ideas running by, like watching closely LBG. This is like a regulated space, so I'm kind of like, don't put me on the spot.
No.
I don't know what you can talk about and what you cannot talk about when you're talking about public companies. But there's LBG, and there's also like H100 that we really admire, and there are a few other things that we follow very, very closely. But I think where it will come to, it will actually start working with the Bitcoin startups and will provide them more capital and more opportunity. I think what we need to be prepared for is we need founders that are gonna be turning this into profitable Bitcoin technology enabled companies. So there's a new market that's being created. There's a lot of Bitcoin for grabs, but we just need more startups that are able to put this Bitcoin to productive use, either through Bitcoin collateralized loans or through other instruments that will enable productive use of Bitcoin. And starting first of all, like with custody. So this is a huge opportunity to decentralize custody and make custody more competitive market. We discussed it a couple of days ago. So everybody in the US is custodying with Coinbase, pretty much everybody. It's not a great idea, but H100, LBG, any other Bitcoin treasury company, they can custody with some other like custodian that will have to be up to the standard of being able to serve a public company that has a lot of controls on compliance and risk and is responsible for public shareholder capital. So that's going to bring Bitcoin startups to another standard if they're able to serve public companies and making use of their Bitcoin.
Yeah, this day there's many, even some founder approach me, say, hey, were you interested in investing in our company to become a Bitcoin treasury company in some stock market, something like that? But indeed, I like to comment on this. Is, you know, if we really understand the definition or the VC venture capital, when people like us, or maybe like Oleg, more experienced one, you know, indeed the definition of a GP is to help, you know, it's kind of mentor, bring in not only the funding, which from the LP, but also from the managerial capability to give kind of mentoring, coaching to the startup, to the entrepreneur, the younger entrepreneur. They have a good idea, good technology. So I think this is what the VC for. So VC is not for, you know, investing in a listed company to get profit from the MNAV, that kind of a multiple increase, that kind of thing. So I think that's a misunderstanding of the definition of the VC. So therefore, I don't think VC should put their LP money into the Bitcoin treasury company area. However, we look at from other aspects. Some of my even early stage portfolio company, I think the founder, they are smart. They put the fund they raised, like say from last year, 2 years ago, for the working put aside the working capital, the remaining funding they raised, instead of putting in the bank, but they put in Bitcoin. So indeed, the value increase. So that's a smart move. So combining this both, I think in the future, the the company who, instead of holding fiat, holding euro, holding dollar, they can hold on Bitcoin as their treasury. Even a small company, let's say, those funding, they won't need to use it in the next 6 months. So, I think this will be a good strategy. And combined with these 2 points, I think in the longer run, the pure Bitcoin play, yeah, we understand. Bitcoin treasury company could be the biggest arbitrage in this century for capital market. This is not what I'm saying. This is Adam Best saying. Anyway, just kidding. Yeah. So therefore, I think that's why so many opportunity, so many funding from TradFi world come into the Bitcoin treasury play by buying their equity or fixed income. Okay. So in the future, I think pure Bitcoin treasury play won't work. I mean, just holding the Bitcoin. So it still need to combine with the operation business, which is maybe what we mentioned, the most directed related is a Bitcoin company with a good technology, with a good other operation business. I think that's what I'm seeing for the future.
All right, we're almost out of time here. Let's do closing thoughts all the way around, maybe 30 seconds or so. And what Jack was saying is that basically you should not invest in Bitcoin treasury companies. No, just kidding. But every Bitcoin startup is kind of a Bitcoin treasury company. And we've been investing in these forever because I can't name a Bitcoin company that doesn't have Bitcoin on their balance sheet, right? So it's an indirect byproduct there. So closing thoughts, what do you want to say?
Let's see. Well, yeah, so I think on the treasury note, there's definitely an opportunity for people to launch a differentiated treasury company, but at Ego Death, that doesn't necessarily fall within the thesis of our fund. We're primarily focused on builders, and we're seeing a lot of builders coming into the space still, and that's exciting to see, so that's a good signal that Bitcoin is still attracting new voices, new people. Whether or not they're building within the ethos yet, that's a different story.
Yeah, my closing thought is I'm kind of irked by the terminology of treasury companies. I realize that there's no hope of reclaiming this now, but exactly as you say, every single company we've ever invested in has a Bitcoin treasury. They just also happen to have a real business attached to it. So I guess, I don't know if there are founders in the crowd, don't get too distracted by this other than that key component. Have a real business, save in Bitcoin. This fad will go away.
Yeah, I think the bottleneck is we need more Bitcoin entrepreneurs because, as Jack said, VCs need to help. There's only a handful of VCs. There's more opportunity in Bitcoin, more treasuries sitting passively on Bitcoin. We just need more Bitcoin entrepreneurs, people who understand how to build a profitable company engaging in the Bitcoin industry.
I'm going to sound derivative now because these guys said it quite well, but yeah, the job of VCs is to push the technological frontier. And unless a Bitcoin treasury company, a listed one, does that, then it's not really a focus for what we do up here. But we do need founders to do that, really. So I would encourage everybody here to think about starting a Bitcoin business, and some combination of the people on the stage will hopefully fund it.
Okay. Yeah, I think my conclusion is that everything, even either Bitcoin, but yes, definitely Bitcoin founder need to do more technology, do more development thing, real business, instead of just doing the pure Bitcoin treasury play. However, putting Bitcoin in treasury is a good thing. And I think all in all the things lead the way for Bitcoin standard, lead the way for the Bitcoin monetary revolution. So it's a good thing.
All right. Well, if you're building and you have questions about funding your startup, find and bug any of us. And if you're looking for someone to give all your money to, most of us will take it gladly. Thanks for listening.
All right. When you got to the stage, you said you feel money. It feels like a lot of money. Let's see. Let's see. Yeah, it does feel like a lot of money just left the stage, but here I am and here we are. Interesting. I see that it's more people here right now than it was when we started. So I hope you had fun yesterday. Anyhow, the time has come for a more intimate conversation, a fireside chat. This one is going to be about Bitcoin's arc. We have 3 gentlemen coming to the stage. One we already saw yesterday. I guess all of them we saw yesterday. But Stephan Livera was on the stage already. He is, just to remind you, he is running his own podcast, visiting us from Dubai, has been involved in some banking before, but here we are now. The next one is going to be Kukks. He's a CTO at ArcLabs. By the way, he's calling himself on X the evil scientist. I found that very funny. And Stephen Roose, he's CEO at Second, and he calls himself on X libertarian socialist Bitcoiner. Enjoy the chat.
Thank you very much. Okay, so we're going to be talking about ARC. I know there's it's not going to be like an antagonistic panel, but it's just going to be more like let's hear your perspectives on, L2s and what's being enabled by ARC, and self-custody and these kinds of things. So I guess just for people to understand, there's different forms of ARC, so just kind of take a minute each and just kind of explain a bit of your vision of ARC and what you see it achieving for Bitcoin users. Do you want to start?
I can start, yeah. I think ARC is very exciting. It's been Lightning. Lightning has been our focus for Bitcoin payments for many years, and Lightning works very well. But we've noticed many pains on the user experience, mostly for end users. So I think ARC is one of the most exciting things that's happening in the Bitcoin space. I think it's going to drive the UX for Bitcoin payments forward by a big leap. And I guess as you hear from both of us, it's gonna happen soon, and I think we're all gonna benefit a lot. Yeah.
Yeah. So at ArcLabs we are building Arcade, basically an operating system for Bitcoin, powered by the Arc concepts and primitives that we've been working on and researching for a while. I would say our direction is more around a general purpose Bitcoin scripts layer. We want to execute not just payments. That's a subset of a purpose of what we deliver, but also doing general contracts. So, for example, escrow, plenty of other things too.
Yeah. Okay, so let's get into some of these things. I think. So if I think through. Okay, let me put it this way. What are some uses that you would say are being done now, either in an inefficient way or maybe in a custodial way, that could be done with ARC? So maybe, actually, Stephen, probably good for you to expand on. I think your team put out some work, some research on, let's say you're stacking sats and you want to withdraw from the exchange, and I think people have spoken about in the past that Lightning was inefficient for this, or that it just maybe it wasn't exactly the right fit for this, because a lot of the, let's say, the DCA stacker use case, it didn't really make sense for them unless they were earning and spending, and many of them were not, they're just stacking. So I think you did some research, or your team. Can you expand a bit?
Yeah. So one of the properties of Lightning is that you need to have channels, right? And a channel has a certain capacity. So depending on your payment patterns, these channels will be a good fit or will be a bad fit. And there's specific patterns where people are only sending out or only receiving. For example, DCAers, they're only receiving, and Lightning really doesn't fit that box, because you always need to increase your own capacity, your incoming capacity, which comes with on-chain costs. So yeah, that's, like I said, that's one of the areas where I think ARC is a very good fit, because exchanges or DCA providers can simply make a single on-chain payment and deliver hundreds or thousands of off-chain payments to their users, and the users don't need to have inbound capacity. They can just keep receiving these things passively without any on-chain costs, or at least on-chain costs are shared among all the users in the ARC, right? And so,
sorry, just on that, I don't know if you know the exact numbers, but I think you were trying to comment on the cost efficiency of doing that. Maybe you could elaborate on that.
What exactly do you mean?
As in, it was more efficient to do it this way than to let's say, pay out every user on chain, especially for smaller amounts?
Yeah. So most DCA providers, I think, right now work on chain, right? So you send a certain amount every month, and the provider gives you an on-chain payment every month. So you pay a fee that is more than €1 or more than €2 every month, just to receive your whatever amount of money you want for that month. So with ARC, you can flatten that out. So the DCA provider can pay a single on-chain fee, and everyone in their like service can receive their payment for that month. With Lightning, it's a little bit more tricky to calculate because, for example, you do 100 a month, right? You get a channel with 500 capacity for 5 months. You can get kind of a free off-chain payment. But then when your capacity is full or like run out, then you need to make another on-chain payment just for yourself to increase your inbound capacity.
And then it means you're hitting the chain so many more times. You're now paying on-chain fees way more, so it's just not as efficient. Kukks, do you want to expand from your perspective? Do you have a similar concept there, or you're thinking of it in a different way?
I would say that in general, like we've seen most on-chain use cases kind of slowly diminishing away and being kind of converted into like non-Bitcoin services, or actually there's still Bitcoin-related services, but they've been kind of moved into like a TradFi situation where they're just running on a centralized server somewhere with custodian-based solutions. And I think we can actually bring it all back to Bitcoin. At least one big thing that Arc enables is being able to do all the Bitcoin script use cases again off-chain for instant feedback, and basically low cost effectiveness. We can basically reconnect the payment use case to it as well. Lightning is something that most people have been trying to integrate, and for the most part works on a corporate level. Like if you're a business, you can run it on a server and hire people to manage it for you. But I do see it as kind of very hard for a consumer to actually operate. And through Arcade and through swap providers such as Bolts that we have a partnership with, we can offer the same experience as a custodian without being custodians.
And so I guess what you're getting at there is the user can interact in Bitcoin without having to think about all these kind of complicated things. The idea is to kind of put all that complicated stuff in the background, and the user just has his app and he can just receive. And on the front, and let's say he wants to take a payment, the person paying him might see a Lightning invoice, right? Because the other side can see a Lightning invoice. He's paying Lightning, and then in the background, it's being flipped into like an ARC, like using like bolts.exchange and so on. It's being flipped into like an ARC VTXO that the user is holding in his Arcade app. Is that broadly what's happening?
I mean, yeah, pretty much. I would say that in the back end, it's going to be an Arcade, basically VTXOs in your wallet. And with VTXOs, you've got Bitcoin scripts, the same Bitcoin primitives that you have on Bitcoin, which enables all the things that existing Bitcoin and Lightning wallets do, which is HTLCs, for example. If you can do HTLCs, you can do Lightning interoperability natively. And that's one thing that swap providers offer. So Lightning interoperability comes basically for free, no crazy magic that needs to happen on top of Arcade.
When you talk about hiding the complexity from the user, I think Lightning wallets also do that, right? So Lightning wallets will not talk about like channels and stuff as much, but at some point you hit some limit. Like if you want to receive a €500 payment, you don't have the inbound capacity. The app needs to show you something, and it's going to say like you cannot receive this. We first need to do something, and then you can receive it, right? So with Arc, you also have a lot of stuff that the user needs to do, but they can happen in the background because they can happen asynchronously. They don't have to happen when you suddenly receive a payment that's too large. Like for example, in Arc, you have to refresh your VTXOs periodically, but your app can just wake up and do it in the background. It doesn't have to tell you. Like it's not like you want to make or receive a payment, and suddenly it says, "Oh, we first need to go and do this kind of stuff." So I think it's better at hiding the technological parts or the technical parts from the user than when you're hitting channel capacity in Lightning.
And speaking of cost, I think this is the other thing. So people might be familiar that the Arc server or the coordinator may have some cost that they're paying. Can you guys elaborate a bit on your perspectives there? What does that look like, and how does that get presented to the user, or is it kind of like, you know, the user is just using his app, the end user, and then maybe the app user, the app developer, maybe he's taking a cut somewhere, and then the Arc server is taking a small cut somewhere for the refreshing. Can you explain your concept there?
Yeah, sure. So from our perspective, we're focusing on doing a fee structure, a very dynamic fee structure on the settlement phase, meaning when you're creating a new batch with new VTXOs or swapping your old VTXOs for a new one, we'll have a fee structure there in terms of based on demand, based on a dynamic policy, whether you want to accelerate getting the batch faster, whether you want to pay less and wait for somebody else to sponsor it for you. And that's basically the ARC operator's responsibility to figure out. But then on the developer side of things, they can build any kind of fee structure they want. They can offer services on top and collect money that way. We also have a new delegator system which allows a synchronous refresh of the VTXOs, which you can charge as a wallet provider. The sky's the limit. Where Bitcoin script is kind of re-enabled here. So yeah.
Yeah, I think like the cost that you have as a service provider or as a server, you're gonna have to recoup it somehow, but you can pretty well, like, people are using your service making payments, right? So they're used to paying a fee for that. I think one of the difficulties we might have with ARC, like Kukks is also saying, we also have a cost when the user is like refreshing or swapping their VTXOs into new ones. And right now users are not really used to like paying fees when they're not making payments, right? So we have like a tricky balance to play there. Are we gonna charge for payments which are actually mostly free for the server? Or are we gonna charge a fee for refreshes which are costly for the server, but then the user has this like
because he's not used to that, right? If
yeah.
we're thinking in TradFi, it's like, oh, I've got my PayPal balance or I've got my bank account balance. He's not used to thinking, oh, I need to pay a certain amount every month as like a channel lease or an ARC refresh cost. So I think that's what you're getting at there, this tension of like, how do you actually structure it? So what's your kind of thinking there on how to structure that cost?
Yeah, we're doing research into like what exists in the space, what are the usual things that people are used to paying. We're also thinking now about subscription models potentially, but they come with like all the kinds of other technical challenges. We have a lot of freedom, so we can just start playing. Like we're gonna like implement like they're gonna do like a very dynamic fee structure where we can tweak the knobs and say maybe users like this more, maybe users like this more. From our perspective, payments are free, but refreshes are very costly. But maybe we can like charge a fee on the payment and then like subsidize some
and
of the
just make enough on the payments that you don't have to charge the
I think it's going to be getting a lot of user feedback, like what they like, what they don't like, and yeah, so you can go from there.
I mean, just thinking out loud, I mean, my guess is most users today are used to a transactional fee, or, I mean, think about like fiat no coiners. What are they doing? They're taking out their credit card and they're tapping. And actually the cost is like, let's say they're buying a coffee, the cafe guy is the one paying the fee. Yeah. So that's the current model. The cost is built in on the merchant side.
It's kind of, if you do it on the receiving side, where you do all the ARC transactions for free, and the receiver is just receiving VTXOs, you have to settle them at some point. So that's actually like you settle at the end of the day of a high volume transaction day. And that's exactly the flow you're describing. I would prefer to not have fees on every transaction that happens inside the ARC because it adds friction. It adds kind of like, oh, what happened here? Why is my, I sent 1,000 sats, now it's a bit less. And you have to kind of account for that. And the mental model gets kind of shaky, I would say, to the end user. So being able to just have an unbounded transaction flow and then at the end, based on user decision themselves, be able to just decide, okay, I've made enough money, I feel comfortable to do this, let me just do it before the expiry.
Now, one area I want to touch on is kind of the competitive aspect between the different L2s out there, right? Now, of course, let 1,000 flowers bloom. I want as many people to use Bitcoin as possible, right? But we've got, there's Lightning, there's Liquid, and I know you used to work with Liquid and Blockstream. So there's Lightning, there's Liquid, there's ARC, there's different forms of ARC, there's RGB, there's Spark now. So can you guys just spell out where do you see the advantages of using an ARC style compared to these other L2s that exist?
I think it's very important to first make a big distinction around self-custody, right? So things like Spark have like a different trust model than ARC. So like ARC is in the box of Lightning where you're like fully self-custodial and where like you have a strong focus, and it comes of course with technical challenges as well. But then you have things where you go a little bit further where you have things like Spark, and personally I would put the sidechains a little bit in that bucket as well. Definitely liquid, but also the new BitVM style sidechains where there's a little bit more trust involved, or sometimes a lot more trust involved. So yeah,
because they have like a one of n honesty assumption in the BitVM rollup style. Yeah.
Yeah, and so if there's users who really value their self-custody, especially if it's around larger amounts and stuff like that, I think Arc will definitely have a very big use case there. Maybe some users who just want to like play around with like small euros when they're doing a game or something like that. Maybe those more custodial solutions will have a bigger market. But I think the market for purely self-custodial Bitcoin is big enough, and I think Arc will be the leading player there.
So you view it like, we're going to make self-custody UX so much better that more people are actually going to do it compared to today, where sadly, a lot of users are using custodial. And as I said, look, people start how they start. Sometimes they start with custodial, sometimes they start with other things. But I guess the journey, we want to get more people using self-custodial, right? How do you see this competition between the L2s, Kukks?
I feel like we're in a very unique position at this point, as Arc and Arcade technologies are kind of brand new, and we have like kind of like the ability to do scripting and off-chain execution and even interoperability with Lightning. That's great. I think the UTXO model that we have, just because we're based on Bitcoin, is superior to any of the EVM solutions that are popping out, simply because we can parallelize execution of contracts. We don't have to have a global state. We can express our flows in a much more deterministic manner. And with Arcade, especially, we actually have built an extension to being able to execute additional opcodes and be able to compete on an expressive level. The trust model is very unique, I would say. There is nuance, of course. Being able to do transactions inside the Arc does follow a state chain trust assumption, but we have the killer feature of being able to jump out of that trust assumption at the user's discretion at any time and point of their ownership of VTXOs. And I think that allows you to switch from a state chain trust assumption to a Bitcoin finality level of trust.
Excellent. Okay, so we've got a couple minutes left for the last question or topic. I would like you guys to, for the people in the audience or people watching the stream or the recording later, make your pitch. Why should a developer or a builder today, who might otherwise have just used a custodial thing, think about using Arc? So make your pitch.
Yeah, I think if you're using self-custodial Lightning, you're gonna have a bigger market of people that want to use it. Like, there's people who just don't want to give their money to a custodial, especially if they're talking about lots of money, especially if they're talking about jurisdictions that, for example, are contrary to where the custodial is. There's things that for example, if you're in certain countries, you just cannot be a custodial with certain custodials that are requiring KYC, for example, stuff like that. So like at Second, we're building an Arc platform called Bark, and it's just what we're focusing on is just making it as easy as possible for anyone to just develop an app, use the SDKs to be able to make Lightning payments, Arc payments, on-chain payments as well, and just making it seamless, like not bugging our integrators or our users with things like channels, things like capacities. The integrators, so the people building the wallets and the apps, can take care of almost anything, like when the user is going to refresh, when the user is going to do all its like maintenance, and then the user will just see like a wallet that works seamlessly.
Yeah, I feel like we've hit a point in time where the UX with self-custodial Bitcoin wallets with Arcade is basically just as smooth as a custodial wallet, and you avoid the regulatory burden, the headaches that come with that, and the trust assumptions that your users have to make to actually use your services. We're at a point where we can actually offer almost most services, at least that custodians are offering, without the same trust, basically, consequence.
Yeah, so I think it's fascinating to see that we've seen this advancement in L2s. Like for a long time, it was kind of Lightning only was the true L2, and now we've got Arc. Hopefully, we'll see exchanges start using Arc for payouts, or even just custodial. Like so many apps and websites, even today, are just kind of a custodial thing. Whether it's, I don't know, like a poker website or whatever, or even like Nostr stuff. there's a lot of these uses where right now the default is just kind of, custodial, because that's just easy, quote unquote. But to the point you guys are making, maybe from a regulatory standpoint, it's easier. Maybe it feels slick now. So I think it behooves builders and developers to actually think about this now and be like, hey, actually, Arc is an option.
It was very hard to start integrating with as a Bitcoin wallet nowadays, because Lightning is very complex. Anybody that wanted to just show you a balance on the app had to do a whole amount of work to get a Lightning node working, in the true cypherpunk way. Now we can offer that at least. That's why everyone started doing a balance where you deposit to and you have a custodial balance, and that's how you function. Because nobody could invest a year of work building just this part of their application. They have things to do. They have a business to run.
All right, well, I think that's all we've got time for. So Stephen Roose from Second and Kukks from ArcLabs Arcade. Thank you.
Thank you.
All right. I wanted to do a quick research for my own purposes. Who is in Latvia for the first time? Can you raise your hand? Lovely, welcome. Also, I noticed yesterday that it's a very friendly conference here. Child-friendly and dog-friendly. There was a little boy in the speaker's lounge running around talking to everyone. He's Italian, as far as I know, but he was talking to everyone in Italian and handing flowers to girls. And now I'm seeing a dog just calmly sleeping on a lap. That's really cute. Enough with that. Stage is rebuilt, and I would love to welcome to the stage our next speaker, Maxim Orlovsky. He's a computer and neuroscientist. He's going to talk about RGB, and he says it's alive. I know RGB as color scheme, because actually I studied arts. However, I work in tech. Who knows, these things happen in life. And you called yourself on the X as post-humanist. I believe it's someone who believes or thinks a lot about what happens after human beings.
Well, or what humans may become.
What humans might become, okay.
When they will stop being human.
Jesus Christ. Okay, and anyhow, on LinkedIn, it sounds a bit more positive from my perspective. You're enabling vertical progress. Very interesting. With this, please welcome him to the stage.
Thank you.
Come on over, Maxim.
Thank you. But today I wouldn't be talking about posthumanism. I will be talking about just RGB, which is a tool of building it. A little joke, actually. It's much longer way from RGB to transhumanism and posthumanism. But anyway, let's switch back to the Bitcoin topic. So RGB, maybe some of you already heard about it for years. And RGB is a client-side validated smart contract system built on top of Bitcoin and Lightning. And by saying that, we mean by client-side validation a pure peer-to-peer network without any involvement of miners. By saying that it's smart contracts, we mean a full universal programmability, which is sometimes called Turing complete. By saying that it is scalable, we mean that it operates on top of all existing Bitcoin scalability technologies, including Lightning and Arc. But additionally to that, it adds its own scalability, and I will be explaining later, as well as enhances the privacy. So, what is blockchain? Let's start with that. To understand what RGB is, we need to start with the blockchain. And what blockchain is that everybody needs to download all the data about all other transactions in the world and validate all of that transactions. Everybody does everything for everybody else. That's how blockchain as a ledger works. And quite obviously that blockchain actually strangles Bitcoin. And this is idea with which Giacomo Zucco, who is quite famous philosopher and also stand-up artist in Bitcoin space, he started promoting this understanding a long time ago. And I fully agree, because if everybody does everything for all the rest of the world, it simply doesn't scale. And obviously, it's not private, because you need to share data with everybody else so they validate. And that's how chain analysis has emerged. And that's how actually that decentralized system in terms of computer science has become centralized system in terms of information access and availability. And what actually can be done in order to get out of these restraints? Well, there is a Peter Todd who is also present on this conference. In 2016, he came with ideas of client-side validation and single-use seals. Of course, as always, there is on the back Adam back, if you notice. And these are powerful ideas with which we started building RGB. And unlike blockchain, the client-side validation is the system where you validate and download only the data you need, which are related to your own transactions and your own business and your own history of operations. You don't care about whatever the other part of the world are doing and other players in the world are doing, as well as they don't care and don't have access to your data. And that's obviously does a lot of positive stuff by itself. Well, first of all, we remove the data from the blockchain. There is no garbage on blockchain anymore. You don't need it to store the data. You also can do a lot of programmability without any soft forks required on blockchain, because you don't need to validate and verify that on blockchain. And finally, it breaks chain analysis and it adds natural privacy, where the data are not anymore centralized. So that's a huge thing, this idea of client-side validation coming from Peter Todd. And of course, the first thing, Giacomo Zucca is a famous actor fighting with the shitcoins everywhere, including Ethereum. The first thing he did is said that finally we can do shitcoins on Lightning with that. Well, and after that, Stephen Seidl came and said, no, let's do something better. We can do so much more with the client-side validation and RGB. And he was able to postpone the coming of shitcoins to Lightning for 6 years of research and development work. And today I'm representing him on this stage. And yeah, it was quite a long way. We built many things. It was much harder than we thought originally, because client-side validation is a completely new paradigm where you have to rebuild everything you already had in blockchain basically from scratch, including virtual machines, including ZK stuff, which we added just the last year. But anyway, the main thing is that finally we were able, but through all these years of research, we were able to build a very large community of people, and probably one of the largest Bitcoin free and open source projects, with a lot of code being written, with a lot of companies joining and contributing. And as a side effect, we even had to create a new Lightning implementation, LNP node, as well as a new Bitcoin wallet library, which works with RGB, but it can be used purely for Bitcoin. And a new stuff in computer science, a new virtual machine, and even new programming language. So that's the path we have came through. And we are very satisfied with the result, because like all existing programmability approaches to Bitcoin during these years, they were focusing on, we need an opcode, we need a soft fork, we need that opcode or that opcode, and it like all of them are quite ugly, and they have all trade-offs, and the most important, it is not sure how much time it would take to add the opcode to Bitcoin, what security risks are, because there is a lot of debate on that matter, as well as basically, it seems that it's never gonna happen, because there is no consensus which can be reached about any of those opcodes. And now we have RGB, and with RGB you have programmability without any requirements for any soft fork whatsoever. So, finally, RGB is live. We released the version recommended for mainnet assets and smart contracts on the 10th of July this year. and it was a huge step after the 6 years of development. And we are glad that already in some companies who are building on top of RGB, they acquired above 200,000 of users who used this new released version. So we also getting an adoption and momentum with that. With this release, few other things happens. We update the RGB website, rgb.tech. It will go live next week with a new version, with a new documentation, with the new guidelines and more modern design. As well as we have completed and published last month a yellow paper, which is a formal specification, mathematical. Well, it's not for humans, it's more like for mathematical proof assistant, which can use it to do a formal verification of the system, proving mathematically that the protocol is safe and secure. And this formal specification is quite important because very few protocols have it, and basically the mathematical description of all the protocol. And there was a huge reception of the yellow paper, so probably it was more like than several hundred thousands of use of this paper, as well as the fact that we have established, together with the release, RGB consortium, which is an industrial consortium uniting companies building on top of RGB, integrating RGB with a completely free membership. So anybody who wants to build with RGB can join and get support and help from us. It is important to know that RGB being developed for 6 years, one of the reasons for that was the fact that with the client-side validation, you don't have much options to upgrade. When you release, you basically have to release the ossified version. It's much even harder than with blockchain. So instead of usual governance for projects and protocols being focused on evolution of the protocol, the main goal of RGB consortium is to stop and make sure that the protocol got ossified and not changed. So if we have some demands, for instance, from regulators to remove some privacy features, they can't be fulfilled technically because you need to reach agreement across many, many parties, and basically there is no way back from the functionality that we have today. It's the first goal of this consortium, after the goal of helping people to use and integrate RGB. As well, of course, outside the protocol and consensus layer of RGB, there are a lot of things which can be built and which will certainly evolve, like standard libraries, like developer tool chains, programming languages, compilers, and all the user-facing software. And that part, which will be for sure evolving, and the consortium will be leading this evolution through the analysis of the market and the proposals by the member companies. The actual RGB development happening for 6 years was guided by LNPBP Standards Association, which I have founded with Giacomo Zucco back in 2019. And with the creation of consortium, it passes everything related to RGB to the consortium, becoming LNPBP Labs. It wouldn't be working on RGB anymore. It will be doing the parts which is already had developed during the work on RGB, like Bitcoin, wallet libraries, and Bitcoin node libraries, and Lightning node implementation. So that was a huge happening this summer, all this news from the release and through the yellow paper and RGB consortium. And this was expected by Giacomo. He already predicted that the RGB will unlock a lot of new types of scam on Bitcoin, unfortunately, as any new technology does. And we have started seeing this happening. For instance, there is already a fork of RGB, which is trying to pretend to be a real RGB protocol. Well, unfortunately, they don't tick any of the marks, so it's easy to distinguish which RGB of a healthy man and which one RGB of a smoker. And also there is imposters happening, like multiple organizations appearing, pretending to govern RGB protocol or provide grants to RGB developers. The funniest part, one of them even wrote to me asking money for participating and joining this organization, this one. And the funny part that there are already imposters on the imposters. So kind of it's just going uncontrolled in different directions. But it's quite easy to distinguish by the interest from the market to these organizations that they are basically a fake things which doesn't have anything to do with RGB, its development, and just asking people for money. So we have RGB, we have scam on RGB. Do we have products on RGB? Well, fortunately, there is a lot of stuff which were built in parallel with RGB development, and these things will also be coming to life. First of all, we have LNUSDT, which is a bridged USDT to RGB network. So it can be used for the payments over the Lightning network already in a while. Basically, legal structure and the asset is already being issued, and we are working with exchanges so people can start using it. As well as that, there is a huge project we start with UZ, which is Lugano University, with the economics department, who is looking into automatic market making research for years. They're a professor who works in, who is a part of Austrian School of Economics, and he found a way how efficient automatic market making with a more efficient curves than used in Ethereum can be built. And together, we are working on creating the first decentralized exchange, which will work on Lightning, and not just Lightning, but a new type of Lightning involving multi-peer channels, which doesn't have the inbound liquidity problem, basically based on this research about the nucleus. This work will take some time, but we hope that this year we will already see the first decentralized Lightning multi-peer channel-based automatic market-making exchange. There is other companies like ColorShift who brings liquidity to RGB and helps to bridge RGB, ERC20 and other forms of tokens and liquidity from other networks into RGB itself. There is also a company which I represent, the for-profit part of my work, Pandora Prime, which creates a set of products, consumer-facing products, so people can start using RGB in a simple and easy way. Probably the most user-facing product is the wallet, which allows you to try and use RGB assets. It's in the internal beta testing, and we will be releasing it to live this September, as well as a new cloud service called Ray Cloud. And the purpose of Ray Cloud to allow other wallet developers and other people who would like to use RGB in their products, including exchanges or wallets, to use a cloud infrastructure, but at the same time private and simple to integrate. It's basically a REST API, which is you send the requests without losing anything of your privacy, and it's also non-custodial because all the private keys are kept on the client side, and they just sign the transactions prepared by the service, and of course verify the transactions prepared by the service. There are several privacy layers, so you can even have your full infrastructure, including Bitcoin node, run in the private virtual instance. So it's much more advanced than what you can get with Infura. Finally, there is a system called MyCitadel. It's another wallet, and if Ray Wallet is the wallet for simple payments on the go with a mobile, the MyCitadel is a very advanced multi-sig wallet which can help you manage multiple accounts across many companies. For instance, if you are issuer of the assets, it's something that you need, or if you are an entrepreneur and you're on the board of several companies or startups, you will be able to participate and fund management of all these multi-sig wallets. And the most important is the first multi-sig that comes with RGB support, where you can manage your assets on top of Bitcoin itself without the need to connect to any other chains or platforms. So, to conclude, what we would like to people to understand about RGB, that RGB has come to Bitcoin in order to allow Bitcoin not to change ever. Because all other products which we had before, they all require Bitcoin to change. They all ask Bitcoin for some soft forks. RGB is the product which removes this requirement, and now you can move the programmability into client-side validation. You can have a privacy on the client-side part, and this allows Bitcoin not to change ever, as well as it has a promise of releasing Bitcoin from the blockchain strangles. Thank you very much.
Thank you so much. I see that we are a little bit ahead of time, which is unheard of. Just so you guys know, after this panel, there's going to be a coffee break as soon as we finish here, and then we will welcome you back to the main stage at 12:35. Without further ado, I would like to announce our next panel, Second Layers. We have Roy Sheinfeld, who is going to moderate the panel. I'm kind of pulling my time here to see if everyone is arriving. He's the CEO of a company called Breeze. He's also visiting us from Tel Aviv. Correct. And then your panelists, Stephen Roose, the same libertarian socialist Bitcoiner, which we saw previously. Kukks, CTO of ArcLabs, or the evil scientist. And Tobias Seidl, co-founder of Stoker, I hope I pronounce it correctly, as well as NiftyNei, or simply Lisa, who's, as I saw on the X, she's a runner, a host, a teacher, and also a founder of a company called Base 58. I'll then leave the stage to you guys. Enjoy the chat.
Thank you so much. Hi everyone, welcome to our panel on Second Layers. Maybe we'll start from introductions. You guys want to share what you're working on currently?
Yeah, I'm Stephen Roose. I'm CEO at a company called Second, and we're building an ARC implementation called Bark.
Hi, I'm Andrew Kukks. I'm CTO of ArcLabs, and we're building another ARC implementation called Arcade.
Hi, I'm Tobias Seidl. I'm co-CEO and co-founder of Stoker. Stoker is an investment platform, and we tokenize securities on Liquid.
Hi, I'm Lisa, also known as NiftyNei. I'm a longtime contributor to Core Lightning, an open source implementation of the Lightning Network.
Okay, thank you all. It's very interesting, I think, to see the transition that we're making between talking about Lightning and now I don't think there's a Lightning panel on this conference for the first time in 8 years. We're talking about second layers. So let's, just to get started, let's talk about definition. What is a second layer? Stephen?
Yeah, I think the definitions have been varying from people's perspectives. But I mean, for me, and I think for us in the ARC campus, second layer is a platform where you can make payments off-chain, but users at all times have a way to unilaterally exit on-chain, which means that even if any other party involved in the second layer disappears, they can always claim their money back without needing any permission from anyone. Yeah, I think that's for me the core value of a unilateral.
So you're mentioning one criteria, which is unilateral exit. Are there any others?
What was
criteria?
Criteria. For me, the unilateral exit is the core criteria.
Okay, got it. Anyone has a different opinion on what a second layer is?
For us, because like we are tokenized securities, right? For us, Bitcoin is actually the backbone of the future financial industry, right? And for us, it's very important that you have like confidential transactions, right? And and that you have a.
You're using Liquid, right?
Yeah, we are using Liquid.
Is Liquid a second layer?
We consider you can consider it as a side chain, but I think for us it's like a second layer, but because it's somehow like a channel to Bitcoin, right? And And we love it because you have confidential transaction, but you have also like the possibility to do a whitelisting logic, right?
But you didn't answer my question. Is it a second layer?
I would consider it as a second layer. Yes.
So is Coinbase a second layer?
I think like, for example, I consider us, for example, as a third layer, sort of, right? Because like in the end, you integrate something on
I'm teasing. I have a reason to tease you because, and I think that you all agree with me that it's getting more and more complicated to understand the different trust profiles, and that's kind of the future of second layers. I think things will get more and more complicated as time goes by. Lisa, what's your take on
second layers?
Yeah.
Oh, this is such a controversial topic, Roy.
Yeah, that's why we were having a
I like to talk about second layers from a perspective of accounting or keeping track of who's moving money around. You know, the difference between, you know, I think it's hard to talk about layer 2 without talking about layer 1. I think one of the things with layer 1 is that it's slow. All your transactions to some extent are public. Everyone finds out about them. So when second layers get developed, some of the things that you try and change that are different than layer 1 is, well, you want transactions to go much faster, right? So there's a bunch of different, I think maybe competing isn't the right word for it, but different protocols. But layer 2s are really about like, okay, we still want to be able to keep track or account for who owns what Bitcoin, but we want people to be able to update who owns what Bitcoin much faster, not on chain, so maybe more privately. Lightning, I think, is definitely an example of being the fastest, though maybe ARC would disagree with that. So we have the fastest updates to your state and maybe some of the most private, but there's downsides to that, and that the trade-off is it's only point-to-point or peer-to-peer, so you run into other, I think, drawbacks with that kind of method of accounting of who owns Bitcoin.
And from a unilateral exit standpoint, you think a second layer must have a unilateral exit?
Well, Lightning has, you know, the best unilateral exit trade-offs, I think, in terms of being able to take your Bitcoin, you know, the ledger of who owns what Bitcoin that you keep track of in Lightning and moving that back onto layer 1. Any party can decide to move their money out of that layer 2 at any point, which is what you mean by unilateral exit, right?
Yeah.
I think it might be a spectrum, right? I think from the true meaning of second layer, it's like any layer where things move around that also have a denomination of Bitcoin. And then it goes anywhere from like wallet of Satoshi and Coinbase to like what we call true second layers, which have a unilateral exit. And there, like you said, you have things like federated sidechains, you have things that are coming like the BitVM-based bridge sidechains, you have things like state chains and the Spark model. You have everything in between in that spectrum, and like, yeah, it's hard to, I think you can, from one perspective, you can call them all second layers. From another perspective, you can be like true second layers and like.
I feel like my opinion on it kind of changed over the years. As soon as you kind of start seeing like 100 different kind of second layers evolving or coming out, I feel like the only second layers around are going to be ARC-based ones and kind of Lightning. For the one reason, basically, like you have UTXO, and that is the only thing that is actually powering your second layer. If you're bridging it and locking it in multi-sig somewhere, like it's not really powering the second layer. It's just being kept in a custody, in a albeit very complex custodian that is being on.
So basically, what you're saying, if I have a primitive on the second layer that I can broadcast to the chain, that means that it's a second layer. Otherwise, it's not really a second layer.
Yeah. Okay. I would say that.
That makes sense. What made you work on ARC, Kukks?
What made me work on ARC? Potentially burnout. Actually, I spent a long time working on dozens and dozens of Lightning solutions, primarily focused on consumers or small-time merchants. And it was just hard. It was very hard to get something that is acceptable, that I find acceptable.
What was the UX issues that you faced mostly?
Channel management, costs, users just not knowing what to do.
So Lightning is dead?
No, absolutely not dead. I just think it has changed priorities.
In what way?
In what way? Basically, I don't believe users, like small-time users, are going to be running it on their phone. Or a small merchant running it for a Lightning node themselves. We've seen now that basically bolts took over the entire market. not the entire market, but basically the consumer market for self-custodians, self-custody Lightning wallets. Like they're powering the entire ecosystem there because they really nailed it down. Users don't have to do channel management. They don't have to worry about things. They just have a single balance, a real unified singular balance.
Stephan, you share the same opinion?
Yeah, I think so. I think Lightning will definitely keep its place because even within Arc, if you're making payments, like Lightning is a peer-to-peer model, right? So everyone connects with different peers, and you can reach everyone in the network. While Arc is a client-server model, so you can do Arc things between quotes within your Arc with other users that are using the same Arc. But once you need to go to someone else who's running a different Arc, or who's part of a different Arc, or who's not on an Arc at all, we're still using Lightning to bridge that gap. So Lightning is very good for like connecting the different dots in the whole Bitcoin ecosystem. It's like Nifty said, it's extremely fast, it's extremely efficient at large volumes, but it comes with an operational overhead that just end users who make a few payments a day maximum don't want to have. So I think Lightning definitely still it has its place, and we definitely don't want Lightning to disappear ever because Lightning is the backbone of any of these other solutions as well.
Yeah, so I call it Lightning is becoming the common language. And Nifty, maybe as the educator here, can you explain why Lightning is evolving to take that role of being the common language between different subnetworks and different layer 2s?
Yeah, I think so. It's been really interesting watching Lightning develop since 2018, right? So like I started working on the Lightning Network almost 7 years ago now. And I think when it first came out, I think there was a lot of like messaging around the protocol that was like, this is going to scale Lightning. We're going to scale Bitcoin to 7 billion people. Is that even, are there that many people? I think that's like how big it is, right? So it's like, okay, this is the protocol that's going to solve the scaling issue for Bitcoin. It's really incredible. Like, look at how many payments we can do and how quickly we can do them. And then I think, you know, as like maybe Kukks was kind of explaining a little bit about how he works with Lightning and the user experience just wasn't there. When you look at Lightning like as a protocol, how it works is very similar to something that we call like settlement banks, right? So the way that money gets pushed back and forth between two large parties that have a lot of exchange going on between them, and maybe like at least in the traditional banking system, a lot of big banks like in the U.S. maybe you have like Bank of America and J.P. Morgan Chase. These big banks have big settlement accounts between themselves, and they'll push money back and forth kind of at their level, like kind of high up. But they're really rolling up a lot of transactions that happened in other systems farther down the banking system, so to speak. And what I think we're seeing happening with Lightning is being used in between large exchanges or between maybe ARCs. So like you'll have like a big service provider that's an ARC service provider. Or in the case of Liquid, you'll have like Liquid gateways, which basically means that Lightning is used to push kind of money between big players that have more of a direct point-to-point relationship over a long time. A lot of money is getting pushed back and forth between these larger people, and it's quite efficient use of capital to do that. But when you start getting out into where the consumers are, who maybe are doing more of a every day, like in the US, we have like Cash App or Venmo, where you're like doing small amounts less frequently to a number of people. The amount of payments that you're making, so to speak, is like a quite different pattern. And so the protocol that works for Lightning doesn't start to work as well, I think, at those edges. So what you end up getting is Lightning is like a core backbone of sending payments in second layer and Bitcoin across the ecosystem. But then when you get closer to the consumer, we've got all these really cool different protocols and solutions, such as what Arcade and Second are working on with Arc, the Liquid project that uses a side chain to do more transactions, that sort of thing. So
we have Fedi, we have Botanic,
Fedi, yeah.
and we have a bunch of others that are in the works.
Cashew, I think, is a good one, yeah. And so those are, I think, you know, you kind of ended up with this like weird gradient, which I don't think anyone expected when Lightning got launched years ago, that we would have all these different options of how liquidity gets managed and the cost, et cetera. But I think one trend in general is that Lightning has kind of become the common language that all these different protocols use to interoperate, right? I mean, can you imagine having all these different systems and not being able to send money from Liquid to like Arc, for example, right? And so what you end up getting is this common kind of big pathway or backbone of the second layer payment system that uses Lightning. Sorry, that was a long conversation, but
yeah. But I think I agree. There are also kind of specific characteristics of Lightning that shine as Lightning evolving to be this interoperable layer. The fact that it's kind of stateless, like you need to only interact with the blockchain and maintain a private state is enough to use Lightning. You don't need any other global state. The fact that Lightning kind of incentivizes transactions, meaning the more fluid, the more velocity goes through Lightning, the more incentivized the nodes are. So it's kind of a incentivized flow, which is very unique at the protocol level. And I think also we need to give credit of Lightning getting to a critical mass. Lightning is a huge success. Every major exchange already supports Lightning. A lot of wallets already speaks Lightning. At Breeze, we're working with companies outside of the Bitcoin ecosystem to help them speak Lightning. So there's a lot of crypto companies that are already speaks Lightning, and Liquid in that regard also speaks Lightning because of what Bolt did with the atomic swaps from Liquid into Liquid. You want to add something, Tobias?
I just wanted to add something because like we are working in the capital markets, right? So Stocker is like really bringing like digital securities on Liquid. And when you have like capital markets, you have like two legs, right? So you have a payment leg and you have an issuance leg or an asset leg. And in terms of Lightning, there is a big challenge, like because like it's a regulated field, right? And the regulators get very, very noisy, right? And they want to see like all the transactions. So on Lightning, you cannot do transaction monitoring, and that's a big issue for the use case of Lightning. So this is like what we see is like.
It's a feature, not a bug.
Sorry?
It's a feature.
No, this is like an unfortunate thing, but I think like the EVM chains actually they have spoiled the regulators because all the transactions were actually visible. It's not the case in the legacy financial world, right? But now they see it's actually possible. Now they request it actually from any other solution on top of it, you know. And this is like a little bit of a downside, right? We have like this big challenge with it. But there are new solutions also on Lightning, like you know the Lightspark assets, for example. That's it's a very interesting solution. So they are working. I don't think it's really like Lightning.
Lightspark has two faces to the company. One is the Lightspark, which is Lightning software as a service entity, and now they have Spark, which is another second layer that is misrepresented here. I find it very interesting as well. Let's make it a bit more interesting, guys. Why there are two Arc implementations?
Because Arc is very exciting, and many people want to work on Arc.
Work on it together.
Why are there 3 Lightning implementations?
That's a great question. I still don't know. By the way, there are 5, and I still don't know how to answer that question.
I think there's a new Lightning implementation in C# that's coming out of Brazil recently. So
actually, maybe I have a good answer for that because, I mean, to your point, it doesn't make sense that there's many Lightning implementations because the thing with Lightning is peer-to-peer. The implementations actually have to do a lot of spec work. They need to be in accordance with each other. Like if one implementation speaks only a very tiny bit of information differently than the other one, everything breaks. So it's very, very hard.
Lightning is built from the ground up for interoperability, and that's why it's also being used as a common language between subnetworks right now.
But to come back to Arc is not like that at all. So we have way more flexibility to take different paths. Like if one Arc wants to do something totally different than another Arc, we don't need to have a spec that we have in common. We don't need to talk because we talk over Lightning. So we can focus on one thing, another implementation can focus on another thing. We can use different programming languages. We can have different use cases we want to focus on, and just we have this.
I understand that, but why? Okay, but answer the question. Why did you decide to do any second implementation?
Well, I will not answer that on the stage.
I think we have different opinions of how to build, what we want to build.
Okay, don't spill all the beans, but say something that will make us understand.
I'm not a co-founder, so but we are building basically more of a general purpose direction rather than just payments.
Marco describes this as the offline execution engine, which I really like.
It's a cool way to look at it. Yes, basically we are able to execute arbitrary Bitcoin script off-chain, and we can basically bring back all the use cases back to Bitcoin.
So for you, it's not just payments, right?
No. We want to do many things. The easiest one to explain to people is escrow because it's just very simple. We can't do standard escrow on Lightning. That kind of evaporated a long time ago.
How Arc helps me do escrow on Lightning?
So in Bitcoin, you can do, for example, multisig, 2 of 3, 3 of 5, whatever arbitrary number. We are able to do that inside Arc because we are executing Bitcoin script. Every single Arc transaction is actually a real Bitcoin transaction. We have the UTXO model. It's just instead of UTXO, it's a virtual UTXO, which allows us to do the exact same magic that Bitcoin brought us all together for.
And you don't share that philosophy of an offline execution engine?
We definitely share the philosophy of doing everything that you can do on Bitcoin off-chain in Arc. So we're definitely thinking of doing things like multisigs, enabling DLCs. I think that's also a big use case that right now is mostly happening on-chain. Some people try to build DLCs on Lightning, but the whole Lightning dynamic makes it really, really hard to do things like that. So on Arc, it becomes a lot simpler to do things like DLCs for loans, for trading. We definitely share that philosophy of enabling these things. I think they come second to payments. We want to focus first on solving payments because if people cannot transact efficiently and easily, they cannot easily do other things like loans and trades and stuff like that. But yeah, it's definitely possible to do all those things because it's natively supported. Like VTXOs are UTXOs, Bitcoin supports it, we support it.
And can you support new opcodes in Arc?
No, we don't have an interest in supporting new
Well,
opcodes.
we have something.
Well,
in Arcade, we do offer basically a new primitive, which is Arcade script. It's our way of extending and making it better for developers to come back to Bitcoin, because one of the things that seems to have driven developers away was the lack of new opcodes or too much drama in actually getting something going again inside Bitcoin development. For us, we're off-chain. We have the Arc operator has to collaborate with every transaction that happens. So why not offer some extra features on top? And we offer this while also maintaining a unilateral exit.
Actually, I have a question for you. What, do you think like RGB is also a layer 2 solution in your opinion?
I think my definition of a layer 2 solution is to use Bitcoin as an asset. Like for me, layer 2, another criteria is Bitcoin needs to be the asset. If Bitcoin is not the asset, it means that you trust another entity, another thing to convert between the actual asset and Bitcoin as an asset. So to answer your question, in that regard, no. Like on RGB and Taproot assets are not.
It's an assets protocol, so it's an asset protocol. So I don't see it as something doing secondary things. I mean, you can issue tokens now on Bitcoin in a nice and private manner in a very optimized way, but I don't know.
But I want to say another thing. Like, we need to understand that the world doesn't care on our definition of a layer 2. Yeah. Like, people don't give a fuck if it's a layer 2 or not a layer 2. People want to use Bitcoin. So let's allow people to use Bitcoin and in the way that they want to. And if they want to pass and to move USDT on Lightning, why not? Let's give them the ability to do that. Nifty, what excites you about layer 2s? Like, what are you kind of looking forward to?
I mean, so the thing that I've always been pretty interested in, well, there's a few things. Like, one of the reasons that working on Lightning is such a big passion of mine is that the ability to transact privately and really being able to use Bitcoin as a medium of exchange is like the thing that I think is like just really important from a civil liberties perspective. So, but in terms of like as an engineer and like a builder, the things that I get excited about on Lightning really have to do with like liquidity and like a little bit of like market design and how you're pricing the liquidity that moves through the layers, so to speak. So like one of the projects that haven't been working on much lately, but I was like one of the main instigators for is like building a decentralized peer-to-peer marketplace for liquidity on Lightning using something called liquidity ads, which really I think opened up a new market or like a new design space. Like, you know, then Lightning Labs created Pool. I think there's now a Lightning LSPS specs process that's building on like that original idea. Yeah, there's another like completely unfleshed out project that I would love to spend more time on that's about how to do pricing for payments that move through the Lightning Network, how you're charging based on the availability of liquidity along a route. So yeah, I guess my focus really is like on how are we allocating liquidity to make payments possible? Is there efficient ways that we can design open market protocols to make the incentivize people to add liquidity to markets to these like layers? Because I think that's like a big aspect of different layer twos. One thing that I think about a lot in terms of liquidity and like all of the new layer twos that are coming out, and maybe this is a little spicy. Maybe spicy isn't the right word.
We like spicy.
So there's only, I think we all know and love that there's only 21 million Bitcoin. Every layer 2 or second layer, as we've been calling them, needs liquidity in order to function. So what that means is it needs a little more Bitcoin allocated to it than is currently being used to send payments.
So support BIP 177, and then you'll have many more Bitcoins.
Oh, which is that? But what BIPs is that?
The John's proposal to rename Satoshis to.
Oh, okay. So like we just keep, so we not 21 million. Okay, but assuming that we stay with 21 million, I think one of the interesting things from like a liquidity market, like a market of liquidity perspective is, okay, so we're all competing for liquidity, for Bitcoins. There's only 21 million of them. So if someone takes their Bitcoin and puts it in a Lightning channel, that's Bitcoin that can't be used more or less for an ARC contract, right? Or if someone takes Bitcoin and
that's a very interesting perspective.
Locks it into liquid, all of a sudden that's liquidity or Bitcoin out of, you know, I mean, there's less than 21 million, like there's only, yeah. You know, so, and then there's, you know, and like, so ETFs are sucking up Bitcoin.
But there's another dimension of using the liquidity more efficiently.
I see, okay, yeah. Anyway, so this is like, I think in terms of like interesting things on second layers, I'm always like, okay, so which one of us is going to get more Bitcoin in terms of like locking it into the protocol? And how much are we paying, you know, the people who own the Bitcoin, or how is that getting attracted to your network to give it enough liquidity to be a useful protocol?
Let's talk about liquidity in ARC, because I think that's an interesting topic. Like,
I wanted to counter a little bit. You want to ask a question?
No, go.
I wanted to counter that a little bit, because it's not like we need the liquidity to be there, or we need the money to be there so that the users can come. Users have money and they bring it into the protocol, right? If a user has some Bitcoin and they want to use ARC, they'll put that Bitcoin in the ARC and they'll use it. So it's not like we need to convince people that don't want to use ARC to first like put money in the ARC or whatever, or liquid. If someone brings their Bitcoin into liquid, then the Bitcoin is in liquid, and that owner of that Bitcoin can use it in that platform.
But there's an additional liquidity requirement from an ARC standpoint, and it needs to be financially justified for the ARC to put their liquidity in the ARC.
Exactly, yeah. So then some protocols, especially ARC, is very interesting in that sense. They need some operational liquidity. So we're like also the operator, the server who's running the ARC needs some additional liquidity on top of what all the users bring to actually make the protocol function and work. Just like a little bit similar to in Lightning, you need the capacity sitting there for people to be able to make payments. But it's different because in Lightning, most of the capacities are actually the balances of the users in the channel, even though some of them are actually routing nodes.
I wish that was the case. If that was the case, the LSP model would have worked. That's definitely.
So you have the routing nodes and the LSPs who will also allocate liquidity. I think from the ARC perspective, I think we ran some numbers. We have a more efficient way as like a fraction of user liquidity that we need operational liquidity. So I think when it comes to operational liquidity, we're quite more efficient than the LSP model. But that's still definitely to figure out, because it depends a lot on user patterns. We still have to figure out what user patterns we'll see.
I just wanted to add, I think of course, you can say like liquidity. You bring like bringing like sort of Bitcoin right on this kind of solution. But there's also like another leg. It's like I think like you can really create liquidity when you have also like other assets there. For example, like Liquid. We have like on Liquid we have tokenized like 1.2 billion already. So when you have like bigger investment products, also
you can always print money. I agree.
And then but it's a very, I think it's a very important point, because like it's like too one-dimensional to discuss only like okay on the payment side, right? You have to see also like that there's a huge adoption on the asset side.
Kukks, you wanted to add something
Yeah,
regarding ARC liquidity?
Yeah, ARC liquidity. I mean, I'm not too worried. We envision that most people are going to be doing their transactions in an unbounded environment. The virtual mempool is what we call it, where users are essentially, they have VTXOs, and they're just doing ARC transactions, and doing ARC transactions does not require any additional liquidity at that moment in time.
But Lightning transactions require additional liquidity.
Yeah,
Off-ramping required additional liquidity.
In Arcade, we are not planning to be the LSP. We anticipate swap providers to provide that service.
And that's the way that you'll aggregate external liquidity, basically.
Yeah.
Steven, what's your take on that?
Yeah.
Like, one thing that kind of worries me in like operating in ARC is I can't really bring external liquidity in a non-custodial fashion.
You could. How so?
I need to bring my own Bitcoin in order to operate the ARC.
Yes, exactly. Yeah. You mean we cannot
can
non-custodially attract additional liquidity?
Exactly.
Yeah.
Exactly.
But that's the same for Lightning. But then the thing with Lightning is you can distribute it. You can have multiple routing nodes that bring their own liquidity, run a service.
You can have a multi-LSP setup.
Yeah.
Fairly easily.
It is true that it's more centralized in ARC. It comes with its challenges, but like Kukks, we're not too worried. There's a lot of activity in the ARC that doesn't require too much liquidity. It's true that Lightning requires its own liquidity, refreshing requires liquidity, but we're not so worried about that.
I see we have the red screen already, so any closing remarks, starting with you, Lisa?
No, I mean, I'm really excited and proud to see all these like new second layer options that we have in Bitcoin. I think it really makes the Bitcoin ecosystem quite unique, even in the wider crypto space. So we have common protocols for doing transactions and all these other things that all interoperate, and users are able to send Bitcoin across them with very little hassle. So I think that's something as an ecosystem of developers and engineers and even users that we should be very proud of. So.
Tobias?
I think my final remarks, I think we see the biggest challenge is like adoption, right? Further adoption in this space, and with any new solution is coming in, you add new functionalities. But I think we have also like to think about of course it's very obvious, the user experience. Like we have to think about like wallet integrations. You have like to think about or even like sort of smart contracts facilities, right? To make a more elaborated financial system and to get more sophisticated investment structures. So I think we are very happy that there's something happening in the space, and there is like Slidespark, as you mentioned, or what you guys are doing. So I think we see it very positively that there's so many things happening on layer 2. So yeah.
I just want to say that I'm really happy that we're in the state we are today.
Agree.
Like at least there's something happening now. Arc and our implementation Arcade is very close to mainnet. In fact,
I mean very close to mainnet. I think I paid for coffee using Arcade.
There you go. A little Easter egg, like this entire conference, all the payments happening are actually running on Arc right now. They're Lightning enabled, so you don't even notice with your Lightning wallet, but everything is being powered by Arc.
How many payments?
Good number, I think probably around 800, 900, 1,000 right now.
That's very impressive.
Yeah. Thank you. And it looks like it's been a very successful incognito event that we tried out. We'll hope to go for a very public mainnet in the coming months.
Coming back to second layers, I think I'm super excited about second layers in general. I think we had some kind of Bitcoin winter where there was a lot of focus on Lightning and not much new innovation came out, but the last year or two has been amazing. We've seen things like BitVM, Citria, Shielded CSV. We've seen all kinds of stuff come up, and and I think it's only going to continue. Like, it's going to be very exciting. I can't wait until maybe we get some form of covenant in Bitcoin, and I think it's going to explode again, and we're going to see a whole lot other things again. So yeah, very exciting.
Well, if we had another 30 minutes, we will talk about that, because that's a really interesting topic. But thank you so much, guys, and good luck. And just as a closing remark on my end, I also kind of completely agree with the sentiment. I feel that Lightning kind of found its place as the common language of Bitcoin, connecting between these different subnetworks, and the fact that we'll have flexibility to adopt the right solution for the right user base will give us a lot of power in Bitcoin adoption going forward. So thank you.
Thank you for moderating.
And with this, guys, you have an allowance to go and get some coffee. What's very important, we're going to start on time at 12:35, because we're also going live and people are on the other side of the screen are coming back on time. So enjoy yourselves, go get some fresh air, and I'm saying goodbye on my end. I was Charlotte, and I'll see you back next year, most likely.
Something pulls me back to you. No one else can see what's real, but I know you feel it too. Only we have the silent link, talking in a way they'll never think. Every glance, every touch says enough, yes, says too much. Only we have the silent link. One
HRF's Financial Freedom Program equips activists with vital financial tools to promote human rights, challenge tyranny, and transform global power dynamics. Here's what your support is making possible on the ground.
My country is ruled by the oldest military regime in Africa. The Human Rights Foundation supported us by providing me with a platform to strengthen our resistance against authoritarianism, gathering African businesses, entrepreneurs, investors on how to fasten Bitcoin adoption in Africa.
I started organizing Bitcoin meetups in my city in Kyiv. Human Rights Foundation supported us. Foreign Bitcoin developers came to Kyiv. Now it's possible to continue organizing different type of meetups. That's the goal, to grow up with them and with our knowledge about Bitcoin.
We actually started with a seed grant from HRF of $25,000 in Bitcoin. Earlier this year, the Human Rights Foundation sponsored 5 of our developers to the Oslo Freedom Forum. At that conference, I actually ran a workshop that brought close to a dozen human rights activists from across Africa to understand challenges activists are facing and how the developers can build solutions and products that Bitcoin could potentially be a solution for. That could not have happened if Human Rights Foundation had not gotten those developers to the Oslo Freedom Forum.
I started a desktop Bitcoin wallet, which allows people to be self-sovereign. Alex reached out, he proposed the HRF support the development, and there was a grant issued, which was helpful in terms of me being able to sustain my work, being able to see a future for what I was doing, to focus the product in ways that I might not otherwise have done.
The intersection between human rights and Bitcoin is that both promote freedom at the same time. Financial freedom enables individual freedom.
I started my campaign, Afghanistan Software, in 2010. I was the first tech female CEOs in Afghanistan, and my campaign was hire a lot of women who were programmers and also bloggers. It was very difficult to pay these women the money. Most of them didn't have bank account.
I cannot even have a bank account in my country because I know that anything I do will be followed and monitored by the government and could put people that transact with me at risk. Bitcoin is not only the tool that allows us to support activists financially, but also allows us to teach them how to think about finances differently. The Human Rights Foundation understands what it is like to be on the front lines of the struggle. We are working against authoritarianism, we're working against abuse, but what we are working for, the basics of human dignity.
What the Human Rights Foundation is doing is really creating an impact, leading this conversation about Bitcoin. For us as human rights defenders and people that are living in an authoritarian regime, it's a gift.
One of the first things a dictator does to a human rights group is freeze its bank account. Thanks to your support, we are now helping activists fight back and keep their critical work going. Your support is helping thousands and thousands of people achieve financial freedom in Belarus, Uganda, Thailand, Venezuela, and beyond. On behalf of all the grantees of the Bitcoin Development Fund, thank you.
Check, check. All right. Good afternoon, everyone. Welcome to the Human Rights Foundation block. We want to extend a huge thank you to the Human Rights Foundation for sponsoring the conference here. And we've got an awesome group that you're going to be seeing over the next couple hours here. My name is #BenParent, and I'll be your MC for this section. And we want to welcome to the stage to start us off. This is Femi Longe. He is the global Bitcoin lead at the HRF, and his talk is entitled "Bitcoin is a Weapon." Femi, welcome.
All right. Can you all hear me? All right. So my talk's titled "Money is a Weapon." I work at the Human Rights Foundation, leading the Bitcoin Development Fund. But I thought to take us a few steps backwards to talk about why I Bitcoin. I'm Nigerian, but I had a privilege before I was born, that my father found his way to the UK for business, briefly, and while they were there, I was born. And that's the only reason why I'm in the room today, because that simple visit gave me access to what lots of people in my continent do not have. There are tons of people who wanted to be at this conference who didn't get the visas to come. Let me talk about my continent, Africa. This image is the World Bank's Human Development Index, which shows how quality of life is for people in different parts of the world. So the darker the green, the better quality of life. The darker the red, the worse the quality of life. That's my continent. Somehow, as human beings, we've taken for granted that the West will always be rich and Africa would always be poor. And the global monetary system and money that we have is a vital tool in perpetuating this. This is a picture of how strong your passport is. So again, it shows how many countries you can visit without needing a visa, or how many countries you can get to and get a visa on arrival. Again, the darker the red, the worse your passport. So again, it's taken for granted that my people will not see the world, or when they do, they'll be treated as immigrants and people that you look down upon. But people from the West have free access to move, to transact, to do business, to have a good quality of life. And the monetary system and money that we have enables and perpetuates this. This is an image of the world at night, taken from NASA satellite in space. So you see, they used to call our continent the dark continent. And literally, it is the dark continent. You have electricity in the West. In my part of the world, there's nothing. Money and the monetary system has long been used as a weapon to keep the world as it is, to keep certain parts of the world enjoying good quality of life and other parts of the world not. And that's something that I feel we need to bring into the context of our conversations about Bitcoin. We're very used to conversations about Bitcoin or money as a store of value, as a medium of exchange, or as a unit of account. But I want to bring a new paradigm to the conversation, which is that of money as a weapon. If I asked anyone in this room before now if you considered yourself an arms dealer or someone who dealt in weapons, you probably wouldn't. But I want you to understand that what you're building, what we're building, is more than just something that people use to transact or something that you keep or that you do financial engineering around. It is something that actually has profound life and death implications for people across the world. And we can use it. Money has both offensive or defensive properties. You can use the technology to impose control, to cause harm, or to manipulate outcomes of societies, of human beings. Or you can use it in the defense of yourself, defense of your community, defense of the things that you hold dear. Let me talk about some of these properties and how money has been weaponized and is used in the world as we have it today. Let's talk about control and influence. You have lots of instances where governments, dictators, authoritarians suppress the opposition by freezing their bank accounts, seizing their assets, using it to neutralize, silence critics or anyone who speaks in the fight of truth. You have tons of use of money for financial propaganda to spin the news, to push narratives. We see a lot of it on social media, where things that are not truth are suddenly suppressed or spread using the power of money to become from perception to what we actually believe to be the truth. You have the use of money actively to control government policies, government politics, control outcomes so that governments in parts of the world actually end up acting against the interests and the needs of their own citizens. We use money to influence elections. There have been tons of instances of coups and elections in African countries that have been bought and financed by governments of other parts of the world in order to actually get their own stooges in power. So money is not neutral. It's an active tool that's being used for control and influence. We use money for economic warfare. In many cases, they crash markets, they trigger economic recessions in other places, they give people debt. All through the 80s, governments in the West would give loans to evidently corrupt dictators in African countries with the understanding that those dictators would steal the money and send it to banks in the West. And the people, the citizens of the country are stuck paying a debt that they didn't get anything of, interests of which they ran into paying for decades on end. You create artificial scarcity or you control supply lines, create people in artificial poverty. The world we live in right now is one where one side of the world is experiencing extreme affluence. And right on the same planet, you have people who do not have an idea, have a clue where their next meal is going to come from. This is the power of money as a weapon, as a tool to create economic warfare, to keep people suppressed so that you get access to their natural resources for the cheap. This is a map of my continent, Africa, and the amount of currencies we have. We have 45 currencies in a continent with 54 countries. Across the entire West Africa, there is a currency that is printed for them in France. The colonial dictator, still controlling the destiny of Africans still today. This mess of currencies makes it extremely difficult for Africans to trade between each other. If me and Nigeria wanted to trade with someone in Kenya, we would denominate the trade in the US dollars. A currency that's from completely outside the continent, because we've created this friction that makes it impossible for us to actually transact and generate economic wealth. We use money and financial system to create cycles of dependency and exploitation. I've talked about the loans that are given with heavy conditions, strict conditions that give colonial powers or through the IMF or the World Bank access to natural resources of African countries. Alex Gladstein, our head of strategy at the Human Rights Foundation, wrote this book, Hidden Repression, How the IMF and World Bank Sell Exploitation as Development, talking about how the IMF and World Bank have been strategically used as tools to ensure that the global status quo, where one part of the world is rich and stays rich, and another part of the world stays poor. In many countries in Africa, the governments do not make decisions, cannot pass their budget without getting express approval from the World Bank and IMF as conditions for loans that were taken long ago that were eventually stolen and sent into Swiss bank accounts and bank accounts far flung across the world. That's the world we live in. Incidentally, this statistic shows that actually, across the global south, more money is actually sent in there, combined, by members of the global south living in the diaspora in other parts of the world than you get from international development aid, than you get from official development assistance, than you get from philanthropy. Yet, none of that comes with actual, genuine power from those diasporas on how their countries evolve. Whereas the guys who are giving them the pittance get so much influence in directing policies across much of the global south. So the fact that we have a world system now where one part is poor and another part is rich is not by accident. It is by design. And the current monetary system and money that we have right now are key tools and weapons that are used to maintain and position this world. That's the offensive use of money. And when all else fails, you get full direct aggression. Whether it is the dictator that is seizing funds, freezing accounts, arresting, surveilling the financial transactions of opposition and human rights activists, whether it is countries from outside that fund wars in countries. At the moment in Africa, there is a war happening in Sudan that is sponsored by a power in the Middle East. France has sponsored multiple coups running in the dozens across Africa, stopping people who have, and leaders who have risen up to challenge this unfair financial system that we have in the world, in our part of the world. So, again, money is not just a neutral creation of human beings. It's a weapon. And the more we understand that, the better we can put that in context when we think of the things that we build in this space. But I've talked about money as an offensive weapon. Money can also be used as a defensive weapon. We can use money to protect our wealth against inflation by storing value in hard assets. A lot of this we know in this space. We can use it to stabilize economies by having reserves, potentially in currencies that are not subject to the whims and the caprices of other countries. We can use it in safeguarding our purchasing power. We can use it in having intergenerational wealth that we can pass on to our descendants so that the work that we earn doesn't just live with us or we don't fritter it away in taxes. Money can be used for personal and political freedom. The easiest way to stifle an opposition to an autocrat or a dictator is to go after the funds of the movement. But at the same time, when movements have access to funds that governments cannot surveil, when they have access to funds that government cannot track who they're getting money from and who they're giving money to, then it gives them the power, it gives them the strength to be able to stand up to bullies, stand up to authoritarians. It enables community and social protection, good quality of life, access to good houses, access to good housing, access to good schools, access to good education, access to see the world. It's not the exclusive privilege of one part of society. In a world where we have created so much abundance, it's a right that every human being across the world should have access to. And money can be used as a defensive tool to actually give them access to this. Money can also be used to escape the trap of debt, which we get from vulture organizations like the IMF or the World Bank. When countries across the world have access to resources that comes from their own value that's earned by them, and they're not subject to predatory debts with conditions that are beyond their ability to bear, the chances that they can actually build wealth for their citizens increases. And Bitcoin. So the fiat system as we have right now, by its design, it lends itself easily to the use as an offensive weapon. And the beauty of Satoshi's creation, peer-to-peer electronic cash, peer-to-peer electronic cash, is that it gives people in the far-flung parts of the world who are currently strategically cut out from the financial system access to be able to finally enter without the intermediaries, the traditional banks, and all the other gatekeepers that stop them from being able to generate wealth, to keep their wealth, and to engage in trade across the world. So the technology that you're working on, the technology that you're helping to build, the technology that you're helping to spread is a strong tool. It's not just humanity's greatest tool. It's a huge tool for every human being right now in the parts of the world right now that are systematically suffering because of the effects of the current system that we have. Bitcoin is money. But Bitcoin is not just money. Because money is a weapon, Bitcoin is also a weapon. And it's a weapon that lends itself to very good use, both as an offensive tool to help us attack the current predatory fiat system, but also as a defensive tool that can help us bring wealth and prosperity and good quality of life to people in the farthest reaches of the earth. The work I do at the Human Rights Foundation, I run the Bitcoin Development Fund, which is our fund that has two main purposes. One side of it is supporting technical projects that help us preserve the features of Bitcoin that makes it a perfect defensive tool in the quest for freedom and equality across the world. So the fact that Bitcoin is decentralized, the fact that Bitcoin is privacy preserving, the fact that Bitcoin focuses on transactions, on security, the fact that Bitcoin transactions cannot be censored, cannot be reversed, are features that make it a very, very powerful defensive tool for freedom across the world. And we look for and support technical projects that help us preserve and enhance these features. So if you're working on a technical project that helps us enhance these features, we'd love to talk to you, we'd love to see how we support. But we're also keen on making sure that this technology is usable by people not just in the West, but by people across the world that are facing up to the biggest bullies of our time, dictators, authoritarians. And we want to make sure that Bitcoin can be used by them easily and on their own terms. So we support projects like translation projects that helps us translate Bitcoin into the farthest, longest languages across the world so that people can engage with the technology in the language that's convenient to them. We support user experience projects that help us make Bitcoin simple to use so that you don't have to have a diploma to be able to use the technology. We support user experience projects that makes it very easy, very seamless, something that my grandmother in Nigeria can use. We support projects that educate people on Bitcoin, not indoctrination, not trying to preach or evangelize to them, but actually shows them how Bitcoin can be used to solve the problems they're facing right now. We're willing to support innovation in this space because we know how important this technology is as a tool and as a weapon to try and create the world that we want. And we hope, at least I hope from the next set of talks you hear, you'll see more perspectives on how we're using this technology. And hopefully, if you're interested, if you're working on a project that you think we may be able to support, I look forward to speaking to you. Thank you so much. I hope we build this technology and we wield it as a weapon very correctly for the good of everyone in the world. Thank you.
All right. Okay, up next, we are going to have Abubakar Nur Khalil. He is a Bitcoin Core contributor. He's also the CEO of BTrust and Recursive Capital. And his talk is entitled The Global Majority, Bitcoin by the Billions. So please give him a warm welcome, Abubakar.
Hello. Appreciate it. Okay. Can you guys hear me? Okay, perfect. So thanks so much for making this talk. So Baltic is really, really special to me for a variety of reasons. I think it's one of the very few conferences where we can have an open conversation with not only the crowd here that's present, but also for those of you watching online. And for a lot of us, it's also an avenue for us to speak candidly about the conversations that we're supposed to have as a community, but also to provide a mechanism for those who are just coming into the space to understand the actual real challenges on the ground and not the number go up that we've been seeing. I know Bitcoin's at $118,000 right now, but that's not the priority really. So my name is Abubakar Nur Khalil. I am the CEO of Recursive Capital, which is a Bitcoin venture capital fund. We're the largest capital allocator in Africa, being, essentially providing capital to early stage companies that are just starting out. Our core focus is Africa, but Bitcoin companies. I also write for Forbes, essentially cataloging the developments in Africa as well as around the world, specifically with an angle around utility-based development or things that have to do with kind of the utility of Bitcoin as a money. I also work on Bitcoin Core, mostly PR reviews, and I run BTrust, which is essentially a not-for-profit where we're trying to decentralize Bitcoin development. And honestly, that's kind of the whole point of this talk, to kind of explain what we mean strategically when we talk about that. Now, we're at a stage where Bitcoin is a global tool, and not just in name, but in practice. Billions around the world could benefit from this tool, and the reason why we see that is the majority of the world is at a state where for decades, you could argue even centuries, they've been locked out from financial tools, services, and a large majority of them still are unlocked in terms of, or should I say, locked in terms of not being able to access simple things like bank accounts, all the way up to flows within continents, especially my home continent of Africa. And we've gotten to a point where we now have a tool that is breaking this entirely. The same way the internet democratized information, where we no longer had silos, where different parts of the world were required for you to travel there, for you to have basic information around the world, kind of humanity, etc. So at a point where Bitcoin is doing that for money. And what I mean by that is it now has an avenue for people to be able to actually communicate their value and to receive it in kind. Now, the unfortunate truth and kind of reality of the state of affairs when it comes to Bitcoin development is that it is still championed by what I'd like to call the statistical minority in the world, which is individuals around the world that aren't necessarily directly immediately benefited by Bitcoin's value proposition as a money because they haven't been locked out as the rest of the majority of the world has been from financial services, information technology, and the likes. Now, that is not to say that all the work that has been put into this project is for waste or it's not valued. It kind of was a necessary consequence given how the trajectory of technology has been from the internet all the way up to more recent investments with regards to artificial intelligence. And just a factor of the fact that a lot of that development has happened traditionally in the statistical minority of the world. Now, some of the implications with regards to that are not necessarily all pernicious. I think it's more a case of this type of framing, which is you can't have a minority of the world building for the majority of the world. There will never be a situation where it would be built to the point where you need a maximal amount of resilience for this type of technology, Bitcoin specifically, to be useful, but also to adhere to a lot of the issues that they're facing on the ground. And I think for us to kind of get this more concretely is, over the last 5 years, we've seen Bitcoin go from highly niche technology that not a lot of people really honestly even care about to it being at the vanguard of freedom fighting around the world, but also as a lifeline for a lot of people in terms of having a new mechanism that enables them to be free individuals around the world. So we're talking about unlocked flows, unlocked capital, unlocked really novel ways in which individuals or even economies are starting to interact with each other, whether we're talking about treasury companies or even treasuries for actual continents, countries, etc. And one of the interesting aspects around Bitcoin that I think is worth talking about is when we're talking about value and value exchange globally, Bitcoin has allowed for individuals that were previously discounted to not be subject to that type of disgrace. I think it's, the way I'd like to say it very concretely is, Bitcoin has allowed for individuals to no longer be faced with the issues around discounting value depending on where it comes from around the world. Whereas looking at it as an individual from Africa, maybe it's cheap to live in Africa, as a lot of folks like to talk about, or it's more expensive to live in the statistical minority of the world. And what Bitcoin does is it throws all of that out of the window. No longer do you have to start looking at individuals and start to discount how you value them around the world, or at least how you value their value when it comes to actually providing that at a grand scale. So whether it's on the developer side, businesses, companies. So suffice to say, Bitcoin now allows for this different type of framing of no matter where you are around the world, as long as you provide a specific set of values or skills, you can receive that in kind, regardless of what part of the world you're in. And I think that's very novel. Now, with Btrust, we are purpose-built to maximize this reality. And we're trying to do so from a very strategic standpoint of the developer's angle, which is Bitcoin's a technology at the end of the day. It has achieved so much in such a short amount of time when we're looking at the history of like monetary networks in general. And the problem is, again, it's not necessarily being built by a good majority of the world that's actually using it. So naturally, there will be a lot of misaligned incentives. And for us, whenever we talk about or clamor about decentralizing Bitcoin development, we're not talking about it from an abstract standpoint. We're trying to make sure that we actually get Bitcoin to be perceived as a technology that needs to be built by these individuals that need it. So we don't want a situation where people that should be building Bitcoin because it's necessary to get to that point of resilience, to not feel like they're guests in the wider story of this whole initiative when it comes to Bitcoin. They need to start thinking from the standpoint that they're a necessary component for this technology to work right now, but also to still work in the future. Now, over the last 1 year, we've gone from really trying to figure out exactly how to do this concretely, but also sustainably, because unlike other ecosystems, Bitcoin development, specifically Bitcoin open source development, is very funny. It's not as straightforward as get a bunch of devs, teach them about what blocks are, and then pair them with capital or pair them with funding, depending on what the context is. What you do is you can't actually create new Bitcoin developers, which is kind of ironic. You might ask, why the hell are we doing the work we're doing? But what you can do is spark the flame that would sustain this individual to realize why they want to contribute long term. So all the activities that we do around creating a healthy developer pipeline is not from the standpoint of go from batch A, batch B, and then come out and we give you grants and everyone's honky-dory. Really, it's about ensuring that we paint the reality of Bitcoin both as a beneficial technology, but the implications when people have a critical mass that's aggregated to actually build this technology. And I feel a lot of our work really has been to clarify and kind of standardize the entire process from I know anything about Bitcoin all the way up to, okay, I'm a bit convinced around some of the value proposition to using it, to building this technology, all the way up to getting to a point where they're contributing at the highest level, where building kind of the infrastructure on the ground from Bitcoin Core to all the rest. And so far, what we've done is split the pipeline into 3 aspects. So the far end, like the beginning, is things around conferences, things like developer meetups. And Beatrice has gone from not running a lot of these events to the primary organization running the most BitDevs around the world. We actually run around 13 or 15 BitDevs across Africa. The majority of that has been just in the last couple of months of this year. And what we designed, or at least the intention behind that, is not necessarily to even get people to fully understand Bitcoin, but at least to be enthusiastic enough or to understand what the implications could be. And then in the middle of that pipeline really is around developer education. What we mean by that is doing a lot of work to get developers to understand practically what are the tools, skills, and necessary mindset and framing that they need to become sustainable. And the last aspect really is around the grant side, which a lot of that has to do with pairing them with the right amount of support, because we don't consider funding as funding in the sense of the VC sense. We think about it as support towards a wider goal of them actually contributing to the ecosystem. And so far, so good. We've gone from a handful of grants over the last couple of years to over 33 grants, I think, roughly around $1.8 million right now as of this month. And a lot of that work has been split. Majority has been towards developers strictly, and the rest is really kind of, like I said, the first half of that pipeline towards the middle. Now, all of that is okay. I think where we missed the mark over the last couple of years in terms of the work we've done in Africa, some of the other parts that are the statistical majority in the world, is we've missed the framing. I think we captured what the value proposition is. We've captured where this ecosystem can go. But I think where we haven't done a good job, which now we're starting to come around to that, is making folks on the ground really understand that without them, it's going to be impossible to get to a point where Bitcoin is still relevant in the next couple of decades. I think we risk, especially due to price action, going from Bitcoin is a very useful technology to why is Bitcoin useful? Well, I don't know, it's useful because it's useful. And that type of tautological thinking is what drives, or I should say what kills innovation around the world, or even what kills really good ideas, because sometimes ideas might be really good, but they don't get to their potential because of apathy, because of complacency. And that's the worst case scenario that could happen to Bitcoin. And I think the only way we can ensure that we don't get to that horrible future or state of affairs is to make sure that the billions around the world that need Bitcoin build Bitcoin. And we're not just saying that because, for saying sake. The truth is, if we change that framing and we start to develop towards that trajectory, it's also beneficial for everyone else, whether minority or majority. And the reason why I say that is because the folks that rely, use, and need Bitcoin building that have the most incentive to make sure that that technology is not only around, but is around for everyone else. And that's the type of resilience you need to ensure that you're not distracted by price action, because at the end of the day, price action should be viewed as the current pricing people put on the value of Bitcoin that it provides to billions. And what that is money. Money that works for the majority of the world, or dare I say, everyone around the world. And we're going to a point where the future of development will now shift in terms of this type of thinking. And what I foresee is people being a lot more strategic around capital allocation, around developer education, around circular economies, but also more importantly around having the right type of framing to ensure that we don't get distracted, to ensure that we have the focus for us to still have this technology to be around. And some of you might know some of the work we've been doing with Btrust, but we've really become, honestly, a very different type of organization from where we first started. And a lot of that has got to do with realizing where we failed, but also not being held back by that baggage and realizing where we could do even more work and kind of leveraging on some of the structures that we built over the last year. So for those who are interested in some of the work that we're doing on specifically getting to this point of shifting development in terms of the focus and general thesis, you can look onto our website to kind of track all the activities that we have. We have quite a lot of things coming up through the year, and what I want to say is this is going to be something I think that would really ensure that Bitcoin is going to continue to Bitcoin for the right reasons, not just for price action and capital accumulation. I think the future of Bitcoin development is really bright. I have a lot of hope in people understanding why the hell we're building this technology, who it affects, who it doesn't affect, who it could affect. And I think for Europe, for Africa, all the continents around the world, it's not a case of bifurcating into different silos and trying to build simultaneously. I think we have to have a collapsing of all economies, all ecosystems, all communities to have a single unified voice under this unique technology that, like I said, is not just democratizing money, it's democratizing relationships, it's democratizing financialization, it's democratizing economies. And for the first time in human history, we have a common communication pipeline for communicating value across space and time, cheaply and effectively. So welcome to the future of Bitcoin development. It's bright. Thank you so much. I was trying not to be.
All right. Let's give one more round of applause for Abubakar. Awesome. All right, so we are going to move into our next talk here, and we're going to be having up Ghaffar Hussain, and he is the managing director at the Groundswell Project. And his talk, Power to the People, Bitcoin in the Fight for Economic Justice. So please give him a warm welcome. Ghaffar, welcome to the stage.
Hello, everyone. So, my speech, Power to the People, name of a John Lennon song, but I'm going to make this relevant to Bitcoin and things we've already talked about. So I want to build on, obviously, what Femi and Abubakar have both talked about in terms of Bitcoin being a tool to empower people and to address some of the economic injustices we see today. Now, like with all good things, I want to start with the Roman Empire. And that's because apparently men think about the Roman Empire every single day. And Bitcoin is very male-centric, so I thought this would be relevant to all of us. So, and the reason I'm talking about this, I want to address something called late-stage fiat, as in what happens to a society which goes down the fiat route over time. Now, we have historical precedents for this, and this is why I want to talk about the Roman Empire. So, under the reign of Nero was an interesting chap because he inherited a lot of expensive public infrastructure projects from his predecessor, Emperor Claudius. But when he came into power, the Roman Empire was trying to invade Britain, which is obviously very expensive. They just had a great fire of Rome, so a lot of rebuilding was needed as well, and agriculture wasn't doing too well. So what Nero decided to do was debase their silver currency, the denarii. And I think it went from 97% silver to 93% silver under his reign. So he began a process of debasement, which continued for the next sort of 200-300 years. Eventually, it got to a point where no one wanted the silver coin. People started bartering instead. People started hoarding precious metals at home. People started developing localized economies, and essentially people lost trust in the system. And for that and many other reasons, the Roman Empire collapsed, as we all know. Now you contrast that with the Byzantine Empire, whose solidity remained pretty solid in terms of the gold content of the coin. And that empire lasted another 1,000 years, all the way until Constantinople was sieged and taken over by the Ottomans. These are two interesting cases of how debasement can affect an entire civilization. So this is known about. This isn't new knowledge. This is known about historically, what happens when you debase. So much so that Dante's Inferno talks about this. So those who are familiar, Dante's Inferno is a book about hell, essentially. There's 10 circles of hell within this book. And the 8th circle, Dante encounters a debate between Master Adam, who is a fictional coin debaser, and Sinon, the man who was behind the Trojan horse fiasco. And these two are debating with each other. And essentially, Sinon says to Master Adam, I committed one crime, but you commit thousands of crimes, meaning every single coin that is debased is a crime in itself. So he's essentially comparing and contrasting what he did, i.e. the Trojan horse affair, with the currency debaser. Now, Dante, as you know, lived in Florence. Florence was, at the time, center of, at least the European economy, it was a center of financial innovation. And the florin, the coin of Florence, was a pure gold coin. People had a lot of trust in that coin. And the stability of Florence as a financial center was built in the trust people had in the local money. Right? And that's very important. And Dante understood this. And he understood that if we start debasing this coin, it'll undermine the entire society that they'd built in Florence. Of course, Florence did decline afterwards. It wasn't necessarily because of debasement. It was because obviously the trade routes shifted when the Portuguese discovered the New Worlds. Also, the Spanish and the Portuguese flooded Europe with silver and gold from the New Worlds. It affected the price of metals as well. That's another important thing to remember about precious metals. You know, there's supply does go up about 2% a year as well, so it's not entirely the best source of value. So, late stage fiat. What is late stage fiat? Late stage fiat is when the money printing has got a bit out of control. People start to lose trust in society. People's purchasing power is eroded. Private debt surges. You get asset bubbles. So, for example, after COVID, the S&P went up 40% within 1 year. Property in the US went up 20% 1 year after COVID. So the beneficiaries of the fiscal stimulus or the quantitative easing, whatever fancy term you want to use, were the very wealthy. And essentially it's a transfer of wealth from the poor to the rich. And obviously we all know about central banks. So the key point here is trust. And I'll keep coming back to this point of trust, because when people stop trusting the system, when they stop trusting the currency, when they stop trusting the central bank, they essentially lose trust in each other. You lose trust in all public institutions, whether it's hospitals, schools. So this really does affect the social fabric of society in ways people don't quite understand. And we need to make more awareness. But what I really want to focus on in this presentation is the impact this has. Oh, I've missed a slide there. That's strange. Sorry. A slide has gone missing. That's interesting. Okay. What I want to focus on is the impact this has on the global south. So, it's obvious to say that money printing in the West affects currencies in Africa. Many currencies in Africa are pegged to the dollar or pegged to the euro. So you've got the CFA franc, for example. So 14 African currencies are pegged to the euro. And the central reserves of those currencies are held by France. So essentially, it's a kind of economic imperialism that's kind of ongoing. So this is important to remember. So money printing is not, if it happens in the euro or the dollar, it affects people in other parts of the world as well. Now, there's some use cases, I think, where Bitcoin can solve this problem. Now, at Groundswell, we're looking at 4 main use cases where we believe Bitcoin can address some of the challenges posed by late-stage fiat in the global south. The first one is on remittances. So a Western Union transfer can typically cost 10 to 12%, sometimes more with certain transfer networks. People in places like India, Pakistan, Bangladesh, Africa are very reliant on remittances. It's a main source of income for many people, especially in South Asia. Now, there's a lot of gangsterism as well. So I was talking to someone from Sri Lanka who told me that you get gangsters with guns standing outside Western Union kiosks. And if someone goes to, or a woman goes to collect money from her son, they stick a gun to her head and say, I want half of that. So it's not even safe because of the physical infrastructure required. So Bitcoin obviously can solve this in obvious ways, boosting how much money people can keep and get in their pockets, and takes away some of the dangers posed with having to go to physical kiosks to get the transfer. And obviously the rates via Lightning is a hell of a lot cheaper. So that's one obvious use case we're looking at. The other is female empowerment. Now, in many cultures around the world, women simply don't have. The 1.5 billion people are unbanked globally, right? A lot of those are women, especially in places like Kenya. We're doing a lot of work in Kenya at the minute, where what happens in Kenya is most parents don't register their daughters for birth certificates. So they simply don't have birth certificates. If you don't have a birth certificate, you can't get a bank account. If you don't have a bank account, it's hard to set up a business. It's hard to run in local politics. It's hard to basically engage in society in a meaningful way. So essentially women who don't have birth certificates are unable to participate financially. And then you've got the cultural issues as well around husbands wanting to, or fathers wanting to control the financial autonomy of women. So again, Bitcoin in obvious ways solves this issue as well, gets rid of the need for ID, accessibility via Wi-Fi and a digital wallet. So we see Bitcoin as a form of female empowerment as well. Direct giving. Now, typically, if you give to a charity, up to about 25% of that giving will get covered, will get taken up with admin fees and other things as well. That the charities, I'm not against charities, but they absorb a lot of those costs to run the operation, and that's before you get into bank transfer costs and other costs that are involved in that as well. So again, Bitcoin is a use case for direct giving, where people in other parts of the world, in the global south, can create a project like building a well, for example, stick a QR code online, and people can give directly to that project. So essentially, you emancipate people from having to rely on charities. And also charities in certain parts of the world are heavily politicized, as Femi talked about as well. Some of the charities are dependent on the political whims, let's just say, of the local leaders, and the local leaders will decide how the charity is spent. There's a lot of corruption in that sector as well. So Bitcoin gets rid of a lot of the corruption in the charity sector, which is quite widespread in many parts of the world. The final use case we're looking at is microfinance. So microfinance is very interesting for me personally. So something I looked into. So after the War of Independence in 1971, Bangladesh, which previously was East Pakistan, became obviously Bangladesh, but the country was very dependent on West Pakistan, which is current-day Pakistan, for grain imports and for basic food supplies like rice. So Bangladesh became a very, very poor country. I think 1 million people starved to death in Bangladesh in the late 70s and early 80s. That's how poor Bangladesh became. So Bangladesh became a bit of a testing ground for innovative financial ideas. One of the ones that actually worked was something called microfinance that was pioneered by a man called Muhammad Yunus, who's currently the interim leader of Bangladesh after the coup that took place last year. Now, microfinance is a very simple concept. Essentially, you create a circle of people, maybe 4 or 5 people that typically know each other. They all get a small loan, but the condition is that they all are liable for each other's loan. So if one person takes the money, runs off, or spends it on something crazy, the rest have to pay that back. If they pay back, they then get a higher loan, a bigger loan, sorry. So typically what would happen is you create these small communities, microcredit. They would invest it in farming infrastructure, in things that would allow them to make a living for themselves. And typically it'd be family and friends, people that knew each other very closely, so the repayment rate was very, very high. And this is how you could stimulate local economies without having to go through, complex banking, getting loans from banks, which is much more complex in rural countries that don't have that same infrastructure. Now, we're looking to do this with Bitcoin, where we can use smart contract technology to create microloans with Bitcoin. And we're already gathering people in northern Kenya who run very small-scale businesses, and the idea is to kind of stimulate and encourage that entrepreneurship, mainly women, to be honest with you. Women in northern Kenya we're looking to do this with. But this is another great use of Bitcoin as a form of lending, where you can build into the smart contract certain things that have to be uploaded and certain things you have to commit to before the money's released and before the next money's released as well. So you can program the smart contract to release it at certain times in certain ways. So we think there's interesting use cases for Bitcoin in the global south. These are things that we are exploring. I believe late-stage fiat system is on its very last legs. I don't think it has much longer, to be honest with you, with the money printing happening now in America. And Bitcoin has a solution, especially in the global south, will take more and more precedent. So you can support our work. You can support the campaign. We are funded by the HRF fund that Femi talked about earlier. So thank you very much, Femi, for that support. But you can support us. My colleague and Hadia and I are around for the rest of the day. Come talk to us, talk about our work, support the work we're doing if you can, and spread the word. Thank you for listening.
And really quick before we move on, if you do have any questions, let me know. But I also have, we have a few extra minutes in between, and I can also kind of echo some of the sentiment that we've had here on stage regarding how important Bitcoin is as a tool for human rights and freedom. So I just want to, I guess, use this in-between time before we get Callie up here to talk about Bitcoin in terms of privacy as a financial freedom tool. I want to kind of chat a little bit about my experience in dealing with the HRF over the past number of years and helping with educational initiatives. And this is a personal story, not a personal story, but one of my experiences having attended multiple events. And I think that Bitcoiners often, we get into our bubbles. We get into our, our groups, and we don't really see the other non-Western side of things. And so one experience that I had the first time attending the Oslo Freedom Forum in 2022 was I went to one of the main talks, non-Bitcoin talks, just about this woman from Nicaragua. Her name was Berta. And she was giving a talk about her husband, Felix. Felix was currently sitting in a Nicaraguan prison. And he had been opposing the local government and running against them. And one day they rolled up, threw him in a van, and he disappeared. When she was giving the talk, he had been missing for 2 years. And for 6 months, they didn't really know where he was. Eventually, they found out he was in a prison. Only his sister was allowed to go visit him, not his wife, not his young daughter at the time. So I watched this talk in the back of the theater the first day there in Oslo. And then later on in the day, because I couldn't quite see the stage very well, but I enjoyed the talk. I thought it was very interesting. And then later that day, I hosted a workshop for human rights defenders to learn how to use a Bitcoin wallet for the first time. Unbeknownst to me, Berta was in the room learning how to set up her first Bitcoin wallet. Later on, she actually came up and was asking lots of questions. I didn't clue in that this was the same person, but she was learning lots, and she was interested in the censorship-resistant properties of Bitcoin. And then she had some more questions, and I casually mentioned the 21 million supply cap, which she was completely unaware of, which is just something that we don't encounter in Bitcoin circles very often. She was coming for censorship resistance, did not know that it was also scarce. Either way, the following year, I came back. She went and continued to use Bitcoin in her work as a way of funding some of their initiatives. The next year, I sat front row to take in some of, again, the non-Bitcoin talks, and the first person to walk onto the stage was her husband. Through their efforts, they were able, and the efforts of the HRF, they were able to free him. And he walked onto the stage. The first thing they played was a reunion video between him and his young daughter for the first time in a couple of years. I was in shambles along with the rest of the audience. It was a beautiful moment. And since then, I've been able to converse and work alongside Berta and Felix in various capacities, and they are now Bitcoin educators amongst their community using Bitcoin as a tool for human rights and freedom. So if you have not been in these circles, I really, really encourage you to see how Bitcoin is being used in this capacity. It is really, really worth diving into, and it's important work. So with that little tidbit here, up next, we have Kalle. He is the maintainer of the Cashew protocol. If you haven't played with Cashew yet, I highly recommend. It's really, really interesting, a really, really cool tool. And his chat, financial privacy as a human rights issue. So everybody, please give a warm round of applause to Kalle.
Thanks, man. One, two. Test, test, test. Does this work? Nice. Does this work? Nice. Okay. Hey, everyone. Thank you for having me. I'm Kelly. I'm from the internet. I work for Bitcoin. And today I want to give a slightly different talk than my usual talks. My usual talks are very technical talks, but today I want to focus on historical account of the crypto wars and where we are today in terms of financial privacy and what we can learn from history. So in 2012, an angry father runs into a Target and wants to talk to the manager because he's extremely upset that his teenage daughter received baby products from the Target advertisement system. And he is so angry that he tells the manager, "What do you think you're doing? Are you trying to get my teenage daughter pregnant? What is this?" And the manager doesn't know what to answer. And the angry father returns back home and goes back to his family and has this discussion on the dinner table where the daughter admits that yes, she was pregnant, but she wasn't ready yet to tell it to her family. But the target algorithm was so smart that when she browsed through the store and bought some typical items for pregnant women, that the algorithm determined her to be pregnant and sent her coupons for her pregnancy. Now, this is a famous story that it is hard to confirm the story, whether this really happened or not, we don't know. But we're sure that there are many of such stories happening every day, all day, on the internet today. So I'll start with the Article 12 of the Universal Declaration of Human Rights. It says, "No one shall be subject to arbitrary interference with his privacy, family, home, or correspondence." In the 1940s, this meant that governments were not able to open your mail or just walk into your home. But in the 21st century, this must include also your digital rights on the internet and financial activity. And we'll see why. So let's take one step back first and ask, why is privacy important? For centuries, we've defended our privacy through physical means. We have booths, we have whispers, we have curtains that we can close whenever we need. And in fact, our democratic societies, they depend on privacy. So our entire voting system builds on the preface that we can cast our vote privately and cannot be coerced to vote for one candidate or the other, and keep our vote private after the fact as well. So we cannot be coerced or made and be paid, for example, for a certain vote that we made. But privacy is not only a good for itself, it is a gateway to so many other rights that we enjoy. It guarantees our dignity, autonomy, and ultimately democracy itself. So I'll give a brief historical story about one of the worst violations of privacy in history that I can think of, that led to the worst amount of suffering, which is in the Second World War, when the Nazis invaded the Netherlands, they were able to deport 75% of the Jewish population in the Netherlands. And when you compare it to their invasion of France, in France they were only able to deport 20% of the population, the Jewish population there. So the difference between those two invasions is explained by the fact that the Dutch government held meticulous lists of all the religious affiliations of their population in a centralized database. So when the Nazis invaded the country, it was very easy to single out the population that they wanted to harm. So it should be clear that a free society today depends on privacy in the digital space as well. So, how do we defend digital privacy? We say cypherpunks write code. What does it mean? The story starts with the Crypto Wars 1.0, and the fact that I call it 1.0 should give you also a hint towards what's coming next. In the 1970s, the US government started to sanction encryption as a weapons technology. So they made it illegal to export encryption, and I think many of us know the famous T-shirt by Adam Back, for example, where he printed the algorithms on a T-shirt. Or they were also printing algorithms into books because you could export books because they were protected under the First Amendment of free speech. And in that historical context, the cypherpunk movement was created. So there is a very famous cypherpunk manifesto by Eric Yu, who says, privacy is the power to selectively reveal oneself. And whether you liked it or not, in those times, if you were a cryptographer or developer, you were an activist. Your tools were political speech. So the lesson that we learn, and the lesson that we also, that these people already understood back then, is that we must defend our own privacy, and we cannot hope that governments and institutions or corporations will do it for us. And we must do it with technology. The Crypto Wars 1.0, historically speaking, conclude with an epic ruling in 1995 between Bernstein, a cryptographer, and the Department of Justice, where the Supreme Court of the United States ruled that code is indeed speech, and that the export of code cannot be regulated like arms technology, and it must be treated under the First Amendment. So although, in a legal sense, the crypto wars were won with this ruling, the fight continued, and you could even say just started. So in the 1990s, the FBI decided that we should implant a piece of hardware into all communication devices called the Clipper chip that is meant as a backdoor to read your messages and share it with the good guys before you send it to your loved ones. This reminds us of new policies that are being enacted and enforced today, namely chat control that is currently being discussed in Europe and that needs strong opposition from our sides. And in 2013, we've learned that the good guys aren't maybe the good guys after all. Snowden revealed the biggest leak in info security of history, where he was able to show that the United States was engaging in all-encompassing surveillance of the entire population of the planet Earth, every single message that you write on the internet. And the story continues. So 2016 was a pivotal year where we had two very major events. First, the battle between Apple and again the FBI, where the FBI was trying to coerce Apple to open up their iPhones because they wanted to hack into it because of terrorism. And Apple said no, and they won the case. Side note on that, the FBI never needed Apple's permission for it. They already had a crack. They just wanted the precedent. And in the same year, WhatsApp flips the switch and turns on end-to-end encryption for over 1 billion people. In the history of cryptography, probably the most significant event in terms of numbers. And look here, in 2020, suddenly the EU Commission instructs their staff to use Signal. Wow, things have changed, haven't they? So the narrative has flipped. Privacy suddenly became the best practices for the most senior and official places. And the reason this happened is not only because of the technology that was developed. The technology is there. But mainly because the narrative has been pushed by ordinary people, by activists, by educators, who fought for decades and decades to move the discourse from one side to the other. So I wonder, how did we move from here to here? In the Bitcoin space, we are well aware of the fact that half of every transaction is a monetary transaction. Money is everywhere. It's part of your speech, your identity, and your social map. So how is it speech? Imagine you make a donation to a political party or a movement, you want to support a protest, or you buy a book that has some political message inside. So the things that you spend money on express your speech in a political and societal sense. And indeed, the US Supreme Court agrees again. They have also ruled that spending money is speech and therefore must be protected under the First Amendment. Money is also identity. Your transactions reveal your most important markers, your political preferences, your medical conditions, your religious affiliations, your social affiliations. And I also define your social map. So your money reveals where you have coffee, it reveals where you go to therapy, it reveals with whom you go to cinema. Spending money does not only reveal information about yourself, but it also reveals information about your surroundings and the people who interact with you. So ask yourself, what do your last 10 transactions reveal about you in this very moment? I mean, we're on a Bitcoin conferences, and hopefully your 10 last transactions were actually Bitcoin payments, so they don't reveal much. But if you also use your credit card in the last couple of days, it might reveal that you're in Riga, but might also reveal that there's a bunch of other people who also swiped their credit card for the first time in Riga. So maybe there's a Bitcoin conference going on. So let's see what happens when dictatorships and also democracies can limit the way you can use your money. And this is a very important topic for us in the Bitcoin space. We can start with Chinese social credit score system, which the regime in China uses to control their population and especially their political expression. In 2019, during the Hong Kong protests, the Chinese government really cracked down really hard on the protesters, closing their bank accounts, putting people into jail. And those people coming out of jail around these times, but since they have been burned once in their past, many of them will never be able to get a bank account ever again in their life. And this is what they're facing today. But it's not only the Chinese communist authoritarian regime that does this. It's also the free democracies in the West that punish political dissent using financial oppression. So we all know the story from WikiLeaks in 2010, where PayPal and Visa blocked the donations to the service. We know the famous quote by Satoshi, who said someone kicked a hornet's nest, and then Satoshi chose to leave. But also the Canadian protest in 2022, where a legal protest was punished by the democratic government, and these people's bank accounts were frozen, and they still suffered the same issues years later. Another crazy event that almost happened is PayPal 2022, in this whole political environment of misinformation, in quotes, decided that they would fine their users for spreading misinformation online and just take money from your PayPal account to punish you for some arbitrary thing that they invented in their head, that this is something to be worth punishing. They retracted that, I must say. So obviously even the CEO thought that this was a stupid idea. And lastly, we need to mention CBDCs, because everything that we've seen so far is built on the old financial system, so to speak. But CBDCs will enable this kind of oppression and financial punishments on a global scale. And I think when we mention CBDCs, we must also mention stablecoins in the same breath. They're basically the same thing, just two sides of the same coin. So where we are right now. Today, we're fighting the crypto wars 2.0, and it affects us directly. It's not only the cryptographers that try to build private messaging anymore. And namely, we have two very important events that happen in our space, which is the Tornado Cash trial and the Samurai Wallet trials. So in 2022, the OFAC sanctions code for the first time. Unprecedented event. And just a couple of days ago, Roman Storm has pled guilty for MSB charges, although the entire operation that he had was a non-custodial form of financial software. 2024, the Samurai developers are indicted, and they also accepted a plea deal a couple of weeks ago with the courts, accepting money service business transmission charges against them. Again, a non-custodial tool that is being classified in a way that was not predictable. The message that they want to send here is very clear. If you work on privacy software, then they will come and hunt you. And this all happens in a backdrop where academic studies show over and over and over again that the vast majority of crypto payments are fully legitimate transactions, and especially compared to fiat payments, are more legitimate than not. So these actions, they are not only to attack these projects, they want to paint privacy software in a light that makes the use of privacy software suspicious by default. Hal Finney famously said, "The computer can be used as a tool to liberate and protect people rather than to control them." So how do we do that? First, we need to shift the narrative, and this is, I think, the most important lesson that we have from the Crypto Wars 1.0. We need to reframe the debate. And here I want to mention the work of the HRF that is really doing an immense job at pushing this narrative forward. And importantly, we need to highlight the need for financial privacy in a perspective of human rights and democracy. So examples of that are, for example, in Nigeria 2020, where a feminist movement was blocked from financial access from their regime, and they switched over to Bitcoin in order to operate their fight and continue fighting their fight. Or in Belarus 21, where the criminal regime of Belarus sanctioned journalists and put them into jail and cracked down their entire operations, and they required crypto and Bitcoin to function and criticize their government regime. And we also need to personalize the issue. This is how people work. This is how people build intuition. We need to tell stories of individuals that are relatable, so that your mom, your grandma, your friends can actually relate to the stories. It's not only a technical story, it is a human story that we need to tell. And we need to strengthen the coalitions between devs and NGOs and journalists so we can all pressure policymakers together. Developers working on their own on solutions is not enough. The technology alone will not solve the issue. We need to build coalitions and groups and work on this together. And finally, we need to advocate for tools that already exist. We need to tell people why Bitcoin is important and how they can use Lightning so they can make small transactions, and how to use Cashew so they can use custodial systems that respect our privacy, or messengers like Signal or White Noise or Tor, such that these become more prevalent in society and spread in use. So I'm going to end with a quote by Phil Zimmermann, the inventor of PGP, end-to-end encrypted email. And he said this in 1991. If privacy is outlawed, only outlaws will have privacy. This quote is so old that many of the people in this conference were not even alive when it was said. So this fight has been going on for decades at this point, and there is still so much to do. Thank you for your attention.
All right, we're just going to get the stage set here, and then we'll begin our final panel of the Human Rights Foundation block. Check, check. All right. So this next panel is entitled Bitcoin as a Tool for Freedom. And I'm going to right away welcome to the stage Hadia, Gafar, Richard, and Femi. Please come on up. We'll do some more formal introductions once everybody gets up here, but please give them a warm round of applause. Okay. So before we kind of dive into the meat of the conversation, I do want to quickly go down the line again to familiarize everybody in the room with what the wonderful people here on stage are currently working on. So maybe, I know we're kind of separated a little bit, but Ghaffar and Hadia, maybe I'll start with you guys. Can you tell me a little bit about what you are currently working on?
So 5 years ago, we founded Groundswell Project, and it's basically an organization set up to empower vulnerable individuals, women, refugees, anyone who is easily exploited in society, exploited by criminals, exploited by terrorists, exploited by governments. And, you know, we set up a whole project and program to basically empower people across the world, across different communities.
Awesome.
What she said. I would just add, in our view, financial autonomy is a basic human right. And it's a human right that's not being spoken about enough by human rights organizations. And this is something we want to bring to the forefront of the debate around human rights.
Perfect. Richard, I'll go to you next. Can you give yourself a little intro?
Yeah, so I'm currently working at a foundation where we sort of defend democracy, and the way I do that is through organizing these democracy tech hackathons to help tech entrepreneurs basically develop solutions to democracy's problems, mostly in Eastern Europe, in Ukraine, Georgia, Moldova, and Armenia. Currently, I don't do any work with Bitcoin, but really I attended the Human Rights Foundation's Oslo Freedom Forum last year, and everything changed. And that is going to be sort of the case for our conversation today.
Awesome. And Femi, I'll go to you last.
Yeah, my name is Femi. I am the Global Bitcoin Lead at the Human Rights Foundation. I run our Bitcoin Development Fund, which supports projects that help us make Bitcoin continue to be great freedom money for human rights activists operating in authoritarian regimes, but also helps us get Bitcoin to them in tools that makes it easy for them to use.
So I find that a lot of these discussions, they have more impact when you can see the human side of things, when people can relate to or identify with the impact that it's having. So this is kind of for everyone, so I'll probably go down the line again, but I'd love each of you to share a small story from either your work or just your general experiences where Bitcoin has directly empowered someone in a challenging environment, and also what's one big lesson that you've learned from that experience. And maybe Femi, I'll start down with you with your work with the HRF, all of that. What have you seen and what has impacted you and impacted others around you?
Yeah, so like I said, I'm from Nigeria, and interestingly, Kale mentioned the protests in Nigeria in 2020. So in 2020, Nigeria had its biggest protest in a long time. And interestingly, the protest was against a unit of the police that was targeting mostly young men and extorting them. So the police would arrest a young man if he has a earring or he has dreads like Richard. They assume, or they see a laptop with him, they assume he must be a fraudster. They start checking his emails. They take him to an ATM and empty his bank account. So Nigerians got frustrated, and across the world, Nigerians mobilized to tell the government to close that unit. The protest was more organized than most protests in Nigeria because we had decentralized organization of legal aid, decentralized organization of food for people who were protesting. And then when the government tried multiple means, they went after freezing the bank account of the people who they thought were the leaders of the protest. Because again, it was a protest where people said explicitly, we have no leaders, we're decentralized. And Bitcoin came to the rescue. People across the diaspora sent funding to the protests with Bitcoin. When they froze bank accounts, the operations could still continue using Bitcoin. And that for me was the first time, at least from a practical standpoint, I saw Bitcoin being used effectively in human rights. Within the foundation, one of our colleagues who used to be the CFO of the Anti-Corruption Foundation, Alex Navalny's foundation in Russia. Interestingly, I think in our own case, they went into their bank account one day and they didn't just freeze their bank accounts. The Russian government put them in debt to the tune of minus $13 billion in their bank account. So imagine being the CFO going to your bank account to pay salaries, and you don't just see zero balance, you see minus 13 billion balance. And the only way the organization could continue their work was using Bitcoin as a lifeline. So I've seen instances where people who want to stand up against authoritarianism find that when they go after the money, which is the easiest way to squeeze out air from a protest or a movement, that the best way to continue to operate is money that they can't see. They can't see who you're sending it to. They can't see who you're sending it from. Because in many countries, if they see on your bank account that you got funding from the HRF, which is an American organization, the first thing the government does is they brand you as an American spy. And that becomes their reason to actually taint your protest. So this is something that we see constantly in the work.
Awesome. Gafar, I'm going to go to you next. And given that you and Hadia are working together, I'll let you kind of play off each other and see if you want to tag in together.
We could probably give different examples. I'm going to go back to the one I mentioned in my talk earlier about remittances. So this is a conversation I had with a close friend who told me that, Sri Lanka is very remittance dependent. People, the local economy is not very strong, so people send their sons abroad to work, to send money back, and some families are very dependent on those remittances just to survive and be able to afford basic goods and necessities. But if the local people know a particular mother is regularly going to the Western Union to collect money, she becomes an obvious target for all sorts of violence and extortion. And that makes her life very difficult. Imagine the psychological impact of knowing that people know I collect money every Thursday at that place. And that has a psychological effect on her. That's very detrimental. But then being able to receive that money as a lightning payment and then suddenly, that's the privacy you talked about, Femi. Being able to have financial, privacy and not be a target of violence, or kidnap and threats. It was life-changing for her, really, and for the community, because some of these gangsters have no one to chase. If it takes off in a big way. So I think that's a really interesting use case of where Bitcoin solved a real problem.
Hadia, I'll let you tag in as well.
Well, you gave a different example. I hold generational trauma. I think that's a big buzzword now. My mother was a refugee. She was almost kidnapped by the dictator Idi Amin. And these are stories that I grew up with. And my father, coming from the global south, came from extreme poverty. A lot of them say they always talk about how they don't have shoes. And you're sitting there and you're just feeling very guilty that you've got shoes. And, I don't know what they were trying to achieve, but I'm sure they wanted to pass down, like, you are so very lucky to have all of these things. And I went this step further and thought, okay, yes, I'm lucky. What do I do about this situation I am in? I'm very lucky. So I dedicated a lot of my work to working with refugees and asylum seekers and looking at ways to empower them. When I came across Bitcoin, it was very much aligned with the understanding of injustice and redressing imbalance. And I've been working with women and these communities for decades, and I wanted to know, how could I relay this message to them? When I was at the Human Rights Foundation, I was thinking, this is too good to be just kept in this space. I need to spread this. And it was quite daunting because I was like, I know I have to do this. I can't do it alone, but it has to be done. And so I invited Gafar to join the organization. I was like, come and help me. And we set up trying to educate women around Bitcoin, refugees around Bitcoin, and how they can potentially escape all of the blocks from no bank accounts to getting loans for businesses and empowering themselves. So the kind of aha moment for me was when I got the understanding that this needs to be a message that has to be spread, and looking at the people who would need it most. In the UK, I just want to give an example of what the situation is. There are asylum seekers and refugees in hotels. They've been in no man's land since 2020. They can't work, they can't have bank accounts, and they're just being left. So we've been going into these hotels and trying to educate them on how they can potentially come out of that, sticky situation. So I don't know if that answered your question, but that's the kind of passionate thing that affected me when I understood what Bitcoin does. The philosophy of Satoshi is very much aligned with what we're doing, and how can we push that messaging, to the people who need it? And I'm here with fellow people trying to do that.
Awesome, awesome. Richard, I'm going to jump to you next. Is there an experience or a particular thing that you've come across where somebody was empowered by Bitcoin that really spoke to you or stood out in your mind?
I think I'm going to share a personal story. And to those of you that don't know, the dictator that Hadia was talking about, Idi Amin, was a Ugandan dictator. It doesn't mean that things are better now in Uganda, where I was born and raised. I've spent the past 10 to 15 years basically dedicating my life to fighting the dictatorship of Museveni. I started doing that through hip-hop music because it gave me a voice to really speak up against the powers that be. And then when I moved to Europe, I sort of continued with that mission, but differently. I just spoke about the hackathons that I organize in Eastern Europe. But what happens after you've been doing the same thing for 5 years, something that you really so passionately care about, but from year on, you see that things are getting worse and worse and worse. And this has been the case. You're doing the right thing, but really, because the system and the way it's designed, it promises you a certain kind of freedom that is always distant. And it can be very depressing and demotivating. And there was something that happened when I discovered Bitcoin, something that I was also talking to you about yesterday. It felt like it was the last piece of the freedom puzzle. When it hits you, you know this is the right thing. It's just so difficult to actually to convince the people, because the systems that we're really operating in don't allow us to put this knowledge to the people that deserve to hear it. And that's why we actually, I'm stepping out on stage for the first time to speak about Bitcoin, because I'm very convinced that this is the solution that the world needs to achieve that freedom that we're all fighting for. And the spaces like Oslo Freedom Forum, it is a special place, because people like me, we really care about democracy, we care about freedom, but we don't know that there is something else that can allow us to have that freedom. We don't really come to Bitcoin conferences because it's usually very distant. So these spaces that allow us really to, come with the mission that we care about, but still learn about Bitcoin and how it can change the world. This is really the story.
Something that struck me about when we were talking outside yesterday, you effectively said, I've been doing all of this work for quite some time, and I felt like I had an intimate understanding of the word and the meaning of freedom, but then I encountered Bitcoin, and I felt like I completely shifted my entire perspective on what that even means. And that was pretty powerful. And on top of that, this is very new for you. You said you've just fallen down that rabbit hole a year ago.
It's been a year. I mean, I've spent a lot of time on your YouTube videos, Ben, so thank you so much for that. But really, what Bitcoin does to you, I mean, I don't look at the number go up. I'm a freedom go up person, but it allows you to see the duality of the world that we live in very much clearer. On the one hand, we have, the Bitcoin world where there is a lot of hope, there is a lot of love. You see a bright future out there. And really in the fiat world, no matter how you're fighting for freedom and democracy, there is something wrong. You can feel it, the corruption, the lies, but also the truth that's not told about money. And when you read about money, you almost get sick. I've spent the last 6 months thinking, how can I actually get out of a system that I don't believe in anymore to dedicate my time and energy to something that I care about? And that's what Bitcoin does to you. It refreshes you so that you can start spending time on the things that you care about, the podcast, or even spending time with your family. I see Bitcoiners here coming with their families, and I think this is a true instance of Bitcoin, to remind you Where can you best invest your time and energy for the greater good of the universe? And that's beautiful.
I love that. And the interesting thing, and I'm gonna tee this up for Femi, because you were telling me that you know, going to human rights events and being present, and then you kept on, and I think it was Gladstein that kept on saying, get over to the Bitcoin room. Come on, no, leave me alone. I'm not going in there. And then you ended up seated at a table at a dinner with a bunch of Bitcoiners, and you're like, these people are on an entirely different planet. I don't know what's going on, but it spurred your curiosity. And this is something that I've encountered going to the Oslo Freedom Forum. The difference between 2022 to the subsequent years, I feel that it's a huge shift from skepticism and rooms that basically the Bitcoiners would just kind of aggregate together, and there'd be very few actual activists in the room. And the questions that they would ask, I felt initially came from a place of, I'm going to ask this question as like an intentional gotcha so that I can prove that this couldn't work, to this past Oslo Freedom Forum being in the room, and the number of activists has far overtaken the Bitcoiners in the room, and most people are there from genuine curiosity and the multiple touch points they've realized this actually can be an effective tool in their tool belt. So Femi, I want to tease some of that, and maybe you can tag in here and add some of your perspective about how effective it's been, and the shift in mentality of the general kind of Human Rights Foundation and the people attending those events, how that has changed and what you've seen on your end.
I mean, it's interesting because two years ago at the Oslo Freedom Forum, I met Hadia and Gafar. Last year, I met Richard. I think what's interesting, and I was having a conversation with someone yesterday about Bitcoin education, is I think the better way to educate people about Bitcoin is not to make it about Bitcoin. It's to make it about the person and the problem they're experiencing. My frustration, and we fund Bitcoin education work, and I said earlier, is a lot of what we call Bitcoin education is people coming to talk at people about this technology. Yes, you find it wonderful. It's the best thing since sliced bread. But the other person doesn't really give a shit. What they care about, what every human being innately cares about, is themselves and the problems they're experiencing. So what the better way to go about it is, rather than talk about Bitcoin, actually be curious about the person. Ask questions about who they are. Find out what they're experiencing, what problems they're facing, and then help them figure out how Bitcoin can be a solution to a specific problem they're facing that touches money. And if that's all they know about Bitcoin in that moment, let it just be that. And I think in the context of human rights activists, and Ben, you're a part of the journey of the webinars we do every quarter, we don't make it about Bitcoin. We make it about the financial repression experiences that people who are trying to fight against dictators experience. And you talk about their problems, people who have been debunked, people who have had to flee for their lives and couldn't live with any of their wealth, people who had their donors, people who donated to them, being arrested for donating to them, or in the case of a journalist in Angola who had the government speak to all the businesses in the country and said, if you advertise in his newspaper, we go after you, so that they squeeze him. And so the conversation is not about him trying to understand Bitcoin, this wonderful technology. The conversation for him is, how do I find a tool that helps me transcend this problem that I have? I think we've had more of that in our conversation, our engagement with the activists. You gave the example of Berta, who started as an activist trying to get her husband out of jail, to someone who is now an active Bitcoin educator. In the grants we give, we also give grants to activists too, who are using and who are increasingly using Bitcoin in the course of their work. So the engagement changes,
when it's not, oh, that's the Bitcoin crowd and we are the activist crowd. We have a problem in the course of the work that we're doing that's very important to us, that we're very passionate about. The people that come to Oslo are some of the bravest people in the world, because for a single 5'2" woman to stand up against Putin and the might of the Russian government, you have to be immensely brave. And for them to see Bitcoin not as that speculative thing that everybody screams about, to a vital tool that we use to do our work, it changes the game, and it changes their interaction, and it changes the way they see the technology, and it makes it easier for them to engage with the people who are working on the technology. So it's no longer, those are the Bitcoin crowd, these are us. It's you guys are helping build tools that empower us to do our work. And that makes the engagement much richer.
I think just building on that, and agree with what you say, Femi, but I think the problem is so difficult because people have problems that they don't even know is a problem, and they don't even, it's so embedded. Now, one of the things we don't have, certainly in the UK, we don't have financial education. When you go to school, you learn all sorts of things that you're never going to use in the rest of your life, like algebra or something. But we don't talk about money. What is money? How do you spend money? How do you save money? All just the basics, investing. It's just not taught. It's just not talked about. So, for example, in India, something I was reading about the other day, women get a lower credit rating just for being women, for no other reason. If you're a female, naturally your credit rating is lower in India. Now, people who grow up in that culture just think that's just the way it is. I've got to work with this system. So Bitcoin represents a reset. Because actually we can get away with hundreds of years of cultural conditioning where you get to a situation where a woman would naturally have a poorer credit rating because she's female, and say actually no, we can create a level playing field. But people don't even know that's a problem. So when you come along and say, here's a solution, they're like, well, I didn't even know this was a problem. So you've got to identify the problem first, Yeah.
And I agree with that. However, to be clear, not everybody in this world is excited to have those deep conversations about financial architecture. You will get them on the journey to those conversations. But the starting point is you need to get them in the door. And the easiest way to get them in the door is find something that's crucial about them. So if you have a conversation with the woman, what are you doing? How's your life? Where's your husband? How are your kids? And you guys do it in the course of your work. The conversations you have about Bitcoin to those women is taking into consideration their culture, their tradition, the things they are going with. And the questions they ask you is also tied to that. So it's not Bitcoin for Bitcoin's sake. It is you, the human being, that is important. And this is the tool that helps you achieve what you want. And so the starting point is critical, but if we don't get the starting point right, the tendency that we turn people off completely, and then they lose the opportunity to get the deeper message. And then as long as what we start with them is a journey that then helps them get deeper as they go on, the better. A lot of conversations in the space about custody or self-custody. When someone is coming into Bitcoin the first time, give them the easiest thing that they need to actually use the technology, and then take them on that journey.
Can I just come in again with that? It's not an easy feat to go into a new community or a marginalized community to talk about Bitcoin. But I just want to show you, the journey where I was like, Gafar and I were like, we are going to do this. And this is an image here, hopefully you can put it up, of us doing actual training. And can we get that up? Just to give you a...
I think they were showing, yeah.
Yeah, so there's training going on there. And we cannot underestimate the intelligence and ambition of these women. Talking to somebody about Bitcoin in the West has been very tough. My white friends, my English friends just think I'm really dodgy and just stop talking about it. I was in the room in London with Gafar, and we could just see this black, we didn't see anything, did we? And we don't know who's in the room, what's going on, do they even understand what we're saying? But we were so pleasantly surprised how they just got it. Women get money. And everybody was agreed that they are better with money than their husbands. an example, I just want to show you what we were doing. It went better than I'd expected. I was so encouraged by this conversation. And I said, human rights have the Bitcoin Humanitarian Alliance. So when you bring people out of poverty, you make them less vulnerable, and we empower people through finances. With, if you just want to bring up the spices, in this conversation, there were some women we sell food at kiosk, but we can't get a loan. We don't have a bank. Our kids are hungry. Our family is suffering. Our kids are being recruited by Al-Shabaab, some, terrorists and all sorts of things. And we cannot, compete with these guys, but we want to earn our money. And, these are not stupid women. These are very intelligent women. And there's plans, hopefully, to help these women out of poverty through helping them through. One of the ladies has a business making spices. She can't get a loan from a bank. And we're looking into the possibility of giving her a loan through microfinance, through Bitcoin. That would improve her life hugely and her family's life. And just again, we haven't got much time, but I wanted to share my enthusiasm and encouragement that this is not just, it can't be done, it's too difficult, it's quite easy. I got encouraged, basically. This last testimonial made me realize how intelligent these women are. She's like, Bitcoin is a type of cryptocurrency. It's not controlled by the government bank. She is listening to me and Gafar from London in that space, getting all of it, everything. There's only 21 million Bitcoin. I'm interested to know more about Bitcoin and to buy and carry out transactions. And they're asked if they were a majority Muslim, and they're like, is it halal? They were switched on. So I'm going to be doing more of these types of education with the plan to give them understanding of how they can improve their lives. That is all we want to do, and we want your kind of support.
That's awesome.
Just quickly on that point about halal. So in the Muslim world, there is a conversation about halal and haram money, i.e. money that is allowed and money that's not allowed. Fiat money is actually haram. Islamically, it's forbidden. Just the Muslim countries have just found some clever legalistic ways around it, but essentially it's not allowed. Everything must be backed by something. Bitcoin, I've written an article about this for Bitcoin magazine. Bitcoin is the most halal form of money to ever exist. And this hasn't taken off as an idea, but it's so compliant with it's a Sharia principle of finance. It's unbelievable. It's almost like they were written for Bitcoin. It's so halal. It's amazing.
It's so halal. That's what we said.
All right, I'm going to do a quick lightning round down the panel. We're in the room with a lot of kind of veteran Bitcoiners, people that are also building a lot of the tools and services and things like that. I would love each of you to give a quick call to action for the Bitcoiners in the room that can help supercharge the work that you are doing. And Femi, I'm going to start with you. What would you beckon the Bitcoiners in the room to do?
So I give away money for a living, which is good, and I think it's something people may want to hear. But I'm constantly looking for good ideas that can help us turn all the things we're talking about into practical reality. So if you're working on an interesting project that you think can add value to Bitcoin and to human rights activists across the world, reach out to me for a conversation or go to our website, hrf.org/devfund, apply for funding.
Perfect. Gafar, how about yourself?
A wise man once said, birds born in a cage think flying is an illness. I think for me that essentially talks about the use cases. We need to create more awareness of the use cases and just how many problems Bitcoin can actually fix.
Awesome. Richard?
I mean, I see Bitcoin as therapy for the hopeless, and I see Bitcoin as the future of philanthropy. Bitcoin needs faces like me because there are people out there in the world that can't relate to Michael Saylor. So really, we're here to push the same cause forward, users.
Awesome. Hadia?
the devs are the brains, we're kind of like the hearts, and we need this symbiotic relationship to make this work. We have to stick together, learn from each other, come and learn from our work, come and engage. I don't know what that will look like because, you know, let's face it, this whole thing is an experimental, but with the correct intentions, with the right heart, with the right, mindset, I really believe we can, we can make this happen and make it work together.
Perfect timing. Thank you all so much. Please give her a big round of applause. Stay tuned. There's more coming up. Thank you for being here for the Human Rights Foundation block.
Every heartbeat, every move, something pulls me back to you. No one else can see what's real, but I know you feel it too. Only we have the silent link, talking in a way they'll never think. Every glance, every time.
Testing, testing. Is that working? Hello?
Testing. Okay. All right. How's everybody doing? Hanging in there? Okay. This next one is an exciting one. And one of the things I really like about this conference is we're just basically talking about freedom tech in general and not just Bitcoin. And our next guest that's going to come up here and talk, Jeff Gardner, is, in my opinion, just such a respected engineer in this space. And what he's about to show you is beyond exciting. Everybody in here is familiar with Signal. Everybody in here is familiar with what the mission or what supposedly Signal is supposed to represent, which is a decentralized, fully encrypted communications channel between two different parties. Whether that's true or not, I can't audit the code. I can't tell you whether that's what is actually happening in the background. And with Nostr, with a lot of the technology that Bitcoin has incentivized, that where Nostr really kind of evolved from, which is this decentralized communication layer and identity layer. You got Jeff, who's building what could potentially be the next Signal in a very decentralized kind of way. So it is my honor and pleasure to bring Jeff up here, very talented engineer, to talk about this idea.
Thank you, sir. That was very kind. Okay, cool. So this is a little bit of a black pill talk for the first little bit, but stick with me. It will get a little less black pilly by the time we finish up. So the product that I'm working on is kind of two parts. There's a protocol and kind of encryption standard and a bunch of libraries underneath, but the thing that we're building on top of that is an app called White Noise. And we are building White Noise for the dark times that we live in. And make no mistake, these are definitely dark times. We have been seeing the number of liberal democracies across the world in decline for the last 19 years straight. It's now at the lowest level it's been in the last 50 years. We know that 72% of the world's population lives under authoritarian rulers right now. That is climbing still. And only about 17% of the world has actual free, unfettered access, unrestricted access to the internet. And we know that these times are getting darker. We are not turning this around anytime soon. We have laws like EU's chat control. We have the Online Safety Act in the UK. We have the UN Convention on Digital Cybercrime, which is basically just more surveillance. And all of these laws are increasing in pace and in speed. You know, you can't even use tools like Spotify in the UK now without scanning your face and sending them your passport, your government-issued ID. We know that as well. There's many governments around the world that are putting CBDCs into place, putting digital IDs into place. We know China has social credit scores that they use against their citizenry regularly. And in so-called Western free democracies, we have companies like Facebook, like Google, like OpenAI that are tracking as much data as they can get about you in order to profile you, to sell you more crap you don't need. I actually went into a family WhatsApp group there recently and tried to turn off AI's meta feature, and I noticed that it's actually bundled with being able to save photos back to your camera roll. So if you want to turn off AI's spyware, or Meta's spyware in there, you actually have to make it so that the group becomes super less useful for, you know, your grandparents or your parents. So it's things like these that are contributing to the fact that these dark times are not getting any better anytime soon. And what this all comes back to is centralized control. We have ended up in a place where we have outsourced all of our thinking and all of our responsibility to highly centralized entities. And this has been done mostly under the guise of this false dilemma that it's either security or privacy. It's either a functioning system with convenience and ease of use, or it's privacy. That you can't have both of these things together. And so we have given them kill switches, we've given them these choke points, and they love these choke points. They send all your data through systems that they control so that they can both store it, track it, use it to profile you, but also to stop it whenever they want. And so we have pretty much given them the keys to the castle. And I think everybody in this room would agree with the statement that you cannot have real liberty, real freedom without privacy. This is not just a cypherpunk ideal. John Locke wrote about this in the late 1600s. It has been a very well-documented, well-understood fact about how humans work. We have to have the ability to have our own private thoughts. We have to have the ability to discuss hard topics, sometimes really uncomfortable topics. We have to be able to push back on authority if we want to have any sort of progress that is meaningful and in a direction that actually benefits humans rather than destroys them. So I think that we need to really protect, Bitcoin has done an amazing job at giving us the ability to have free transactions or have protected transactions that are very censorship resistant. We can now carry our money without any intermediaries, but we are very rapidly losing the ability to talk to each other or to talk in groups in that same way. And so to me, private comms is the most important thing that we can work on right now if we want to protect free speech and free assembly, which then gives us the ability to protect many of our other rights. And today's tools fail us, right? Like, we know this. Like, this is, I won't beat the dead horse forever on this one, but today's tools do not serve the users. We had this very weird quirk in the early internet. If you go back and look at the original HTTP spec, the specification that basically defined how the internet works, there is this status code, 402, that says, pay me, basically. You would hit a website, and instead of sending you the content, or a 404, which would mean, no content found, it sends you a 402 and says, pay me for this before I'm going to show it to you. But it never got implemented because we never had the ability to do proper microtransactions in a digital space in the correct way. And so we ended up with Visa and MasterCard and Stripe and Meta and Google and a system that was basically immediately going to centralize to a handful of monopolistic huge players. Social media did not help this at all. We ended up with some very large computer, tech companies. We ended up with the very beginnings of the cloud. Social media has driven us into much more polarized scenarios than we might have otherwise been in. We all know this. The research is absolutely clear. These algorithms are not serving us. They're not serving the public discourse. They are serving ads. That's it. That is their entire goal, and they are extremely, extremely good at it. And artificial intelligence, to me, is, on one side, it's the most incredible technology I've used personally in a very, very long time. Anybody in here that programs or has to write large quantities of text or has to just do basic research on things knows that this is absolutely life-changing technology. However, using it in a convenient, fast, easy, cheap way is also feeding all that machine, that monster, with all of your data, continuing to give it more and more and more about you. I heard something recently, I think it was Kale actually who pointed this out, that Google and Facebook did a bunch of research. I think this was specifically as Facebook. They did a load of research where they can tell you more about you than survey data that you would fill out about yourself by how your mouse moves. By how you use the site, by how you click on things, by whether you double click or triple click on stuff when you're in a rush. They could profile and understand more about you and identify you out of a crowd of people with data that's that simple. So now hand them, multiple football fields worth of GPUs and hundreds or billions of dollars to train these incredibly complex, incredibly intelligent models with, and they're going to do it. And the people that are going to suffer is going to be all of us. So how do we fix this? To me, there's only one way to get back out of this, and it's that we need to go back to open protocols. The beginning of technology was all about open protocols. The beginning of the internet was an open protocol. Email, an open protocol again. And all of these things over time have been co-opted simply for convenience. We've basically handed off all of our agency in return for a more convenient way to use the internet, technology, and go through our lives. And I do understand that. That makes total sense. People are busy. You've got kids. You've got work. You've got things that you're rushing around to. I understand that this is a reasonable trade-off for most people. But in aggregate, I think we have to pause and think about this a little bit more and make a hard choice and say, no, we're actually going to do the harder thing because it's the right thing to do. And this is where, Nostr gets really exciting for me, because Nostr is a completely open protocol that's incredibly simple. You can read the entire required part of the spec in about 20 minutes. You can understand and have a working app up and running in probably less than 10 minutes with an LLM now. And that gives us a really good way to get a very healthy, very large developer base building incredibly exciting technology that is completely open. So what do I mean by open? First off, I think it's really important that we get rid of these intermediaries as much as possible. Bitcoiners understand this, right? Like, we don't want trusted third parties in the middle. We want to minimize trust as much as possible. Nostr obviously doesn't get rid of all intermediaries. It is not a peer-to-peer protocol. Nostr has an array of relays in the middle. And those relays, while you are trusting them with the data that you're sending them, the trope that we have in Nostr is smart clients, dumb relays. We want the servers to be really, really stupid. We want them to do two things: accept messages and store them, and reply with messages when they're asked. That's it. We don't expect them to do any processing on them. We don't expect them to do any sort of stat calculation or anything like that. And I think that's really important, because we want to have the middlemen be as replaceable as possible. We are happy to give them data where it makes sense and in the right ways, but we want to be able to turn them off at any point and turn around to another provider in the middle and not have any sort of disruption to the service that we have. So that's the first one. We need to minimize the intermediaries that we have, and we need to very, very strictly define what we expect from them and how replaceable they are. Another thing that's really cool about Nostr is user-owned identity. You could, like my friend Max says, you can lock yourself in a bathroom with a pair of dice and create a Nostr identity. It is just a Schnorr key pair, just like a Bitcoin address. You get a public key, you get a private key. Now, unlike a Bitcoin address, you can't move your identity, so it's a little bit trickier. But user-owned identity is something that we've barely scratched the surface of. When you give someone Nostr for the first time, you sign them up for a Primal or Damus, they use an app that looks like Twitter, they're there shitposting, they're getting zaps, they're enjoying it, and then you take that exact same key and turn around and plug it into a Messenger app, and they see their entire follow graph come with them, and they know exactly who they can connect to and talk to without having to do any extra work. For most people, that's kind of a magic moment. And that's kind of the very beginning of that track. We have Cashew wallets that are stored on Nostr relays in an encrypted way so that your money follows you around through Nostr as well. There's all sorts of things we can do with this that I think get really, really exciting when this network gets really big. Like I already said, relay choice is huge, and that relay choice plus user-owned identity means that Nostr is very censorship resistant. You can take your identity, you can move to a different client. If the client disappears, no big deal, just pick another one, or fork it and build your own. If the relay disappears, no big deal, just use some more. If the relay starts acting weird or starts being not a good actor in the space, stop using it. It's as simple as that. And these relays, again, are very, very simple pieces of software. They're like basically databases. You can run one on your phone, you can run one on your laptop, you can run one on a server somewhere in the cloud. So that brings us to the stuff that I've been working on for the last while. So Nostr in its early form was really meant to be a fix for social media. The original spec and the original doc that Fiat Jaff, the creator of Nostr, wrote goes into detail about how to fix effectively Twitter and the problems that Twitter had. It really didn't have an idea of how to do private communications at all. And it wasn't until a few months into the project that Ben Arc actually created the first kind of attempt at how we were going to do private messaging. And it was a very naive attempt. It wasn't meant to be super secure. It was just literally, let's try and see if we can make this work. It was quite bad, to be honest. It leaked all metadata about who was talking to who and when. It encrypted the content of the messages, but again, because we're using public relays, we are sending messages with encrypted content, but has all the metadata around it directly to the relays. So very quickly, people built bots that would basically just report on who was talking to who in the public, discourse in Nostr, which is a great way to get some, solutions in place really quickly. And quite a few other developers started working on a kind of second version of encryption or direct messaging on Nostr. And that second version was a lot better. It used a much more robust version of encryption for the content, and it wrapped the message in another message that hid who was actually talking to who. So you're able now to send messages to another user. No one knows who sent that message to you. No one knows what the content of the message is. And that obviously is a really big step up. That makes things a lot better. But the encryption on that system is based on you're on a Diffie-Hellman between your keys and the other party's keys, which means that if someone's key leaks, then all the past conversations are decryptable and all the conversation going forward into the future is decryptable. This is what we call double ratchet or post-compromise security and forward secrecy. And that was the major thing that the Signal protocol gave the world. The Signal protocol was the first protocol to figure out how to do both of those things with this ratcheting system. And ratcheting is basically just they change the keys in different ways for different parts of the system at different times in order that an attacker, if they got a key, can't go backwards and they can't go forwards. They might get one message, but that's going to be it. So Signal is a great protocol. And actually, to Preston's earlier point, I think Signal is actually a great actor. I think the CEO, Meredith, is pretty honest. I think they really do try to minimize the amount of metadata that they have on their users, and they do their absolute best to not give that data to any government officials. But they're still a US foundation, and they still have a CEO, and they still have $50 million worth of servers that they have to run every year. So there's a lot of risk there in the fact that anybody could come and take down Signal. I mean, the US government could show up tomorrow, black bag Meredith, shut down the foundation, and the Signal that we all have access to would simply cease to exist. So we need something more robust if we actually want to have private communications that are durable in an adversarial environment like we have. So MLS is an internet standard. It was kind of granted that status in July of 2023, so it's very new. It's an evolution of the Signal protocol that kind of reorients how groups are structured. And I won't go into the technical details. I'm happy to talk about that with anybody that wants to later, but the basic gist is it takes something that is very, that scales very badly from a computer science point of view and turns it into something that scales way, way better. In Signal, if you have a group, you're basically encrypting every time to every member of the group separately. In MLS, you don't do that. And MLS, in that regard, is, in my opinion, going to become the kind of de facto standard of secure messaging across the internet. However, it was mostly designed for a centralized world. And so the MLS protocol doesn't really think about how you do identity, and it doesn't really think about how you do delivery of messages. It sort of assumes you're going to have a big server that's going to give you all that information. And when I talked to the guys who wrote one of the implementations, the one that I use for the MLS protocol, and asked them, told them what I was trying to do, they went, okay, good luck. We haven't seen one working yet, but let us know if we can help. And so I knew that, I didn't have to do the hard cryptography. That was done by the MLS protocol. But figuring out how to apply that cryptography to Nostr's very unique characteristics was what I spent most of my time over the last year on. So White Noise is the app that is building MLS encryption into Nostr. And the way we do that is we create groups. You use your Nostr public key only as an identifier. And so you already have your entire network of Nostr followers and all of that, knowing who you're talking to. That goes into these groups. That identity, that your pub key in Nostr, isn't part of what you sign messages with. And so if your pub key or your private key on Nostr were ever to leak, those groups are completely inaccessible to the attacker. And similarly, if any of the keys from your MLS group leak, just like Signal, they might get access to one small part of a conversation, but they're not going to get access in a continuing manner forward or backwards to that conversation. And interestingly, because of how Nostr's relay system works, we get an even better scalability in this because you only have to send a single message to relays when you want to send a group a message. And everybody in the group knows how to go and find that message, but there's absolutely no metadata about who's in the group, how many people are in the group, who sent the message. There are very specific ways that we've done this to make sure that we're not letting any metadata get out of the conversation other than a single identifier that can be rotated on a really regular basis. So White Noise is a project that we've been working on. It has been released. It's very, very early. It's very buggy. I will definitely put my hands up and say that. But we feel really confident in the underlying technology and in the protocol that I wrote for how to apply this MLS stuff to Nostr. And I think this gives us the ability to have properly secure communications going forward in a way that no one will be able to turn off, and in a way that will be completely interoperable across the entire Nostr ecosystem. So just like if you don't like Primal and you want to change to a different client, you just take your key and go somewhere else, you'll be able to actually just log in to a different MLS client if you don't like White Noise, and you'll be able to join groups that you're already in, and then stop using the other client, stop using white noise if you'd like. And I think that, again, is a really important part. We don't want to have intermediaries, not even me. You don't want intermediaries in the middle that you can't replace. And that goes for clients, that goes for servers, that goes for governments, that goes for politicians, it goes for all of them. Okay, I'll stop there. That's the link to go check out the website if you want. Go join the test flight, go join Android, hit me up with a load of messages about what's broken. We are working on fixing them as fast as we possibly can. And I think I've got about a minute left, so if there's a question or two that people want to ask, I'm down to answer them. Thank you. Any questions, or will we leave it? Okay, cool, thanks.
Okay, up next we have Harold. He's going to come up here. How many people here from the EU? That's what I was expecting. Okay, all right. The next talk is EU, energy, sovereignty, and just societal, well, let me see here, societal prosperity, of course. So Harold's going to come up here. Come on up, sir, and take this away. I hope you guys enjoy this next panel.
Thank you, Preston. So how do we do this? Good afternoon, everybody. I hope you still have something left in the tank, and I hope your voice is still better than mine. But I think we're going to make this together through the conversation. Before I kick this off, I really want to give a big shout out to the organizers first, and Max Kai in particular, because when we met and we talked about this the first time, he said, you should talk about this in Riga, because we have talked a lot about how awesome Bitcoin the asset is, how awesome Bitcoin the protocol is, what it can do for humanity. But I think I want to spend 20 minutes with you and talk about how awesome Bitcoin mining is when it comes to building the enabling environment for societies to prosper. And because, and Preston teed this off for me already, as I am also from the European Union, although I live in Switzerland, I want to make this very, very European focus because it's a relevant conversation and timely conversation for us. I don't know how you feel about this, but I have never seen Europe more desperate, more frustrated, more cynical, and more bearish about the future. And I think Bitcoin has so much to offer to change that narrative. And maybe you can take one or two things away from this conversation that will help you to reignite the fire of a hopeful future for Europe. Now, before we go into the solution, let's talk about the problem. What is the problem of Europe's energy system currently? And we know energy is the basis for any society to prosper. So we need to have this conversation in the first place. This number is magic. It's the 35 terawatt hours of curtailed power, of distressed power that is generated and has no place, or doesn't find any place of demand and cannot be cleared by the proper functioning markets. And this 35 terawatt hours of power corresponds to roughly 2 million households' energy consumption per year. This doesn't sound like much, but as we know also from Bitcoin and any other functioning market, that prices and market signals are generated and originate at the fringes. And what this tells us is that we have an inefficient market that is not working properly, and it sends a very disastrous investment signal for future build-outs and more power generation in the future. The direct costs of these curtailed and distressed power is roughly 3 billion euros a year. Again, this doesn't sound like much, but it constitutes a signal that creates a very bearish environment for power and power assets in Europe. And all of this is due, and now it gets a bit geeky, but I think the technical understanding is key for that, because of a constraint that our grid systems simply have, and that is that they all run across Europe on the 50 hertz frequency. So the 50 hertz frequency, if for those who are not familiar with it, it's like a speed limit on a highway. It says you should not go faster, you should not go slower. It's a unifying language, a common denominator that allows us to manage an electron on a Greek island from a plant in Denmark. And that's quite fascinating if you think about it. How are these 50 hertz managed? We have millions of assets that generate electrons and feed them into these grid systems, and we have billions and billions of off-takers and demand that consumes that at any given point in time. And what you see here is that we have a very narrow window around the 50 hertz that actually needs to be retained and managed, because everything beyond or above or below it actually has disastrous consequences. It's a very dynamic environment. It's not monolithic. It's very dynamic, and oftentimes frequency gets higher than 50 hertz, which means that there is less demand in the system and too much supply with a need to extract power from the grids. Vice versa, if the frequency is too low, there is too much demand in the system, too little supply, and in milliseconds and seconds, new power needs to be supplied into this grid system. Otherwise, the grids will fail. Now, that worked relatively well until recently. And when I say recently, I mean mid-90s. Because what happened is, back then, most of the power that we managed within those grid systems have been baseload. Coal-fired power plants, gas-fired power plants, nuclear, and what did I forget? Hydro. But over the past 30 years, we have increased the fraction in the energy supply that is intermittent power, power that is compromised in terms of its availability. Wind only when wind is on, solar PV only when the sun is shining, to around 33% of the supply mix. Which means we need much better frequency control mechanisms than we used to 30 years ago. Now, research from Japan actually shows, and this is a rendering error, I'm sorry, once we hit, without changing the flexibility management environment, at 50%, grids will start to collapse. We have got a taste of that in Europe earlier this year, when the Iberian Peninsula was for days without power, exactly for that reason. But that's a taster for what is to come. Now, wouldn't it be great, and that's of course a teeing off for Bitcoin mining as a solution to that, wouldn't it be great if we would have an instrument that would, on the one hand, help us to optimize the asset utilization and getting more efficient markets in place, but also an affordable, a reliable and responsive infrastructure that would help us to manage and expand those flexibility management, this frequency flexibility management capacities. On a societal level, and this is where Europe is at the moment really, really trapped. Historically, the predicament that we live in can be best described by what is called the energy trilemma. It is a typical trilemma. You can only optimize for 2 dimensions, and you have to leave one out. And if we look at the European energy situation, we can see that historically, cheap, baseload Russian gas that has provided abundance, energy abundance for Europe, which has powered the manufacturing base of Europe, and grids that were able to manage predominantly baseload heavy energy mixes, were the European solution at the expense of energy independence, because we made ourselves dependent on a foreign nation state that we had literally no control over. Together with the ramp up of the intermittent power led to a situation where we find ourselves now in, where we are locked between we cannot scale, markets are not functioning, but we also cannot use the nutrient that was fueling our manufacturing base for a very long time. But I think what is very important as a reframe in this conversation is we are not energy poor. We are already living in an energy abundant reality. We just need to find ways of how we use this energy better. And to give you just a few numbers and include a little parenthesis around the, oh, Bitcoin uses so much energy narrative. Next time you have this conversation, remember this slide. These numbers are so absurdly big that I wanted to reference them so that you can go back to the literature and test them for yourself. But these are the global data. If we look at existing power infrastructures globally, we have an inefficiency within existing power structures of 12,000 gigawatts of power. These are absurdly big numbers. These are numbers because of transmission losses, heat losses, rejection, curtailment, and so on and so forth. All kinds of effects within power networks. More importantly, we have 600 gigawatts of perfectly commissioned existing power assets that cannot be monetized because they have no grid access. There's a whole bunch of reasons why that is, but these are absurd reasons. So a wind farm somewhere in the UK, offshore UK, is waiting up to 10 years before it gets a grid ticket and can be connected to the grid. The only way these asset owners know how to monetize their asset. And then this is a bit of a fun example. There's also a lot of chemical energy from landfills as a byproduct of the oil and gas industry, from emissions from the planet itself. If you would use them and combust them and to turn them into electrical power, you would return 214 gigawatts of power. While if we take the Cambridge data for the energy consumption of the Bitcoin network, it's 19.1. That means the hash rate can grow 100-fold without even touching power that would be competitive with other demand. But these numbers are so big, so let's break them down into very concrete and distinct conversations that we're having with the energy industry. What they will report us is that irrespective of whether you look at the nuclear power plant, a PV plant, a wind farm, a hydro plant, it doesn't matter. They will all say between 20 and 35% of the runtime of this asset is under-monetized. That's a huge amount of time, but if we turn it around, it's a huge revenue opportunity. How does this usually work? Let's keep it simple. Energy markets are simple. You own an asset, you get a contract to the grid, and you sell it into the wholesale market at today, spot, tomorrow, or somewhere into the future. The market will pay you for this, but you will always experience what is called the duck curve. You will have times when the asset really returns good revenue and profit, but there will also be times when the return that you will have will not be sufficient or will not even cover your cost of production. So the first thing we need to do, and the first argument why Bitcoin mining is such a good arbitrageur in this conversation, is we need to flatten this curve. We need to find ways how we can co-locate those containers or those mining rigs next to the asset, and we suddenly can start to monetize under a certain price threshold, not through the market, but through the container itself. What does this look in reality? If you have 1 megawatt of power generation that yields you 100,000 euros through the market, it will now give you 100,000, i.e. 100% more revenue, where if you monetize it, back test it into 2020 per year additionally. Those are significant revenue drivers. And the cool thing about it is, of course, there is now, you would argue, that there is still a capex involved. You need to service the machines, you need to buy the machines, you need to run the machines. Yes, that's true. But what this actually means is that because you monetize your asset much more efficiently, you get the capex almost for free. But then you could argue, well, why is this even useful? Why would even someone do it? They would do it because they have additional potential for unlocking new revenue streams. And the most important one, and this is where I circle back now to the flexibility management of the markets, is to contribute to the grid balancing of the grid itself. How does this work? A few minutes a day, the grid will say, I have too much power. Who is willing to take this power from me? And you can say, I am taking this power because my asset is available and ready to go within 30 seconds. The cool thing about it is you're monetized and reimbursed not only for off-taking the power, but for providing the reserve capacity in the first place. And 1 megawatt yields you another 150,000 euros additional revenue on top of the 100,000 euros, which brings it together in combining those two business cases to 250K more revenue each year. That is the argument for, and additionally there are other arguments, but these are the main economic arguments why the energy industry is waking up towards and is becoming more and more in favor of Bitcoin mining and understanding that this is a solution that offers a low capex solution, easy to operate, relatively easy to integrate with a few question marks left and right, but all solvable, but a substantial higher revenue potential. So this is why we advocate for these very, very flexible, scalable, responsive, and geographically agnostic buyers of power that we can place anywhere we want. These numbers are convincing. Over a 3-year project period, we can boost the profitability margin before depreciation to by 71%. In a margin-thin business like energy, these are mind-boggling numbers. Please don't go into the details, but hear me out why an energy executive is not only driven by financial and economic numbers only. For us, Bitcoin is normal. For them, it is a career risk. It is a huge question mark. What am I getting into? How big are the personal ramifications if I start to engage with this technology? And I'm not a friend of Brussels regulation, but for those counterparties, it is a reality that we need to embrace. There are 3 main, I call them the riders of the apocalypse from Brussels, which we need to negotiate in the context of Bitcoin mining. And the good news is that actually the regulation is much more flexible and much more favorable with regards to Bitcoin mining than most people understand. It's one of the ironies of Brussels politics that they have actually written a very favorable legislation in favor of Bitcoin mining. And it almost lays out a feature roadmap for Bitcoin mining in the future of the energy markets. Which brings us back to the energy trilemma. We can start to argue now and spin this message into a positive direction where we say, well, suddenly, maybe Bitcoin mining is even the technology that really starts to help us solve for the energy trilemma after all. If we look now into the energy abundance piece, we don't have baseload. But what we now have is we have an instrument that helps us to monetize our assets better, which also means more revenue, which also means a more positive outlook and bullish perspective and investment appetite into the future. But at the same time, because we can combine these two features of monetization and grid stabilization, we build more reserve capacity that helps us to stabilize grids that have an increasing amount of renewable electricity and renewable powers in the supply mix, thus making energy systems more resilient. And where will we invest into building new assets? Well, of course, onshore, we will use our own jurisdictions that we can control, where we can then suddenly build out the new capacity and the new supply that we need. And one thing is clear, we will use so much more energy in the future, and I'm grateful, shout out to LLMs and COs that have marginalized the energy requirements of Bitcoin and have shifted completely the conversation into a different direction. So how does this link now? Energy sovereignty and societal prosperity. Let's be clear, the IMF data showed very clearly over the years 22 to 24, roughly, and it's a hard estimate because it's very, very hard to quantify that. But roughly 25% of wholesale power increase is 1.5% of EU-wide GDP reduction. And it does not include the disastrous effect of shrinking the manufacturing base, deindustrialization over the long term. This is not even priced in here. For us, this is clear, for us Bitcoiners. But the reframe for energy people, energy executives and legislators that electricity is actually a prosperity currency, that's for them something very new. Because for us it's clear, and this needs to be understood, there is no such thing as a low energy rich country. So to summarize that, the flywheel of societal prosperity, the way out of this bearish misery that Europe is in, is to start what we can influence the energy sector. And Bitcoin has a major role to play in this. It helps us to bring asset utilization up. It helps us to return higher returns, which then in turn, of course, builds better investment and market signals than we would have had before. When we can monetize and we have more efficient markets, it also means that price volatility of power will come down. It is not only the nominal price that matters, it's also the price volatility that matters. The less volatility we have in prices, the more people will start to be incentivized in thinking long-term again. They will start to plan. When we start to plan, we will start to use this power, which again drives the flywheel forward. And energy utilization means also productivity going up. And once we have productivity going up, investment risk, both into the energy sector as well as in the private sector, will go down. Once we can have a healthy investment environment, we can then also reduce our energy dependency risk from other sovereign nations or other nations in the first place. So this is, and then you repeat the entire cycle once again. So next time that you have a bearish conversation, I hope you got one bit or two bits from this conversation that can help you to argue in favor of why Bitcoin mining, why Bitcoin the asset is such a pristine tool, not only as a sovereign asset, as a protocol, but also as a critical piece of a prosperous European energy future. And in this case, Bitcoin catalyzes this. Thank you very much for your attention. I wish you a great afternoon.
Outstanding presentation. This next one is what everybody looks forward to at Honeybadger every year, which is the last panel, and it's titled What's Next? We have a killer group of people coming up here. We got Willy Woo, we got Adam Back, we got Max Kai, we got Danny from What Bitcoin Did, and we have Leon Wankum coming up. So gentlemen, join the stage. Take it away. Look, wow, this chair got set up pretty quick. Hope you guys enjoy this one.
Brought a beer, is that bad? Get in here. All right, what's next? So, I've got an amazing group of panelists here. I think probably the best place to start is Paper Bitcoin Summer. It's all anyone talks about now. I'm basically a Bitcoin Treasury podcast at this point. And Adam, I think we should start with you. You've been working in this space, an absolute legend in Bitcoin, working on with the cypherpunks since way before Bitcoin even existed. Bitcoin came into the world as freedom money, and now we have Paper Bitcoin Summer. Is this what winning looks like?
Well, I think if you have good hard money, then all types of people will use it for lots of reasons. And there are many Bitcoin startups that have been around for 3 years, 5 years, 10 years, who had Bitcoin treasuries for a long time now, right? So what you're seeing is a public version of that. So MicroStrategy, now when first MicroStrategy bought Bitcoin, it was with the thesis that they had dollars and they were inflating away his melting ice cube that Seidl talks about, right? And so effectively, it started out as inflation hedge. And so, you know, for me, I thought that's a good initiative. You know, if other companies would do that, they would benefit from protecting themselves from inflation. And Bitcoin is a type of asset that companies can own as a treasury asset. So I figured, like, let's support him. And, you know, if some Bitcoiners buy a few of his shares, collectively, we can maybe help defend him if Wall Street doesn't like what he's doing and punishes the shares because he's bought Bitcoin. And so I think that kind of was early in the phase of Bitcoiners starting to trade and invest in treasury companies. And of course that, you know, it took a few years before any other treasury companies emerged. Metaplanet is the next one, and now there are many more. And so, yeah, I think it's an implication that as Bitcoin gets wider adoption, it's going to get adopted where it's logical to adopt it. And I think a logical place to adopt it is in companies. And one way to think about that is something I said recently, is that Bitcoin is the hurdle rate, which is to say, if you're an investor, it means, you know, if you can't beat the hurdle rate, typically that means the risk-free rate from US dollars or British pounds or whatever it is from a government bond, then it's a pretty shitty investment and you should stop what you're doing, right? So if Bitcoin is a hurdle rate, that means if you can't beat Bitcoin, you should close up shop and buy Bitcoin, right? So the only way for a company to make any sense, if you accept that viewpoint, is what a company better, you know, reconfigure itself around Bitcoin. So a treasury company is an example of that, but it doesn't have to be a pure play. It could be a company with a core business as well.
I think the treasury companies that are going to crop up with a real core business are going to be pretty interesting. But one thing that I've always been skeptical of, and I get accused of mid-curving this all the time, and I can believe it. But do you think these things are going to be good for Bitcoin long term? And when I talk about treasury companies, I think it's almost worth taking strategy out of it. They're huge. They're clearly, I think they're going to be around for a long time. I think Metaplanet being in this kind of siloed Japanese market, again, they're going to do well. And I think anyone doing this with reasonable size has a good chance at surviving long term. It's the long tail that I have kind of the concerns around. So maybe we can go down the line and just, are these treasury companies going to be good for Bitcoin?
Yes, that's the short answer. And to give you a long answer, I think that, and obviously agreeing with Adam said, the adoption of Bitcoin is happening through rational economic means. And Bitcoin is being adopted in the less industrialized world as a means of payment, but in the industrialized world, it's being adopted as collateral because there's no better alternative. Real estate, it has been used as money, but actually it's a monetary substitute by default, not by design. Bonds don't make any sense, gold is outdated, and stocks are overvalued. So I think it's just a rational and economically sound decision to use Bitcoin as collateral.
Everything is good for Bitcoin. I mean, and treasury companies are also kind of good. They might cause the next bubble burst, like beer cycle, but I guess it could be very simple logic. Treasury companies, they first gonna hold Bitcoin in custody with someone else, like Coinbase at this point, probably the biggest custodian. Then they're gonna learn how to self-custody. Then they're gonna do self-custody. Then there's individuals within these companies who are gonna learn about that, and then effectively it's just gonna spreading out massively. And we've been talking about this yesterday, that as soon as strategy gets into S&P 500, there will be instantly hundreds of millions of people across the globe exposed to Bitcoin in one or in another way.
It's a double-edged sword, right? When you concentrate the supply, it can get rugged. I think we were on stage earlier in the week talking about the risk of MicroStrategy and other Bitcoin treasury companies being nationalized and repeating the cycle of gold is money backed by, money backed by gold, and then you close it and it becomes fiat. And so that risk is there. But then we as Bitcoiners here got into it for the most part for the freedom and the value and the sovereignty it adds, and the ability to change the world. And the thing is, we don't get to change the world unless this monetary asset in my opinion, the perfect asset for the next thousands of years does not get to do its job unless the capital flows in and it gets big enough to rival the US dollar, the gold, and so forth. And there's a lot of actors here in the world with the money bags. They cannot allocate to Bitcoin. If you're a pension fund, or what, are you going to self-custody? Okay, so do I need to build a Coinbase custody so that is safe? It's not going to happen, but I can buy an ETF, I can buy a MicroStrategy. That's how the floodgates open, and these are on-ramps. With the on-ramps comes risk. The risk of being rugged at a nation-state level, the risk of a bubble bursting, all the debt structuring is all different with these treasury companies, and we don't have a very good idea. No one's really publicly look deeply into the debt structuring. So I absolutely think the weak ones will blow up and people are going to lose a lot of money. We now have the altcoin, shitcoin treasuries practicing the playbook. It's going to create another bubble, and this stuff will shake itself out as every cycle does, and we'll learn. But the on-ramps are important, and we like to think everyone should self-custody. That's not going to happen at an institutional level. It's too difficult, too slow. So being practical, these on-ramps need to be built.
So Willie, you're obviously a markets guy. And one of the things that I have some concern around with the treasury companies is the fact that I think they're going to just be hoovering up coins in the bull market, and then what happens in the bear market, who's swimming naked, and how many coins get spat back out into the market. Do you think, and also for a long time, like in early days of this bull market, I was looking at it and I was thinking, I can't see the thing that blows up and makes this bubble burst right now. And the longer we go, the more treasury companies get added, the more it looks likely that that's going to play some role in this. Do you think they are going to either create or exacerbate the next bear market that we have?
It will have its impact. Whether or not it's going to be the major impact, I don't actually think it is the major impact. I think that we are subject now in Bitcoin land, being this new multi-trillion-dollar asset, first time in this cycle, to really cement that. It's the new it's the new global macro asset that's being traded, first one in 150 years, and we are subject to global macro and the economy of the world, and I think that that's going to be the biggest teller. If liquidity, meaning money being printed, the money circulating, dries up, that's going to be the biggest part, and then it's going to stress test all parts of this ecosystem, and the weak treasury companies will have its little blow-ups. I think the main thing is the dire situation of the global economy and where we are in that cycle.
Leon, do you think any of these companies are going to be able to compete with someone like Strategy, or is this going to end up being, I'm going to come to you here, Adam, as well, because obviously you're launching your own, but do you think this is almost a winner-takes-all market?
It's a very interesting question. I just had a conversation with a friend about it, and I do believe that you need to hit escape velocity, so to say, to be able to issue preferreds. Otherwise, you won't be able to sustain a bear market, because once the stock trades below MNAV, and you don't have the ability to issue preferreds, for example, you'll have a problem, basically. So I do believe that within the treasury company space, there are differences, of course, between the individual companies. And Strategy and MetaPlanet are the most obvious cases of companies that actually found business models, because they do provide the ability to generate income that beats all the other opportunities in the market. And that is because the increase in purchasing power of Bitcoin, also by the new FASB accounting standards, is counted as income. So now then the question we have to ask ourselves is, are there other companies that are able, through cash flow, to outperform the income that Bitcoin treasury companies will generate simply by holding Bitcoin? And I think that's going to be very, very difficult. But you need to have a treasury and the size of a company that is big enough, in order to manage the bear market well. Because also Strategy dropped below 1 MNAV in the next bear market, in the last bear market. So I think we can expect the price to move upwards, and once that happens, we'll see what companies will be able to survive the bear market. It's hard to say, of course.
It is. Adam, I do want to go to you with this one, though, because you're launching your treasury play with around 30,000 coins. Is that right? obviously, I'm sure you have it in your sights to go after Saylor. How do you plan on trying to catch Saylor, who's at 660,000 or whatever he's at?
Well, I mean, I think ultimately the thing that matters for, I mean, the North Star metric for any treasury company is the Bitcoin per share, and that increasing over time. So in a lot of ways, you don't individually care which company is bigger, you care which one performs better in terms of Bitcoin per share. So that's one thing. And then different companies are doing different strategies. So BSTR, Bitcoin Standard Treasury, which is the company that I co-founded, is, it's in the process of doing a SPAC merger. So we're waiting for regulator approval later in the year. And that we are more active. So we will do low-risk Bitcoin yield, we'll do Bitcoin alpha strategies, we'll engage in hedging, and we have Sean Bill as the CIO, who's a very experienced hedge fund manager with a good career track record, and personal experience with trading Bitcoin, and actually was the manager for a period of the first US public pension fund to put Bitcoin on a balance sheet. So he's got some history with Bitcoin and some history with being, a steady pair of hands in managing large amounts of, pension fund money and institutional money in hedge funds. So we think we can, do something more active and do it prudently, and that can be a factor in the picture. And we have some more, more ideas. And I think the other thing that is different about BSTR is that it's primarily a Bitcoin, it's bringing Bitcoin to Wall Street. It's bringing Bitcoin to the market. It's the SPAC, SIPO, is a NASDAQ-listed company, but about 2/3 of the money that is going into it is actually Bitcoin. So Bitcoin from the founding company and 5,000 Bitcoin, 5,021 Bitcoin from a range of individual Bitcoin holders internationally and in the US, and some funds actually that also invested into this Bitcoin pipe, which was the first of its type. So a pipe, for people who don't know, is just a way for people to invest in stock that later becomes public. So private investment for public equity. And typically, and we had a dollar-based, so a normal pipe as well, where people invested dollars. We also brought the first Bitcoin-denominated pipe, so people were able to invest Bitcoin and roll it into, eventually, at the business merger at the end, into BSTR shares. And they could do that potentially as US taxpayers without incurring a deemed sale on the Bitcoin in. So that's a kind of interesting and new instrument in the market. So all to say that I think we have a different approach, and we are bringing with us into the public market Bitcoin traders, so active Bitcoin traders, people from that kind of background, so that a lot of the Bitcoin treasury companies that went through the SPAC or the RTO route in the US essentially were coming to Wall Street, raising some money to buy some Bitcoin, then borrowing some money using convertible notes, and then they're finished, right? Now they have to market it. Whereas we're coming with more substance. We're coming with a lot of Bitcoin. We're bringing more Bitcoiners with us. We're being more active. So I think it's a quite different play to MicroStrategy. And then, of course, there are differences between countries. So Metaplanet has been raised, and I've been a person individually who's invested in Metaplanet over the years. I think it's an interesting play, but it's it's a bit specific to Japan, to some tax situations there. It's a different market with a very active retail trading environment. There's a lot of leverage in the Japanese market. There are limit down and limit up as part of the Tokyo Stock Exchange mechanics, and all of these things combine to make the effect.
Adam, can I ask you a question that I don't want this to come across as rude. I really don't mean that. But there's probably no one that understands Bitcoin as freedom money more than you. Like, you've been working on this kind of thing for your entire career. Like, why do you care about treasury companies? Is that what Bitcoin was for?
I think Bitcoin is going to be adopted by all parts of the economy, from the individual, where you have unseizable bearer money, which is the early cypherpunk ideas about sort of self-sovereignty and so on, but also by companies. And you've got to bear in mind that many of the cypherpunks, the cypherpunks had views all over the map, right? They just happened to agree on like privacy, hard money, bearer, eCash, that kind of thing. But otherwise, they had lots of different ideas. But a lot of them were interested, and myself included, in anarcho-capitalism, like extreme free market, but organized as companies and corporations as they, it's a very big part of the global economy and why the world is as wealthy as it is today, which is the introduction of the concept of a company, organizing a company by shares to attract investment, to build products and services, to have efficient ways to raise capital, is a big part of why the world is prosperous today. And so, Bitcoin is ultimately, going to form part of that. And what we've seen with Michael Saylor is he's kind of shown the way for companies to start incorporating Bitcoin. And I would say that in my view, Bitcoin is effectively the hurdle rate. So as Willie said that, Bitcoin is very important for the future, that inevitably companies have to adopt Bitcoin, otherwise they're going to get left behind and nobody's going to invest in them because they're going to buy Bitcoin instead. Because if you can't outperform Bitcoin, why should anybody invest in you other than kind of short-term, in volatility reduction reasons?
So Max, one of the kind of touted risks out there about these treasury companies is that they become a centralization issue for Bitcoin. Saylor presumably at some point is going to get to 1 million coins. He's over halfway there already. Do you see that as a big issue?
Of course I see that as a big issue. I think like a lot of sovereign individuals see that as a big issue, but it's also inevitable in a way. And the good thing about Bitcoin is that even your enemies can use that. And even the things that you don't like is going to happen. So it's just going to happen, and we just need to play along with it. And that's just a part of evolution. There will be institutions, there will be states that will be holding Bitcoin reserves, and not necessarily we all will be fans of these states. It's just going to happen. I do think that putting a lot of Bitcoin in one single hand under one single custody is a huge risk. But then again, maybe it's not a question to MicroStrategy holding a lot of Bitcoin. It's more of a question how they're doing that custody. I think that we should be concerned more about large custodians such as Coinbase because effectively they're becoming a honeypots and they just concentrate a lot of Bitcoin inside.
Yeah, I totally agree. And Leon, do you think there's also, that's the centralization risk for Bitcoin, but on kind of a different scale, do you think there's a nationalization risk where one day the US government turn up at Coinbase doors and says, my Bitcoin now?
Potentially, I'll answer your question. I just want to make a comment on your previous question.
Please do.
Yeah, because I think what's interesting is that Bitcoin changed the time value of money, meaning that if you hold Bitcoin over time, you have more optionality. So being a Bitcoin treasury company, in its essence, means hodling Bitcoin, which gives you optionality over time. And I think what is interesting about strategy, there are different use cases for different jurisdictions, but strategy does produce cash flow. So they do have an operating business, and Metaplanet in a sense as well, because they have a put.
Sorry, I just want to interrupt very briefly. They do have an operating business, but does the operating business even matter anymore?
Not necessarily, but in the last bear market I did, because it increased the creditworthiness of the company, and it allows the company, like an insurer, to refinance in the worst case scenario. And coming from real estate and working with 70 to 90% leverage all the time, when I do look at Metaplanet, for example, their leverage is usually between 0.1 to 2% of the collateral value, of the Bitcoin value, and that's very little. So for me, it's actually interesting. I look at it and I think, wow, there's little risk in it when we talk about the leverage. I'm not talking about there's a custodian risk in it, it's huge, and there's also the risk of nationalization of the coins, for sure. That's probably the biggest risk. But then the question becomes, when will that happen? And within that time frame, what will be the move of that company? If you're an investor, you have to decide what's the opportunity cost, not doing it and giving up on the increase in the stock, if I want to invest into the stock, or thinking it's like a very serious issue. I do believe it's the issue that we have to take very serious, but I do not believe that it will become an issue within, I'd say, this legislational period, of course.
Okay, Leon, I do want to come back to the real estate thing because that's interesting. But Adam, just quickly, have you said how you're going to custody your coins yet? Will it still have to be at one of these like Anchorage, Coinbase type people, or will you be able to self-custody the Bitcoin?
We've not said how we're going to custody the coins. There might be like audit. As a public company, you have to have audits, and the auditors will have opinions about correct custody of coins. And I believe in a lot of cases in traditional finance, there's an argument for independence of custody. So particularly in like E-Trade or any kind of share trading platform, they have an independent custodian even to hold the shares, and that's to protect the interests of the traders on that platform. So, we'll have to navigate that. But ultimately, I do agree that there should be more distribution of custody. So I think in the case of MicroStrategy, I believe that's actually a mixture between Fidelity and Coinbase. It is not. I'm not sure if that's officially documented, but Arkham Intelligence, I think, published something to say that was what they could find. So now, I think the reason that Coinbase has a lot of coins is actually a bit of a historical accident. Is probably likely to change, which is in prior years before the spot ETFs were introduced in the US, the people applying for them were submitting their ETF applications and getting back rejection letters, and they're all public, so they were looking at each other's rejection letters, and as soon as somebody got, didn't get a rejection on the custody point, they all copied what the first one that didn't get a rejection, and that happened to be Coinbase. I think that if there was another custodian, there'll be another custodian, and the regulations in the US have improved to allow the big custodian banks to custody Bitcoin. So I think they're now clear to do that, but they're not set up for it. They don't have the technology. So either they build up the technology or they acquire a technology provider with custody experience, and then quite probably the ETFs will switch to something like that or diversify across custodians, which would be a healthier situation. Something else to say about custody is you can see that what Capital B did in France is quite interesting, which they do have an operating business, a software company, which initially was quite a significant part of the enterprise value. And they actually made a Luxembourg subsidiary. It's a French company that made a Luxembourg subsidiary to be the legal entity holding the coins with a custodian, with a point that there's some special types of structures in Luxembourg which are bankruptcy remote. So the point is, if the software company gets sued to an enormous degree for some kind of software accident, the French courts wouldn't be able to touch the coins because they're in a bankruptcy remote, quite robust, well-tested type of vehicle. So that's an interesting approach to kind of isolate the operating business risk from the Bitcoin on a shareholder's behalf.
It's funny, like I completely understand why you're saying maybe we'll move away from Coinbase to banks custodying Bitcoin. And I know that your hands are tied from a regulatory standpoint when you're doing things like this in the US, but it seems like the Bitcoin tools built by Bitcoiners already exist that these companies could be using. Like I'm thinking of things like Anchorwatch that allow you to have collaborative custody plus insurance on coins. And I've been surprised that no one's moved to that model yet. Is that just like a regulatory thing?
Well, it's not the approach that custodians take, but there's actually, to my mind, no logical reason why the custodians shouldn't share custody with the person they're, with the company or the individual they're custodying on behalf of, so that, that would provide you with an interesting protection that, it reduces your need to trust the custodian, in fact, because you're kind of, protecting yourself against a mistake or bad practice by the custodian as well. So I do think there's a future for sort of multi-sig collaborative custody, even in ETFs, where, as an ETF holder, shouldn't you be able to, make a request to withdraw your coins from the custodian and maybe even have a key enabling you to do that in a permissionless way, after a period of time to kind of unilaterally withdraw your coins from the ETF. That's what the technology enables. So maybe we'll get there in terms of deployed practice and people figuring out how to do that in a regulatory way.
All right, that's that's 25 minutes nearly on Bitcoin treasury companies. I think we need to implement a swear jar now, where if we say Bitcoin treasury company, you got to put some money in. Willie, can we talk a little bit about the market? This is obviously where you kind of specialize. With things like the treasury companies, swear jar, and ETFs and the institutional adoption of Bitcoin, how have you seen that change?
I think it's pretty obvious in the price chart where we don't have these sort of really large moves. It seems very, very staged. If you look at the liquidity flows that are coming in to the network, it's very steady. If you measure the amount of billions per day that's coming into the network, I've never seen it so smooth. Usually it's jaggy, you know, there's someone that buys and it's outsized and so it's bumpy and it's really smooth, like someone took some sandpaper and smoothed off the chart. And so I think that's the footprint of institutions. I think also, you know, obviously, OG Bitcoiners that understand Bitcoin are the first to invest in the institutions, rotating their Bitcoin, selling it on the market. Sometimes bringing it straight into these treasury companies. So you know, there's capital rotation out and then back in, and then it's being staged back in a orderly sort of dollar cost averagey way. Not seeing much in the way of retail moving the price. Also, we're 10x bigger. So what was, you know, $100,000 is now $1 million to be the equivalent, to have the impact on price. So realistically, I think we're now in the age of the institutions where the really big floodgates lie, and that's what's going to move the price. It's how much of this 900 trillion of wealth assets comes into this $2 trillion bucket. And that's the, you know, the game is regulatory compliance, not without, you know, good thought and practice, because there are a lot of risks, and you need to diversify out of that risk. These are the, you know, school of hard knocks. We've seen bad regulation, but the core of the regulation is don't let that dude in this institution screw it up and lose all of the money that you're acting as a fiduciary for. And so it's going to take some time. This capital is going to come in slowly. It's very deliberate. It's very intentional. And these people need to be very, very comfortable before the deployment happens.
Yeah, I mean, I think one of the things about the treasury companies, is that interesting comment. Well, so what the price regime that Willie's talking about is partly that, you know, when you get new investors into Bitcoin, how much of a money multiplier that applies depends on how sticky they are as an investor, or if they're a good investor. So, you know, if somebody comes in who's not accustomed with investing, you know, or they're investing using credit or something inadvisable, then they're likely to panic sell on a price wobble. And so then that would have a small money multiplier effect, or maybe be net negative if they're more easy to shake than the average prior investor. But on the other hand, if you have a steady hands investor that invests and holds for years, that has a bigger effect on the money multiplier. And effectively what you've seen with the ETFs is they're stickier. So Eric Backelnaus, who's an ETF commentator, was saying that the ETF buyers are surprisingly sticky. They're not day trading. They're investing for, you know, a multi-year period on average. I think about a third of it is claimed to be institutional. Of course, you don't have perfect visibility into that. And then the other factor is the treasury companies, and I think they are potentially even stickier because they are buying Bitcoin and there's some elasticity in the price of the treasury company. So if you get into a bear market or some treasury companies make some missteps, their share price gets punished, but it's insulating Bitcoin. So Pierre Rochard was describing it that the treasury companies are effectively a shock absorber for the Bitcoin price. You know, their share price gets compressed, but it doesn't translate into a market trade affecting the Bitcoin price directly, right? So that's a new phenomena and interesting. And of course, the treasury companies are, you know, bringing different types of money into Bitcoin that wasn't previously buying Bitcoin for various reasons. So it is providing new money into the system. And so we'll have to see what the net effect is. But I think it could, you know, see reduced volatility and maybe affect the market cycle in terms of, whether diminishing returns actually turns out to be the case, or if we break free of that concept in this cycle or the next.
I think you owe me £6 after that, Adam. Do you think this dampens volatility, both the downside and the upside, though, as we have like these big institutions coming in and hedging their bets on the treasury companies with spot Bitcoin?
Well, I think it might. It's hard to say. I mean, I think it might dampen downside volatility, but if diminishing returns is broken, the diminishing return theory is that Bitcoin will go up by a smaller amount in each halving period, and that's just based on prior observation. There aren't that many samples, and different pricing model theories, which are just theories, right? They can get invalidated. So some things have clearly changed about the inputs in this cycle with different types of investors, and an alternative theory is that technology adoption S-curves sometimes get steeper, and unlike with technology curves like internet adoption, early smartphone adoption, you can buy more Bitcoin. And so generally, people who start buying Bitcoin start conservatively, and then they get more conviction from seeing other people buying Bitcoin. So they end up buying more at higher prices. And so I think that's an additional network effect compared to what you get with other adoption curves. And other adoption curves themselves already undergo kind of mass adoption cycles as the network effect gets bigger, like internet use, mobile phones. So I don't know, maybe the diminishing return theory will get invalidated sometime.
I can see the YouTube thumbnail of Adam Back Supercycle already. Max, what do you think about the typical 4-year cycle? Do you think we may be out of that?
Well, we're yet to see about that, but we'll see. But I think, yes, it's changing, definitely. And even this bull cycle, you see that it's like many people say it's institutional bull market, basically. You don't have many friends or former colleagues calling you, asking you about Bitcoin as it was previously. Yet the price is growing. And if you look at the mempool, it's like there's it's almost empty. So I guess so, but 4 years is still something that a lot of people bet on. We'll see about that, but I guess it's only logical also that everything gets, life gets faster and technology gets faster, and the adoption curve of Bitcoin, if you will compare it with the adoption curve of internet, for example, is way more faster. And I guess we might end up with this cycles will be a bit shorter, or it's going to stay 4 years. I don't know.
Leon, I do want to ask you about the real estate. I'm not forgotten. But just quickly, Willie, we were speaking on the podcast yesterday, and I basically asked the same question that Max just brought up there, which is, we're in this bull market, but mempools are basically empty. And I don't remember that really happening before, certainly in the time I've been in Bitcoin. And you had a pretty good answer for that. Do you want to explain why you think the mempools are empty and how liquidity is increasing even though transactions aren't?
Yeah, so what's powering Bitcoin's price is liquidity, essentially the capital coming into the network on a longer time frame, not daily or hourly. Look, if Michael Saylor is going to buy $5 billion, let's say, of Bitcoin, there's one transaction on the mempool. That's it. We've gone past the retail phase that, a whole bunch of people, 1,000 people rushed in, 10,000 people rushed in. That's all individual transactions. Now it's much more in terms of an aggregator on the equities, and then bringing in to just one transaction, and that could be $5 billion. And that's a simple explanation, I would say. Price moves on liquidity, not transactions on the mempool.
I mean, I think there's some additional factors. I agree with that, obviously, but I think the infrastructure used by the exchanges is changing. So at least the institutional buyers will take custody. So if the coins are ultimately bought on exchange, they'll take them off chain and store them in a custodian, and so that will be an on-chain transaction. Unfortunately, a lot of retail traders use the exchange as a custodian, so you never see their transactions. And for the kind of hedge funds and larger traders who would do cross-exchange things and move coins between exchanges, the infrastructure has changed a bit, and so there are more kind of equivalent of a prime brokerage, so that people are starting to use trilateral agreement, they're starting to use a custodian to hold their coins, and then, you know, using an IOU on the exchanges, so they're able to move funds logically between exchanges without doing an on-chain transaction. So that could be a factor too. And then for Bitcoin itself, technologically, there is more layer 2 action, like Lightning, Liquid, and the Liquid Lightning wallets that are rebalancing Lightning channel, on-chain Lightning channels with Liquid, so that they can recycle and use liquidity in Lightning channels more effectively. So those types of things are reducing on-chain activity for trading and retail, and payment use cases for Bitcoin.
And we've even got Arc here now, I believe. I think all the vendors here are using Arc. Is that right?
Yeah, we basically the first conference that tested Arc. So I mean, we're really happy about that, and that's great technology, very promising.
Well, the beer I'm drinking proves it works. So Leon, just to get back to the real estate thing, as Bitcoiners, we always talk about the things that Bitcoin is going to demonetize: gold, real estate, treasuries, art, collectibles, all these things. And Bitcoin's over $2 trillion. It seems big, but in the grand scheme of things, it's still quite tiny. How quickly do you think it can start to demonetize these assets in a real way?
I don't know about the speed, but I do believe that the emergence of Bitcoin treasury companies does play into the demonetization of real estate, because I've been involved in around 100,000 square meters of construction over the past decade, and most of the assets that I've personally sold, they were either sold to pension funds that seek the higher yield and negative interest rates in the bank accounts, or high net worth individuals that were looking for cash flow. And for these individuals, owning a fixed income product or Bitcoin-backed security has less headache and more liquidity. So especially Strike and STRC do offer real estate-like features, because Strike, which is a preferred by strategy, has both an upside, because you can convert 10 strikes into one common MSTR share if MSTR hits $1,000. And you have a yield that you receive, which is higher than the average yield you receive in real estate, excluding leverage, but also excluding the headache. And then in STRC, you have a yield that is around 9% on every dollar invested, and you have more liquidity. So this was something I personally didn't see coming, and I find it interesting because the speculative attack is in full effect. Bitcoin is repricing risk, yield, and opportunity cost, and it's happening around Bitcoin as collateral. So I didn't see that coming. So the speculative attack that is unfolding right now, it's not necessarily unfolding by people leveraging the existing assets that they own in the fiat system, but it's companies that leverage Bitcoin as collateral. And it's quite interesting, I think.
So if you truly understand Bitcoin and you understand these products that Strategy are offering, is there any reason to ever invest in real estate at this point?
To be very honest with you, no. I mean, this comes from a real estate developer, and this might sound strange, right? But I think real estate investing since 2019, as we've known it, doesn't make sense anymore. Real estate development and the building culture, that's a different thing, right? And that's going to be positively affected by Bitcoin. But real estate investing, as we've known it, doesn't make sense anymore.
I want to get back into the treasury companies. I'm sorry, this swear jar is going to be full. But Adam, what is the size of the demand for these new preferreds by Strategy? Because to be fair, when I say I've been kind of skeptical, neutral, a bit bored by a lot of the treasury companies, the idea of just like selling common stock equity to buy Bitcoin is fine. And I don't think it's that much more interesting than that. But the preferreds now seem really interesting, and they're tapping into a totally different market.
Yeah, I mean, I think the whole phenomena is all about an arbitrage of the mispricing of Bitcoin versus the addressable market of demonetizing all of the types of assets with monetary premium. And that is, Willie said 900 trillion, Hal Finney said 200 trillion 3 days after the network started. We don't know where it is. There's been inflation since Hal Finney said that. But ultimately, everybody buying Bitcoin is arbitraging that phenomena, and the treasury companies are arbitraging that phenomena, and the preferreds are yet another arbitrage. The interesting thing about the preferreds is they are transforming the risk profile of Bitcoin to provide something simpler to digest for different types of fixed income or individual buyers. And the other interesting thing about the Stretch, and I think some of the other MicroStrategy preferreds, is they have ATMs on top of them. So when they place more capital, they don't have to work with an investment banker to find people to buy it. They just sell more into the market until they see that they're pushing the price, and then they slow down. And so that gives them a sort of more repeatable form. And I think, it took MicroStrategy a few years to work from the bonds to the convertible notes to the preferreds. And the first three preferreds, the different types, the Strike, the Strife, the Stride, they sold in moderate numbers, but Stretch, or STRC, sold 2.5 billion on its first try, right? So I think that one is now the one that presumably they're going to focus on. So that's very interesting to see, because that type of return and risk profile is very attractive versus treasury bonds, real estate, REIT investments, all kinds of investments really. And yet it's ultimately driven by the same Bitcoin arbitrage. So you could see this arbitrage flowing through and refactoring the entire financial framework of companies and pension funds, even government bonds. And if you have the better capital, it's just inevitable, right? Because anybody who doesn't make use of that is losing purchasing power. They're suffering from capital reallocation. And so, it all comes back to people are buying at the price they deserve, but now they are sort of indirectly benefiting or indirectly helping the arbitrage by buying transformed versions of, this arbitrage benefit. It's all, of course, predicated on Bitcoin's price going up as it undergoes adoption. But, for anybody who thinks that the addressable market for Bitcoin is that large, this is a very scalable arbitrage, because it's so huge. It could absorb, the cash treasuries of Apple and Microsoft and Berkshire Hathaway, and not make a dent, basically. So I think it's going to take a few decades to work through this arbitrage.
All right. So this panel's called "What's Next," and at the same time that Bitcoin is winning on so many fronts, price is ripping. We're infiltrating the capital markets with Bitcoin treasury companies. There's seemingly good regulation being pushed by at least some countries. We have software developers who are now facing prison. So we have Roman Storm, who has just been found guilty of one of the charges, and Keone and Bill, the Samurai devs, did a plea deal. So they're going to face up to 5 years, likely going to be the higher end of that from what I've heard. Max, this isn't winning. How much of a threat do you think this is for Bitcoin?
Well, government was always a threat for Bitcoin, so it's only logical. But I agree with you. This isn't winning in a way that price good, institutional adoption is very good, and everything else is very good. But the privacy issue is still very important. And I guess one of the core pillars of Bitcoin was always about privacy. And I think that a lot of people actually changed their mind, ignoring the privacy and being happy about price, which is fine. Again, it's a free market and hopefully free countries that we're in, and you can change your opinion. But on the privacy front, I guess we're getting at the point where we might have a separation of certain parts of Bitcoin community, where one part will be willing to fight for privacy, and another part will be, probably majority of the people will be just fine with what it is as it is. But I guess some of the regulation and some of the frameworks and laws are pretty concerning, even with the new administration and even with the new, more Bitcoin-friendly laws.
Yeah, it's actually surprising that the U.S. courts continued the trajectory you described with those two cases, because they had made some announcements that they were going to, consider open source developers of non-custodial products to be not liable for the uses, right? And yet they proceeded with those cases, so it's inconsistent. It seems.
It's very inconsistent. And I'm sorry to interrupt, but I just wanted to add to that. Is this not a fight that you and the people you work with and have worked with for a long time have already fought in the early 90s?
Yeah, I mean, it is kind of annoying to see governments repeatedly float lead balloons, like just crazy dystopian what-ifs, just to see how the public reacts, and then actually acting on some of them. So of course you live in the UK, I presume, and there's some pretty silly things going on there with jailing people for social media. Oh, good on you. Myself many years ago So, but nevertheless, like these things are continuing, and unfortunately, some of the things that are being done in Europe, the over-regulation, stifling innovation, in effect, and I think also the attraction to CDBCs, you see, from regulators in, developed countries is kind of shocking as well, because in the way they describe them, you can clearly see the envy for the Chinese credit, social credit score, where you can demonetize people, you can kind of block their access to finance, and this is all extremely dystopian. So I just don't think most of these things are remotely compatible with a free society. So I just I don't know, like people just have to say no to this nonsense, really. I mean, if regulators propose something insane and the compliance level is 0%, it doesn't mean anything, right? They can't put everybody in jail, and some of the things they're saying are just insane, if you ask me.
I want to ask you a hard question, Adam. So I was speaking to Callie, shout out Callie, he's amazing. And we were in a taxi the other day, and I said to him, we were talking about eCash, and I asked him the question of, if eCash had have worked, had have proliferated, would that have been worth not having Bitcoin? So if we had had 3+ decades of financial privacy, no threat of CBDCs, none of the baggage that comes with fiat, apart from the debasement, do you think that could have been worth it?
Well, I mean, I think the original electronic cash protocols, like the DigiCash one in the mid-90s, was in effect a stablecoin, but with strong privacy, bearer, but very cashew-like properties, which you had to trust the central issuer to some extent. And of course, because it's a stablecoin, that central issuer had to have banking relationships to transfer money in and out. So, it's a little tricky to see how you can have a stablecoin that doesn't have that ties where the backing currency could be seized and all this kind of problem. But I do think that it's a big part of the interest for Bitcoin, and a lot of the fundamental value is the unseizability and the bearer properties, right? So it's just Bitcoin went further and faster, I think. Well, the DigiCash thing failed for other reasons, but I think Bitcoin went further and faster because it has both. It has the permissionlessness, the bearer aspect. You can just set up a wallet, install software, and you're good to go. And also is a hard money, right? So that was not a given. Like some of those previous eCash systems were not hard monies. So I think the combination is better, let's say.
All right, we're under 5 minutes left, and I've got a few things I want to talk about, but one of them is quantum. Oh boy. I don't know who to start with here. Maybe we go down the line. What kind of threat do you think quantum realistically poses, and do you think Bitcoin will be able to overcome that threat relatively easily?
I don't think I'm the one to answer that question, to be honest with you, but to give you my personal perspective on it, and there's an interesting quote, I can't quote it exactly, but it's something along the lines of, as long as there's reality as we know it, this is not a threat. So the opportunity cost of thinking about it and worrying about it, for me, it's not worth it. I'd rather focus on Bitcoin. There's other very intelligent people that are better at expanding it than me, but that's how I view it.
Not the person to ask about
this
quantum
is
computing.
This is an Adam back Fireside at this point.
Yeah, definitely. But yeah, I think it's, as far as I understand, it's not in the nearest future. And also, there's a threat, but there's also a defense mechanism.
Yeah, I mean, I think it's not a threat in any eventuality. I think it's not a threat within a couple of decades because they have a lot of R&D to do to make those type of systems practical. I think the pace of progress and the level of benchmarks they can achieve have been exaggerated by a factor of 1 million or more. The benchmark is they can factorize the number 21 like a primary school. 3 times 7 is 21. That's the state of the art, and they had to cheat and cut corners to do it because there's no error correction. So to repeat the same calculation 64,000 times, take the average result, and that's the state of the art approximately. So they have got factors of 1 million in something like half a dozen different vectors of fundamental physics research, scalability, error correction, decoherence time, clock speeds, and manufacturing. There's just so far from reality. It's shocking that we're even having to see the Bitcoin price drop because somebody made an announcement about some quantum physics improvement, incremental improvement. So, and then the other point is, it doesn't mean that we should ignore it. I think it means that we can, add a new signature scheme to Bitcoin that is quantum, post-quantum secure. And it's only a few months ago that NIST added a post-quantum secure signature, right? So before that, there wasn't really a standard you could use. So I think the simple thing for Bitcoin to do is to add that as an optional spend path to a Taproot signature so that you're not paying the cost of these big signatures, but you're ready to do it if it becomes relevant in the future. And then we can stop hearing about quantum stuff for a while.
I can't wait for that. I'm excited for that day. We're getting pretty close to the end. Willie, I want us to close out with something positive, something bullish. How does Bitcoin move from being seen by the vast majority of the population, at least who understand Bitcoin as a store of value, to being not only a store of value, but a medium of exchange and a unit of account? And what's the future of Bitcoin?
In short, just time, realistically. I mean, fundamentally, Bitcoin is actually the best design for money we've had. Gold and silver was an approximation. Bitcoin is it because money's a ledger and it needs to be secure. That's what the scarcity of gold was about. We're securing it on energy, which will pan forward for thousands of years and to infinity because technology is based on energy consumption. So it is the right form. It just is currently, since 1971, we're using a social consensus. We trust the Fed, so to speak, to manage that ledger. We used to trust atoms, which was gold, and now we're going to secure this with a consensus mechanism backed by or secured by energy. And so that is the right form. How long does the world figure this out through the school of hard knocks? I don't know, but I think fiat is coming to a close soon. It's looking pretty unstable. You cannot overspend forever. So it's just a matter of time, and we're at 4.7 worldwide adoption, 4.7%. It's tracking very quickly, so, sit tight, enjoy the ride. All good, so that's it.
Let's go. And so we're running out of time. I know Max has some closing words to say after this, but thank you for having us in Riga. This has been amazing, a great conference, and let's have a big round of applause for the panelists.
Я говорю.
Thank you, man. Great to meet you as well.
Great to meet you.
Hey, thank you, Adam. That was really good. Well done, man.
Thank you.
All right, guys, don't go anywhere. If you've had fun like I've had fun, the last thing you want to do is head out without paying the tribute and the thank you to all the people that put this together. And let me tell you, if you've ever done an event like this, it is not an easy task. It's a super hard task. All the logistics, all the graphics. Like sometimes when you just kind of walk in here and you look at stuff, it's easy to take things for granted. But like down to every one of these cameras, like how do they get here? Max is going to come up here and just say thanks to some of the people that all put this together. So here's Max with the final thoughts.
Hey guys, yeah. So I always forget to thank everyone. So Anna prepared the list for me. First of all, I want to thank Anna. She's actually did that. So, I mean, yeah. So I want to thank Hodl team for setting this up, especially our design team. You've been amazing. Our speakers, especially 3 OGs who has been here since first Baltic Honeybadger every year. And these are Adam Beck, Giacomo Zucco, and Peter Todd. So 3 OGs. Our amazing MCs, Preston, Daniel, and others. Our sponsors, HRF team, Plan B team. I want to thank Kukks and ArcLabs for choosing us and honoring us with us being a sandbox for first Arc implementation. I think that's an important milestone. Volunteers, you've been amazing. Staff members, security, catering, live stream guys, operators. And I want to thank also Tony. He's been in charge of the main stage and he's been your man. And also, sorry Tony, but my favorite stage is still Cyberpunk stage. So I want to thank Danny from Argentina, right? Person's coming from Argentina. And my good friend Luna for hosting the Cyberpunk stage. I hope you enjoy it. It's really amazing. Guys, thank you very much. You're all honey badgers and we're all Satoshi. We'll see you. Cheers.